Oh my god. I don't know why this thing literally was streaming this whole time. Me no understand. Good morning. What's up, guys? Did you guys see Oxy's gap up today? What a call out yesterday, right? Alright, we're gonna get right into it. We're gonna cover the news. Look at Oxy go, guys. Look at it go. It's gonna go to our target. There's my target. Really, we're gonna call it 59, but she's headed for 60. If we get more volume than we had yesterday, guys, watch out. This is a beautiful reversal. Beautiful stock we called out yesterday. So if you're just joining us, thank you. Hit that like button if you could. If you have any questions, throw them in the chat. We have retail sales getting ready to come out. We're going to cover some of the news, and I'm going to scan around and see where exactly I want to put myself today. Last night, I watched some of the live stream yesterday, and I had melatonin brain, right? I didn't get much sleep yesterday, so everything that I was saying really wasn't coming out the way I thought it was, and I wasn't really make myself too clear because I thought I gave a pretty clear instruction on Tesla yesterday. Now, this Oxy trade, pretty clear, right? That was our game plan. We break above this level, we look for it to hold. But this was the long, right? That pre-market high. All right, coming into the day on Oxy, pre-market high. We wanted to be long because we smelt the divergence. All right, we were on this name early yesterday. All right, now I can go through why I was really keen on getting in on this name, a little bit later, but this is why having, just really understanding technical analysis could have helped, land you this beautiful trade here. This is just phenomenal trade. It really is. I mean, look at this. Look at that. So, yeah, what was I getting at? So, yesterday Tesla, I thought that I made it pretty clear that we were going to look for pre-market lows. Yesterday's lows, the 50-day, all in that area, right? Yesterday I said right off the bell, let's see if we shoot to yesterday's close. 237, right? 236.90s. I said it. I know I said that part. And I said the other side of that trade would be as soon as we get there, take that short. Now, I may have done it as we were trading during the day, but, I went back and I also noticed some of the things that I was doing. Right? I was going through a couple different things, but I wasn't making myself clear. So we're going to get these levels, and I'm going to just stick to a few names that I think that's going to give me the best opportunity, and I'm going to sit and watch them, and we're going to make one hell of a day today. Whether we make money or lose money, because things can change on a dime, but I'm going to make some damn money today, and we're going to... I just noticed some of the things I was doing. I think what it is with this stream, I have so much going on with trying to manage the stream and everything else, and it kind of, I feel like it can kind of get in the way. So we have retail sales coming out here in just a couple minutes. Let's go through some of the news. Moderna is on the list. Adobe on the list, right? Stocks from yesterday are on the list. We're going to cover them. You have airlines, Moderna, right? You have some names here that could be making some moves. So, Oxy, we were ahead of this. I'm really thankful we were on that name, right? Getting right back into the saddle, man. Beautiful trade on Oxy yesterday. I actually have another one that I don't think people are talking about, and I actually haven't looked at it yet this morning, right? But Baba. This is going to be, a bit less or a bit more riskier, but I'm kind of seeing the same thing we seen yesterday with Oxy, right? Kind of seeing the same thing. They tell you don't buy stocks in a downtrend. Well, it's consolidated here for 3 days, right? It's consolidated here for 3 days. If it takes out the lows, this will obviously change my thesis on this name, but I am looking at Alibaba. right? We're going to get ahead of these moves, guys. You know, day late and a dollar short on Oxy if you're just finding out about it. So Baba is definitely going to be on watch, right? We want to be able to get in some of these names and then already be in them, and then the news comes out the next day, just like we did yesterday with Oxy. Let me turn on the live chat. All right, let's go through some levels. The S&Ps, Qs. You should see that pivot high yesterday. I didn't have the best day at all yesterday. I kind of changed my game plan, and I really wasn't clear at all. After I went back and watched, I really wasn't as clear as I thought I was. But again, I blame that on the melatonin fogging up my brain. So there is your pivot low that it looks like it tested. Somebody, this looks probably like a block order that was filled down here. Whether we pull back there today, I don't know. You know, I wouldn't be surprised if we take off. I wouldn't be surprised if we, just start leaving this level. So I want to say one thing about these Fed meetings from yesterday, guys. You guys got to understand, everybody is high and mighty on these on the FOMC, the summary of economic projections. I would, and I said this yesterday. I said these summary of economic projections are for what's kind of like, it is kind of trying to predict the future, and you can't predict the future. You don't know what's going to happen, right? You don't know what's going to happen because you're going to have a new presidency next year. You don't know. Things could happen to where things could change, right? What I'm getting at is, go look at even 2021, right? We had COVID and everything, and go look at the summary economic projections then compared to what they were from 2021 and 2022. Pick any month or pick any of the FOMC or summary of economic projections. Jobless claims. That's right. 213. So this, I think, listen, guys, I think you're going to start seeing jobless claims start to tick up. I really do. Give it like 2 weeks. Give it 2 to 3 weeks, and I think we're going to start seeing an uptick on this. You've just recently had a bunch of companies come out and pretty much come out and say that they're giving out, they're doing layoffs. Retail sales year over year, 4.1%. That's pretty good. Doesn't look like, doesn't look like there's a cooling on the, I just forgot the word, consumer. Import and export prices. Continuing claims 100, so that's 1876 versus 1856. So that went up. Retail sales 0.3, previously 0.2, forecasted negative. So it's not that good. I mean, I guess it's not bad because then that would be showing you signs that an economy is slowing and that the Fed was too late. That's how I would read that. All right. Obviously, the interest rate decision's unchanged. We know that. All right. So 113 for that jobless. I'm telling you, if you haven't already looked, I'm sure you guys are. With that initial jobless claims, hold on. What? 200. I thought it said 213. Oh no. Initial jobless. Where did I see 113 or 213? Oh, the jobless claims 4-week average. Yo, this is not good, guys. Look at that. This could be a seasonality with Christmas. How does the market take it? It's kind of pulling back. I just don't think you're going to get inflation even if people are working and we have low unemployment. I don't see how inflation just ramps itself back up. You don't have an energy crisis, right now or anything to cause prices to go crazy. So, but watch this number. I'm telling you guys are seeing it day after day. And if you start seeing these initial jobless claims start to pick up, which we should, you've got Spotify. What was the other companies yesterday? And there was some last week. So you're getting, you're getting that. This is the second round. Remember, it was tech, and then there was a small one. You had some CEOs retiring, and now you're in that phase where they're still talking about layoffs. So let's get into some of these equity stocks. If you guys have any questions about anything, you can throw it in the comment section. I'd be happy to help you. If you're struggling trading, reach out. I'm telling you guys, it is not hard. It is not too hard, and let's figure out where the issue lies. Yesterday, again, I watched my stream back yesterday. I had melatonin mind, or I was clouded by the melatonin. I wasn't speaking and getting out what I thought I was getting out. Like I say, with that Tesla trade and stuff. So here's the index is pulling back. I would also look for this area of support here. I don't know if it's going to give it to you. You might be in a raging bull market. Well, we have been. I can't argue that, but I'm going to be patient with the indexes. I'm not sure if there's a play there yet, unless we get some more news, right? So watch that pivot high. Same thing for the Qs and the Dow. Finances were strong. Financials had a really great day. Everything had a good day yesterday. Um, so yeah, let's see. This looks like a nice area for the SPY to pull back to, but I doubt it. See, it hasn't pulled back for the past 3 months, so why would it pull back now? All right, I'm not counting on it. All right. So just watch these pivot highs, pivot lows. Keep an eye on leaders and laggards. The IWM is going nuts, so that may be where we want to look to start taking some trades, long and short. All right. Let's see here, 196. All right, let's go some of this news real quick, and then we'll get into Tesla. Amazon setting up pretty nicely. Google, some of these other names. All right, so first, Adobe. Adobe had earnings yesterday. I think they lowered guidance. Let's go back and look real quick. All right. Fell 3.6%. Continuing stocks decline from Wednesday after the company released disappointing guidance. That's what I thought. All right. So I have my levels already up because this was something that was already on watch. The level I'm going to be watching for is 595 to see if that holds. All right. ADB. E. 595. All right. You do have that pre-market low down here at 585. What is that? 585. I'm just writing down my stuff, guys. Give me 1 second. All right. All right. All right. So that's Adobe, Moderna. I think Bingo brought that up yesterday also. So that would have been pretty nice to get ahead of, to get to that move. But I didn't really look at it like I didn't spend time to look at the daily chart and read all the indicators and kind of get a picture of what it was painting. So Moderna's stock price popped more than 12% pre-market trading, while Merck's rose 0.5. Data from mid-stage trial released Thursday showed that Merck's experimental cancer vaccine helped reduce the risk of death or relapse in patients with melanoma cancer after 3 years. That's pretty big. Not sure how much we can rely on that, but I didn't get a COVID shot or anything, but I do trust the people of, United States citizens to, come up with a great, I give, what I'm trying to say is, I guess, like, all these people talk stuff on, like, COVID shots, this and that. Like, what do you not trust your people? Is that what you're telling me? You know, whether you want to get it or not isn't the question, but to say like, oh, it's this, it's that. It came out quick. You're right, right? It may or may not have some things, but you know, I don't know. Me personally, I have trust in uh, in the scientists and the technology that they can put some things together. And there are some things that just can't be fixed, right? There's just sometimes you just right like cancer. Sometimes there's just something you can only do so much. All right, so Moderna. What I'm gonna look for if we play this. I have some other names that I'd rather look at, but these are going to give you liquidity, right? These are going to give you. This is where the money's going to be made. These are where you know your your spreads are going to be pretty tight, and these things can really get moving. We're going to watch this pivot high here, which would be pre-market lows. That's going to be the first one. All right. Um, Let me do this real quick. I'm at a 15-minute chart, and you kind of have a double top high. I want to be quick because I want to go over some of the larger cap names. All right. 87. So we are above that 50-day. See, look at this. This is what I mean. We have nothing to stop us to get back into that $100.99 level. 92. See, we're already almost there. You still can at least fill this gap up here at 98. Right? At 98. Um, yeah, there's a gap there. You're going to have your 100-day in the way too, though, but it's already there. Right? I mean, right now we're trading at 87, and that's off of a pullback. A high of 88. Okay, that helps. That helps. I'm going to put this here, which is a 100-day moving average. And then I'm going to just be real quick and just do a few easy levels. Here, let's see here. Is there a pullback? You guys know I had Moderna early. I think I got in Moderna at like $20. But that's neither here nor there. Oh my gosh, come on. All right. We're gonna see if we can pull back into 85 area. If not, you know, you can wait for this flat bottom. Oh, we have previous highs up here that you broke. That's insane. What a move. What a move. I didn't even see that. That's crazy. All right. So that's going to be Moderna. I would wait for a pullback and see how this thing reacts. Um, Ultimately, I would like to see if we could get ourselves back down to 82. I just don't know if it's going to do that. If this news is a big deal as it is, as it seems, it may not get back down to pre-market lows. So I would look for this pre-market lows. If you break pre-market lows, then you're looking for this value area at like 82.40, 82.20. That's what I would be. That's what I'm going to watch for. All right, that's what I'm going to watch for. Yeah. Let me throw up a 15-minute chart real quick. All right. I just, so the reason I like to look at some of these names again is because you're going to have a lot of people looking at how did large caps do yesterday? They did awful. They lagged. They did, you know, they weren't. Some of them weren't even red, and the market's ripping. So, yeah, I just gotta watch these prior pivot highs here, right? That pivot high, And then next up would be this flat top resistance. Yeah, that's an ascending wedge and it bailed. So right there, 82.48, 82.50. All right, so right now it's double topping up here. Let me do this. Wow. Yeah, I don't see us having a great financial crisis at all because of the Dodd-Frank Act. You know, I mean, people start losing their jobs. There's really nothing you can do about it then. All right, so 100-day moving average, we got that. All right. Let me see. God damn it, this is taking a lot longer than I wanted it to. So the 50 days down there, so we shouldn't have to worry about that. So I'm going to look to see if we can't bring this up to the 100-day moving average. Honestly, I would like to get an entry. It's not going to give me that. Wishful thinking there. 82.20 would be a nice level. I doubt it'll give it to me, but you know, I think if this thing starts breaking down pre-market levels, you kind of got to rethink your plan here. 85 would be nice. So I'm gonna wait until see what happens when we get to when we get to pre-market, when we start getting closer to 9:30, because this thing could trade sideways during the day, right? It could just sit here and just kind of just stay there. You guys know what I mean. If you guys have been trading, you guys know that some of these gap ups can just literally just stay kind of like right there and not even move. But we'll keep it on watch. It'll bring us some volatility later on down the line, whether it's next week, tomorrow. But that's what I would like to see. I want to see us hold this pre-market low. All right, I'd like to see us hold that pre-market low at 85. I mean, if you want me to be honest, I don't know, man. I need 80. I would like 82.50. I just don't know if it's going to give it to us. All right, let's go into. So you had some airlines. For anybody that I know they're not sexy, but you can make some good money there, guys. For anybody that's got a small account, man, these names like Moderna, they can really double, triple your account, right? Playing these, some of these cheaper names that they make moves, and they make 10, 15% moves, and because it goes from $20 to 25, it's like, oh, it went from 20 to 25. Well, percentage-wise, it's a big deal. For anybody, for the ones that don't know. So United Airlines and Delta. I like trading American Airlines. I like trading some of these airlines. What was the news, actually? Let's cover that. So United Airlines, Delta Airlines, shares both companies gained 1%. After Goldman Sachs named them top airline picks going into the new year. Okay, that's not really something I would rave about, but look at that. That is a beautiful break, pullback, and look at that bounce. That's nice. 41.86 is the high. 41.86. 41.86. You do have a gap. Man, look at these airlines. They've already done it. They're starting to refill this. I was watching. They just got murdered, right? Like, look at Boeing. If I'm going to keep an eye on these airlines, because if you start to notice, right, look at this. Bang. Right? Completely reversed. What's up, Brody? How you doing this morning? Or this afternoon, I should say. I would say top of the morning to you, but it's the afternoon where you're at, I would imagine. What time is it, Ann? What time is it? Is it like 8, 5, 6? It's like afternoon or starting to get into the night. But, is this a leading indicator of what we have, right? Boeing is the leader. your airlines are the laggards. Um, so they've made a nice recovery. You can see the levels I have here. I've had it on watch. I guess I just forgot about them. So I'm gonna not really worry about airlines. I'll look at them later on, but I don't think that's enough of a catalyst to get it moving. Um, let's go into some of the larger cap names real quick. Tesla, Netflix. All right. Um, really nice 50-day, 100-day, 200-day, all curling up. Bullish indication. We are working on a new high of the year. Let me rephrase that, a new high of the year. I'm pretty sure on Netflix. It's trying, right? It's trying to make a new high. Um, this was a beautiful daily break and retest. Beautiful. I was watching this name and, kind of just lost track of it. Look at that reversal there. So, nice breakout day. I can probably get rid of some of these levels here. Let me go in. Give me a half hour. Wow. Beautiful. Look at that. Let me do a 15-minute chart. I want to find a perfect time frame for this. So, yesterday, right here, after hours, it held. Right? It held the top of this level here at 479.99, 480. So, Netflix, pretty simple, right? 480. I'm not going to say 480 is the level that we're going to look for to get long or short, because you're going to want to look, that is support. You want to see if you turn that resistance. You want to turn yesterday's high into support. So what I'm going to look for is, I'm going to have to get another cup of coffee. I'm going to look for yesterday's highs to continue to hold. If they don't, the last leg is yesterday's close. After that, you'll have to just bring it down, right? 475, 476. That double top from yesterday morning prior to lunch. All right, so let's do this. Let's do this real quick. 7:30. Okay, cool, man. How was your day, bro? How was your day? Um, all that good stuff. All right, so again, I'm going to write this down, and I'm not going to deviate from my plan like I did yesterday. My brain was a little fogged from the melatonin and not getting that much sleep. I feel like I'm cursed since I've been doing these streams. But right there, if it can't hold yesterday's close, then I would wait. Watch and see what the overall market does. All right, see what the overall market does. Pay attention to what sectors are leading. The Dow is ripping, right? The Dow has just been a beast. Last week there was rotation, and look at this. It's making new highs. It's making new highs. So names like Goldman Sachs, right? McDonald's. Look at that trend, right? This is the trend we want. Look at that. We called what else is, obviously Apple and stuff, but financials, JP Morgan, beautiful trend. But JP Morgan, I feel like, was a laggard. Look at Bank of America yesterday, right? Look at that. WFC, Wells Fargo, beautiful, right? Just beast mode. I looked at that yesterday afternoon. I'm like, hot damn. So, take notice, right? The easiest way to do it would be, all right, there's the SPY. I see it's working up yesterday's pretty much yesterday's high after hours. Let's go to the Qs. All right. Oh, Qs are not there. All right. Qs are not there. There's the SPY up at 405. All right. So that tells me the Dow or where's IWM should be leading, right? So this is going to tell you what stocks are strong and which ones are lagging. Look at IWM, right? Look at the Dow. So IWM is leading. We're going to want to look at small cap names on pullbacks. That's where the strength is right now. All right. ARK, ARKK, right? Making new highs. So technology Qs are lagging right now. Things could change. Now you want to see if you start to see the Qs not get past this level here and start to try and pull back, then that may also pull the market back. So for me personally, how I would do that was like, okay, IWM or Dow that was leading, if they start to turn around with, a little bit behind the Qs, then there's my arbitrary trade right there. I don't think enough people really look at the 5 major indexes to see where is my that tells you where institutional money flow goes. Institutions make markets. Got some school today and did some homework, and yeah, got selected in under 15 soccer team. Sweet, bro. That's what's up, man. That's awesome. Good stuff, bro. I'm going to aim to have myself a great day. So, Amazon. We'll go through some of the those large caps real quick. Amazon. All right. Pretty much yesterday's highs. That pivot high is still holding. So we'll look at pre-market lows. It starts to break. If we break pre-market lows on low volume, then we want to look to say, all right, chances are this flat top resistance should hold. All right. Now, where's our target? Where are we going? All right. It's not enough for me to say Amazon's holding this previous resistance level. We broke it. It's pulled back to it. Okay. Where are we going? That's the other part. You want to have your exits. All right. You don't have much stopping you here. Actually, all right. If we look, you have a pivot low here at 149.97, and we're there now. Look at it. Look at time and sales, 199.5. Look, you got there, 149.98, and now look at it, 149.95, 149.94.3, right? So what it did was you hit this level right there. I'm going to put a dotted line there. Matter of fact, I'm going to make it orange so I know that that's that pivot low level from last year. And I can say we break above that. What I think we're going to need is just that pullback, right? You're going to want to pull back, hold this. You're going to pull back and hold this level here. We might need to take this thing down to 147 or 148, guys, honestly. Amazon might need to come way back down here to 148. So, ultimate target, if you want to get me personally, maybe I get a month out, 2 months out, but we get in this range here, I'm going to just take profits on the way to 158, 157.50, right? 157.70. All right, because now I'm in a range. So I know I don't have nothing here really to stop me. Yeah, there's up and down price action here, but to the left of me, the first thing I run into is a big candle. So therefore, there's nothing going to stop me. Look at this candle. Look at these two candles. So I shouldn't have much to stop me. So this is the range we're going to play. All right, so I would look first to get it. I'm going to take my profits as we go. Obviously, you can't just say, all right, I'm going to take along to here. Yeah, you can swing that trade, and that could be your target. Maybe you get 3 months out, on options or something. But what you could do is use the ATR, right? Use your average true range. A lot of people don't do that, right? What is the stock been doing the past 10 days, right? I try to re-stress this, right? 144.50, 147.75. 144, 5, 6, 7, 50. So high to low, we should be able to get $3.50 to $4. That's pretty much what it's been doing. Probably $2 on the low end, 250 on the low end. 144.34. We'll call it 144, 146.90, 147. Right. So, um, $2.50 to $3. So as we start to get in increments, if I'm buying a pullback, what I'm getting at is if I buy a pullback and it holds yesterday's high, then from there I'm gonna say, all right, I'm gonna be taking highs. Right. We pull back. I will take profit, right, on the bounce into pre-market lows, and that is what, at 148, so 149. So that's 59 cents, man. Yeah, I would take it just because in case it turns this into resistance. Um, talking about the aircraft manufacturers besides Airbus or the Boeing, can you look into the ATR or bomb raider? ATR or bomb raider? I'm not sure what the bomb raider is, buddy. Um, Bomb raider. I mean, I know that Goldman Sachs had kind of didn't really give an upgrade, but kind of upgraded United Airlines and Delta, or not United Airlines. I was just talking about that. How Boeing was leading and they've been lagging. And they're good again for if you guys if people have like small accounts, they're not as volatile. You can throw them trades on and not have to stress yourself, and can get double, triple your money. Um, it comes with risk. You got to know what you're doing to an extent. I'm not telling you guys what to do, but I would look at some of the. I just don't think they get enough attention like they should. Right, these lower names. So United Airlines and Delta stock, they're top airline picks. So that's not even an upgrade, but they should rally with this market. So Amazon again, it's holding the pre-market highs right now. Just know what it's been doing every 10 days. It's putting in about $3.50 on a big day to $4 on a big day. We should be able to get high to low $2 out of this name, right? Worst case, right? Worst case $2 to $2.50. So if we know that we break above $1.50, we hold it, right? We hold it. We got to think about the gap up to an extent, but that's a whole nother subject. So, I'm taking profits every 75 cents, every dollar as we enter the no man's land. But I'm not getting in until we pull it back and get some price action in this 149 area, during 9:30 to 4 o'clock hours. Let's keep it moving. I'm sorry to take so long there. Just, want to give you guys just some little tips to try and help when you're in trades, understanding from high to low. All right, this is support. All right, if I'm going to resistance, Tesla has been putting in about $8 to $10 for the past 2 weeks. I know I can get $4 to $5 out of that if I'm catching the reversal, or if I'm getting, if it's at resistance or support. Right, I know dollar amount, the ATR. It's important to know because it'll help you in the trades. Fucking called this thing out perfect yesterday, but I didn't talk. It didn't come out of me like I wanted it to. We said right off the bell, long to yesterday's close, which was 237, and then the second half of that trade was sell it. Look for the reversal if you cannot start to get volume and break above that level. Right? It did it on a decrease in volume. It just went right to it. Anyway, so now we're going to look for that level to become support. All right, we're going to look for that level to become support. This level is just really huge. 238. So, 238. If we don't start getting above this 100-day moving average, we'll see what the markets are doing, and we'll pull it back to 238. Right? 238, 236. Markets are making new highs, but Tesla is failing to do that. So there's bearish divergence right there. Right? Bearish divergence right there. So that's analyzing the SPY right now, pre-market, on a 5-minute chart, making new highs while Tesla is turning that prior support into resistance at the 100-day moving average. All right, so Tesla, let me actually use a 15-minute chart. So Tesla, that's a nice double top pre-market. I'm going to play this two ways. Again, same thing like yesterday. All right, 239, which was yesterday's close, roughly. Yesterday's close. I'm going to look for that 239. 238. That's a dollar increment right there. 239. So 239.86. Sorry, I'm just boggles my mind that that's $2 here. It's pretty crazy. Um, I did fix this, by the way. Well, I thought I did. Yesterday, I locked everything in, so I didn't have to, because I was taking up way too much time with I was taking up way too much time with clicking. Okay, so they didn't save. That's crazy. That's crazy. Oh. All right, so sorry, I'm just trying to figure out. So now it's making it resistance, right? So making that prior support resistance. Um, Yesterday's close, right? Yesterday's close, that 239.29 area. Um, you start breaking it on volume, right? And it bounces off of this level on low volume. Then look at VWAP, pre-market highs to get short. The SPY is still making new highs while Tesla's weak. So Tesla is still weak. It just caught a bid yesterday because of what was going on in the markets. So, right, you got to be bearish until something changes. I don't think there's news that's going to like for it to sell off. But bigger picture, that this level right here could become support. All right, so we're just going to watch 238. If the close doesn't hold, 238. All right, so I'm going to write it down right now, and I'm going to do as follows. All right, we pull back to 238. Well, what happens if we hold this pivot high? Well, we already did hold it. It's not catching a bid. All right, so pre-market highs, PMH pre-market highs, which is also the 100-day, and that's around 242, 242.40. Call it 242.50, 242.50. R1 for resistance. All right, that's where I want to be short. All right. Now we'll see where the 100-day is when the market opens. We can do it right now. It'll probably be up here at like 243. It might not go that much, but yeah, it'll still be. It should anchor itself up just a little bit. It should. All right, so that's my game plan with Tesla. All right. Oh, look, it did reclaim this pivot low. So it pulled back into that pivot high, held it, and now it's trying to hold this. See what it's doing? It's holding this area right there. So, why is this doing this to me? All right. I'm going to put this here. And we'll see how this does. I'm going to make it a dotted line. All right, so that's Tesla 238. No matter whatever happens today, to me, it still feels a bit weak. All right, it still feels a bit weak. Market's trying to pull back, and Tesla's just doing the clear opposite of what the market's doing. So, yeah, pretty simple, pretty simple. That would be Tuesday's open or Tuesday's high and yesterday's close. 239. All right. Let me move on. Let's move on from that. Let me hold on one second. Let me fix my phone real quick, guys. If you guys have any stocks or anything you guys would like me to cover or go over, just throw it in the chat and I'll run through it real quick. Roku has been on the list. We've been keeping an eye on that. GameStop also. So there's a nice 5-minute hold there. All right, so 245, is that what that is? 244.50? If we do gain some traction. 245, yeah. So I'm going to keep an eye on Tesla. I have the levels. The levels haven't really changed. And I will look to see if we pull back on low volume and start to hold some of these levels from yesterday and Tuesday or Wednesday. Or Tuesday, yesterday and Tuesday. All right. Sorry, I'm just trying to turn on Wow, look at SoFi double bottom right there. All right, we're Gucci. We're good. We're good. We're good. We're good. All right, so we got Netflix. Let's go check in and see what some of these names are doing. Netflix is holding up pretty nicely. Let's see where we're going to take it. It's because it's coming up into new highs. 482.50. 482.50. I wish there was a way I could have pre-market daily volume on. I don't know how to do it. Damn, it's a high of 495. Alright, so this is prior resistance. We're going to... Oh, look at it. It's making the support. How funny. Alright. I'm going to make it orange. That orange line is going to be that previous close on a 4-hour chart. Alright, and it looks like it's trying to hold that, which would... And is also that previous 482 highs. Saying. Come on. So 482. 482. Oh shit. All right. So we mentioned some of the names that had news. Let's go. You know, if there's anything you guys want to cover, throw it in the chat. We'll look at Roblox, Roku. We've been watching these names. All right, daily chart. Well, that's not cool, right? Roku's just been pulling back. Roku's just been pulling back. I missed that. Wow, it did that yesterday. Holy shit. It did the thing. It did it, guys. Oh, wow. That's hilarious. That's hilarious. So I just want to make sure that we got this. Come on. Alright, so we are getting a bounce in yields. This was an area that I thought had some decent support, that we could see a bounce back in yields. It's more so down here though, at this 4.1 level on the 2-year. I feel like this level here, 4.195, so call it 4.2. 4.2, I would look for a bounce back on the on yields. I mean, hey, maybe it doesn't, right? Maybe it's still enticing at those levels, and therefore it doesn't bounce back, or I should say, yields don't rise. All right, 10-year. 10-year is way below that level. Wow. Wow. Holy shit. So you have a deeper inversion right now, guys. That's hilarious. Look at that, guys. Holy shit. And nobody's talking about this. Is anybody talking about that? This is where the 2-year is. This is where the 10-year is. Why is there... Why is it all white? Oh, shit. So, we have a deeper inversion. Okay. Alright, US. I want to share this. How do I share this? Two. We're not ending. What the hell's going on here? We're not doing all that. Alright, so I gotta watch what I push with these hotkeys. Yeah, I was just hitting the hotkey, so don't mind it, guys. Give me 1 second here. Look, I just wanted to post this inversion. Um, that's crazy. Did you guys look at the 2s and 10s and 30s to see how deep? Um, let's see here. And then we will try to get a whatchamacallit here. All right. Time is it? Oh my gosh, it's 9:30. All right, I'm gonna go get my coffee, and I will be right back. Um, coffee. Come on, let's do this. I know I need to hook up my other. Um, I need to hook up my other. Whatchamacallit. All right, here we go, guys. I will be right back in 2 seconds. All right, give me 2 seconds to go make my coffee. I'll be right back, guys. Okay, be right back. Let's listen to some CNBC.
The other airlines leaning away from their customers, we are leaning towards them. So you got points that never expire. You now have same-day standby. You have tier status that is actually easier to earn, not harder to earn. We made it easier to earn, so we're actually leaning to our customers. But no, I'm very proud of our program. It is award-winning, and it's the best in the industry.
All right, we're going to leave the last to Phil. Well, basically, yeah, you know, you're going to be cutting back on your capex long term. You guys announced that yesterday. The max cadence in terms of deliveries. How comfortable are you with where it is, where it's headed in 24 and 25, 26?
Yeah, we have a wonderful, cost-effective new agreement with Boeing that takes us out to 2031, and we have a lot of flexibility in that agreement. Our 2025 and beyond capacity from mid-single digits to low to mid. That really allows us to manage our capex, which obviously allows us to manage free cash flow and hit our returns sooner. The MAX 8 is a wonderful aircraft. I'm very optimistic. It's really Boeing, but I'm very optimistic that we'll see the MAX 7 certification sooner rather than later. And we need that aircraft, and it's a wonderful aircraft.
I want to thank Bob for coming on the set and Phil for visiting us, because I've been negative on the stock, as you know, but I've changed that stance. It's just too good an opportunity, even though your price
we appreciate it. Thank you all for the time. Thank you, Jim.
When we come back, we'll get Kramer's Mad Dash, countdown to the opening bell, take another look at futures here holding in. 10 years still sub 4, and the 30-year just about 11 basis points away. Don't go away.
All right. Let's do it, guys. Let's do it. All right, just a few minutes now. Opening up 9:25. Let me change a couple things here. All right, let me change this up. Boom, boom. Because I'm back and I don't need to. Man, my chest is hurting. Logo.
Futures remain green. So many interesting numbers this morning. 10-year 396. VIX is right at 12. The dollar index almost back to 102. And of course, the all-time closing high on the S&P, 4796, would be just about 90 points away. We'll get the opening bell in 4 minutes.
All right, we're good to go. We are good to go. If anybody's here, if you guys could maybe do a solid and email this randomly to anyone, hit the like button, share it. The more the merrier, right? The more the merrier. So, all right. I have my place. I'm going to watch Tesla. Come on, man. I have so much going on here. All right. All right. So that's Tesla. Flexible grid. All right. I am going to watch banks and stuff too. I'm just going to keep my eye on the overall market today. All right. Again, Tesla. I want to see a pullback. It held the pivot high. It double bottomed here pre-market, right? At that pivot high right here. So let's see, you know, what it decides to do. I'm really curious with Tesla.
Plus, get 24/7 live help and access support by phone,
right. Hold on, I don't, it's kind of got to get this stuff, me personally, kind of got to just like get it right. All right.
Power E-Trade's easy-to-use tools like dynamic charting and risk-reward analysis help make trading feel effortless. And its customizable scans with social sentiment help you find and unlock opportunities in the market. E-Trade from Morgan Stanley.
What is N? It's a variable, a symbol of flexibility, solving for the needs of today's investors.
All right, guys. Yeah, good luck to you too, Ray. I'm a little all over the place this morning. We got 1 minute till the bell opens. Good luck today, everyone. If you guys have ideas or news of any kind, just throw it in the chat. All that fun stuff. See where mRNA is. Alright, it's still trying to make that area resistance. So I'm going to have to go through and make some of these names. Going to have to get some of these names to look like... Wow, that's so loud. Holy shit. Sorry, guys. Holy cow, that was loud. Alright, so there's Moderna pulling back. I don't know how big of a deal this is going to be. I really don't. I don't know if you can consider. I just don't know. You know, they really relied heavily on COVID, and now COVID's not here. You know, how do you take this drug from Moderna? Right? How do you take it? Alright, Oxy's still on the list. It's just breaking levels, guys. Moderna's just cutting through levels. So, I think you got people that are in here that are stuck. And they won out. You can see that it looks like they may start to be wanting out of this name. Alright. I can't get... I'm not even logged in. Dude. Alright, so she held that pre-market. That's a nice pullback and hold into that daily area of support that we talked about. It may run into this 100-day moving average if it can break to new highs. All right, here goes Moderna, guys. Moderna's getting ready to go. Moderna's trying to break to new highs. Can it do it? Can Moderna break to new highs? That's going to be the question. It did it. It's done it. Come on, come on, come on. Where are we headed to? Yeah. What is that? 95? 92. So it's $1. Look at this bid ask. Man, this is bullshit. Nobody's going to play this unless you have unless you want to play the shares. Look at that. 14 cents to $1.90. All right, this is what I hate that Moderna turned into, because it used to not be like that. It used to not be like that. I'm not going to get into something that I got to worry about that I can't get out of. So have fun with it. If you want to buy the name, I'd look to take this to 95, guys. 95 is where it's going. All right, that's a personal opinion. Doesn't mean that it's going to go there. All right, but let's let's go to Amazon. Let's go to Amazon. So Amazon just pulled back into. Come on, I got so much I'm doing here. All right, so that was that level we talked about to see if it would hold. Couldn't do it. All right, she's pulling it back in. Let's look at Tesla. I was looking last night to see if I could find how to change between charts quicker. You know what I mean? I was looking to see if I could find that. So Tesla's broke out too. That's a nice double bottom off yesterday's pivot high, and it got right into that major resistance level there. You know what? That could have been a sell-off, and this Tesla could start to break out. I wonder if yesterday's price action was just like a shake and bake. I don't know if you guys have ever noticed stuff like that, like when you go and buy a long-term and stuff, but what I'm going to do is let's see if we can make pre-market highs support. And then we will... What am I looking for here? All right, we do have some levels up here that are pretty significant. What I would do is put this right here. Dude, come on. It's going to... Man, it better not do the thing. Don't do the thing. It may not even get up here, but... Yeah, it's not going to get there. Alright. Alright, so you got a double top. Pre-market high there. Alright, we're at a pretty significant resistance level. I think you got... Man, look at that volume. Look at that volume. It looked pretty nice on the... it's not too bad. If you guys see anything running or moving, throw it in the chat. Anything with relative strength. We're here to help, right? We're here to help one another make some money. If you don't want to give your trades away, I get it. But even just, you know, just mentioning like, hey, this is running, this is looking good. You guys might want to look at it. You know, a lot of people, you know, everyone wants to try. Look at Microsoft falling out of bed, guys. Microsoft's falling out of bed right now. Come on, you son of a bitch. Come on! My mouse has been acting up. I don't know why. Oh my gosh. Was there any news with Microsoft? Was there any news with this name?
And he said, we're going to develop vaccines for cancer. And I said, I'll believe when I see it.
I know.
And then he did.
Stefan Benz was a guest on Squawk Box this morning talking about this latest trial.
Wow, it had to hold that 237 level, and it didn't. It didn't do it. Come on, I don't want to miss a fucking trade here.
The two curves are differentiating further as time goes by. And that's really exciting because not only we think to a huge impact on melanoma,
We got to look for support here at 370. 370 could be an area of support on Microsoft.
Very exciting. Yeah. Now we know cancers, people think that cancer's all one disease, and it's not. But I just think that this is something that tells me that the original
68.
franchise is finally here. And that's something that's worth more than just where this
All right, so that's the rejection I would look for. I'm going to watch for this level here.
have a pain drug and it does not cause habit-forming behavior, then you have to buy the stuff. And it's coming down, so it's an opportunity.
Yeah, it was up yesterday. Of course, we
I think I messed it all up.
The positive phase 2 trial, I believe.
Yeah, but that, they publicized that, which was meaning their confidence level is very high.
Conceivably would replace opioids in terms of pain management, which obviously would be a very big deal.
Yes.
We still are in the midst of an absolute crisis in this country.
Oh my, this is horrible.
We don't talk about that often.
Why don't we? Because you know it's at the core of a lot of the problems with employment, healthcare.
369. Let me see here. Let's look at a 15-minute chart. I don't want to sit here and waste my time on Microsoft, but
You could change whole towns.
yeah, 360. Yeah, 370 looks to be.
199.62. City today names it a top pick for 24. They say the Bears are missing iPhone premiumization.
I don't know.
Insourcing.
Maybe we have room to 368.
They think Vision Pro and AI.
Maybe we have room to 368. But you got to watch 370 because I feel like there's just a little bit of support that could show up there at that level.
16%, I think they're actually lowballing. But Mike Seaver at T-Mobile, when I interviewed him last week in Seattle, these guys are an amazing partner. And it would not surprise me if they partner on some bigger stuff than they're just doing right now.
Apple's breaking out to new highs.
Mike said that just opening an account with an iPhone is the easiest thing in the world. And their numbers are the best.
Look at KRE.
Speaking of chips,
KRE pulled back right to pre-market highs. That's regionals. Looks like Bank of America did the same thing. Look at that. They pulled right into pre-market highs, and they're trying to make new highs. All right, so Tesla held. I don't know why my mouse is really messing with me today. Oxy is still going, guys. Oxy's still going. I need a pullback on this name, though. I can't buy it up here. Everybody was late on it. Anybody buying Oxy Petroleum up here is late. Hella late. Because you had the opportunity, if you joined us yesterday. Yeah, look at that volume. You had the opportunity to own it down here at 55, and it's already up $5. There's flat top resistance there. Alright, what else do we have on the list? What is the market doing? SPY is sideways. Is AMD moving or something? Or are these guys just talking out their ass? Are you kidding me? I know it. I told you guys. Yep, I told you. AMD is going higher. AMD is going higher, guys. It's going to highs. All right, so 144. Consider it done. She's going to this gap. You have a gap here. All right, there's a gap here. Where are we at now? Where are we trading at? 140.50. 140.50. 140.50. You have nothing to stop us. 141.26. You have a gap fill up here. Okay, all right. Again, the orange lines will be gaps. Just so I know. Let's look at NVIDIA. NVIDIA is struggling up there, guys. I think I might try a short on NVIDIA. Honestly, it's not doing too well. It's trying to get up above that level and it just can't do it. Let's see if it holds the gap. I'm gonna sit here and watch this gap fill. All right, it's coming down into the gap right now. All right, it's coming into the gap right now. Let's see if we get a quick reversal off this gap fill right here. And it's not doing it. It's not reacting quickly enough, I feel. All right. Is that a low volume pullback? Would you guys consider that a low volume pullback? What do you guys think? You guys feel like that's a low volume pullback on this 3-minute chart here? Might be. Looks like support's there, 467. Yeah, 476. 476 is where the magic's at. Yeah, 476 area. That's where the magic's at. Alright, so I may try to take a short on NVIDIA. I just don't know if it's a smart move. It's not that I don't think I can make some money. I just don't think NVIDIA, like, if it's, 276, right? Like, you'd have to be short at 486. Not 482, 483. I just don't know if there's how much meat's left on the bone. Right? That's what I'm getting at. So I feel like the bigger trade is either a long at 475 or a breakout. If it's not, there's no volume. It's not gaining any volume. So oh my god, fucking Roku went. Roku went, guys. See how my screen's frozen? Alright, so Roku went. Roku did the thing. And there's there's Baba. That was my secret trade, guys. Baba's my secret trade. So if we can pull back in, I would look for Alibaba as a buy. That was the play that I talked about this morning that I felt like is, we have a nice trend reversal. So if we can get a pullback on this name, I will be long Baba. It's a shame that if anybody's not here, I'm not sure if I covered it. I don't think I did. I don't think I covered it in pre-market, but this was the name right there. I did cover it because I showed you guys that it's been a consolidation, and I'm seeing a reversal setup on Alibaba. I did mention it. So, for anybody looking at that. All right, so there's our resistance. All right, on a 15-minute chart coming in at 72.50 is holding. 72.50 is holding. Look at that. That's holding, guys. Where is our bigger target? Where are we going to head to? Let's see here.
Your love isn't confined to an advent calendar. It doesn't stop when the Christmas lights come down. With the Salvation Army, your love lasts all year long. It puts a present under someone's tree today and a roof over someone's head tomorrow.
Spy's pulling back.
And the hardest nights for hardworking families. Together, we love beyond snowfall. We love beyond Christmas.
Microsoft could possibly be a short there. Amazon's lagging the market also. It really is. Amazon's been lagging this market as well. A lot of these names are starting to work themselves up to highs, and Amazon's not doing that at all. That's crazy.
Cutting 70% of its workforce.
All right, so here's Amazon. 148.88. There's that gap fill. Doesn't feel like it's gonna hold. Amazon doesn't seem like it wants to hold. Like I said, I think 148 is the level for Amazon.
XBP shares resume trading.
148. So we got another dollar to go. And then we can think about... then I would personally think about the long on Amazon. I just think your support level is down here. All right. This is a nice area, these pivots, but, once you look at it on a 15-minute chart, you'll see it's tough. Yeah, 148, I feel like 148.
VIEW, View Inc. hitting new highs of 30% now. Victor India Echo Whiskey, VIEW.
Unbelievable.
FRGT shares resume trading.
Bank of America still going, guys. Unreal. Unreal. What are some of the other names that I had? Oh, look. I don't think I have any more targets on Oxy. It got to our target. So that's where I would be taking profits if you're still in that trade. That would be fine. I'll take profit at 59.50 and look at the sell-off. All right, look at that sell-off. Let's see here. Oh, Netflix. Netflix was another one that we were looking at. So it looks like we're making a reversal, guys. Looks like the market is trying to reverse here. Other than some of your small caps and down names. No, everybody knows his take. Nobody gives a fuck. All right. Come on. Come on. Come on. Come on. All right. So Alibaba, I'm gonna look for a pullback. In the 72. I'd like to see a pullback in the $72. So I could set an alert and get alerted when it gets there. It's probably what I'll do. Yeah, there is a nice little bull flag there on low volume. I'm gonna be patient on that. Look at Apple. Unbelievable. What's Tesla doing? All right, so there goes Tesla. Wow. Look at that. Look at that. Wow, guys. It's in an area of resistance now, so be careful. This is highs. Look at that hold of that level. Boom, boom. Increase in volume. Wow. Wow, that's all I have to say. Look at the volume, guys. 250. Shit. Wow, Tesla's gonna go. Alright, I may... Shit, man. This sucks. I want to get in Tesla. I want in. I missed it. I wasn't watching it. I wasn't watching. I wasn't watching. I wasn't watching. Unbelievable. Airbnb taken off. Roku was taken off. NFLX. Alright, starting to catch a bounce here. AMCN. You gotta be shitting me, bro. Alright. Oh, shit. Gosh damn it.
The biggest ideas inspire new ones. 30 years ago, State Street created an ETF that inspired the
Alright, I need a pullback. I'm looking for a pullback on Tesla. I'm looking for a pullback on Tesla. Where would I think it's gonna go high? Look, like to get to where would that be? No, come on. All right, 250. I still feel like we're going to 250, but I need a pullback. God damn it! It's not going to give it to us.
ANZ and Amazon announcing updates from Project Kuiper satellite test mission. Test results ensure optical satellite link will be operational on our first production satellite since 2024. That's ANZ.
Created the program called Open Doors, a trusted tool for small business owners. Our Accelerator Playbook comprises expert resources with tips and strategies to help you grow your business. Open Doors is spotlighting its milestone year of helping small businesses. Scan the code or visit nbcuopendoors.com.
Everything I do that's for my health is an accomplishment.
Concerns of getting screened faded away to my astonishment.
My doctor gave me a script. I got it done without a delay.
I screamed with Cologuard and did it my way.
Cologuard is a one-of-a-kind way to screen for colon cancer that's effective and non-invasive. It's for people 45 plus at average risk, not high risk. False positive and negative results may occur. Ask your provider for Cologuard.
I did it my way.
I prepare like no one else so you can get
SMCI and INTC Supermicro offers rack scale solutions with new
All right, come on.
Intel Xeon processors.
Wow. She's gonna start falling out of bed here, but just watch out because Amazon may have some support there at 148. I would expect a bounce on Amazon, like 147, 90s. All right, I would expect a bounce. There's that extension on the candle, and it just there. See, you can see it right there, 147.90s.
Accelerates AI everywhere.
Looks like it's gonna break it though.
Products, that's INTC.
After the big rally that we saw yesterday in the wake of that bond move, big bond rally as well after Powell. Every sector's higher except for staples and healthcare. Today the charge is
Staples and healthcare.
interest rate sensitive.
All right.
CCCC, C4 Therapeutics, up another 21%.
Jesus Lord, it's still going.
Charlie.
Holy cow. CCCC is still going.
Here's some three
Wow.
quarters that we're watching. Adobe
Okay.
after issuing a lighter than expected forecast for 2024. The company says it's carefully looking at spending and remains focused on closing its $20 billion acquisition of Figma. Wherever that could
Fucking
go.
Amazon.
Crowed by
Unreal. How did I miss this trade? I mean, I'm not bearish on it, so
mid-stage trial of the
it's
company's
pretty easy for me to miss that trade.
with Merck's blockbuster cancer drug Keytruda. The combination reducing the risk of recurrence or death for patients by 49%.
All right, it's 10 o'clock.
And we're watching Apple trading at all-time highs.
All right, so let's see if we can get a reversal here. 147.83.
Rally past 37,000 for the first time ever. We'll have more Apple.
That's the reversal.
Talk more about some of the other names leading
And look at it. Look at it just work its way right
Inventory's out this morning. Let's get to Rick Santelli. Morning.
back up.
Good morning, Carl. Yes, if you recall, wholesale inventories have been mostly negative month-over-month change for most of 2020.
And it's going to take it right back. Let's just go to Tesla. Tesla's strong. Long and strong. All right, let's do it. I need to not take my eyes off of some of these names.
To find a lower number, you have to go to March. But 1, 2,
Come on.
so far in the year have been negative. That's about half on the wholesale inventory side, and it does underscore how things are slowly starting to get back to normal. But you want to pay attention to these numbers, especially if you're monitoring, of course, the beginning of the fourth quarter and how things may share with regard to holiday sales. One thing I want to point out here: if 2 years close right here at AB at a 6.5-month low yield close and 10s close here, it'd be nearly 5 months. But more importantly, look at the following chart. 2-year note yields are now down on the year.
This is so insane. This move with Tesla is absolutely insane. Absolutely insane.
Last year at 388, they're currently trading at 395. Sarah, back to you.
It's amazing. So we just wiped out a year of high yields, basically.
A whole year.
Unbelievable. Thank you, Rick. It speaks to how ferocious this Treasury rally has been post-Fed.
All right, I want to see if we start to either double top up here on Tesla up at 247, or if we're able to get some volume in here, because I didn't like this candle here. I don't like that 3-minute candle at over 2 million shares to the sell side. Well, it was a bit even, actually. It was a little back and forth, 50-50, so...
Between hike and cut, there's a whole plateau, whole beach of hold.
That's very different from the message we heard from Fed Chair Powell yesterday on the subject of rate cuts. Listen.
All right.
The question is, when will it become appropriate to begin dialing back the amount of policy restraint in place? That begins to come into view, and is clearly a topic of discussion out in the world, and also a discussion for us at our meeting today.
They discussed it at the meeting today. So very different message. David, I think underscores why Powell was remarkably and surprisingly dovish. It started with the 3 rate cuts that were penciled into their summary of economic projections. I think I and a lot of people were surprised by that. And then it continued with a statement where we knew they were going to maybe make some tweaks around the language about the tightening bias. They added the word any policy firming instead of additional policy firming. So that was a pretty well telegraphed signal that they're in a different mode. And then the biggest came in the news conference when he said that they're talking about cuts, when he said that they're probably at peak rates. I mean, there are a number of different ways you can point to it, but he did not talk down the market from the rate cuts, and in fact added fuel to that fire. And a lot of the economists this morning are out revising their cut schedule next year, adding in faster and more of them.
Yeah, and as you pointed out, not what was expected.
Look at this. Look at this pivot.
Yeah.
December 1st. That was the last time we heard from it. It came in less than 2 weeks. It would be premature to speculate.
All right, so I'm looking at the
Yesterday, rate cuts are something that
237.50s
well, we did get some
if we don't hold this level.
reports.
All right, 237.50.
Show that they continue to be benign. I don't know. I don't have reporting on whether he's been speaking to Treasury Secretary Yellen, but after my conversation with her yesterday, he very much is coming around to her view. Remember, this is what she said about the potential for rate cuts.
All right, so 69 cents. What's the delta on these?
As inflation moves down,
Oh man,
it's
come
in a
on.
way natural for interest
I'm not going to have time to do my research on this.
because real interest rates would otherwise increase, which can tend to tighten financial conditions. But, they have 2 risks to manage. One is
18.
inflation doesn't come down back toward their target as they envisioned. And the other is
So that's 18.
the economy becomes too weak. And I'm going to leave that call to them.
18 for every dollar. That's a little bit high. Shit, man, it's not going to let me get it. Fucker. I could have got those 60s. Give me a bounce, baby. Give me a bounce. Bounce it. Bounce it right into that 9 EMA. All right, bouncing it. I don't want to, go against the grain here, but I mean, I just don't, I feel like you have some, it's already moving. Give me another bounce, please. Give me another bounce.
Economic views have been very important and have been spot on. I'm sort of sick of the term soft landing, because that's what it's all, especially after talking to her, it's all soft landing. And
Give me another bounce.
expects that to continue into next year.
Just be careful because
That confirms soft landing, or maybe we can call it immaculate disinflation, or maybe we can call it growth.
all right, what's the market doing? That's how I'm going to play this, right? What's the market doing? Market's just staying up here. It's just holding. It's got a bit of volume. My entry wants to be up here. If I get this 246, I will take a short. It's still holding that level. it's technically still held it. All right, I got my finger on the trigger. All right, and that is the 237.50 put. Watch the deltas on those. It's pretty high. It's 18. So for every dollar, you'll either lose or make $18, roughly, on a change. If I
The Fed also has a mandate to keep employment, strong, and they look at growth. So because they're weighing both
It's
of those,
getting volatile here.
the good economy that it has in the face of falling inflation, that's a big part of it. Because the Bank of England was also out this morning and much more in the ECB camp of, we still may have some work to do. I think they use that term on inflation and not signaling cuts because they're much more focused on the inflationary story, David. But
She's really volatile there. Let's see. What are you going to do? Is it going to break out? Boom, 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 boom. And like just give us a double top like I thought right there? You got some buyers stepping in.
There's no doubt about that. We're definitely going to debate it. Yields falling, stocks off the highs here. Dow's up 43 now on the heels of Powell. Our senior economics reporter Steve Leisman joins us with more on what comes next. Speaking of which, Steve, I see Breen now referring to claims and retail sales. They say no signs of a pickup in layoff activity, but they do not think these provide fundamental support to the outlook on the Fed funds.
Yeah, I mean, we might be back into this zone now, Carl, where good news is bad news if you really want those cuts to come early, and there'll be many of them.
Shit, I just had it for 63 cents, but I'm going to wait a minute. It's not time yet. I'm just going to wait. Let's see if we put in a double top up here. That's what I'm looking for. Are we going to put in a double top? Market looks like to be pulling itself around. Of course, my cat's going to come in and yell at me because she wants to eat. And that's okay. But I'm not missing this trade. The volume is clearly to the upside, but this candle here at 9:57, right? It's kind of painting a picture of a reversal. We're up there in resistance.
Concern there is about the other side of the mandate. I don't know if the Fed is looking at something scarier. I think you're asking the right question. What happened between December 1st and today? I went back and reread the whole interview at Spelman, and it's very hard.
There's just no volume. Doesn't seem like there's a whole lot of volume here.
He had a more dovish read than the market did on it. That was one. And two is I think maybe his committee started to get a little more dovish than either he was or he was ready to go. And the downside of all this, which you guys are already toying with, is have financial conditions loosened too much now. That's going to make the job of fighting inflation harder.
It's another test of VWAP.
You mentioned GDP. Goldman goes to 2, which is almost double consensus. And Jan's point last night was that some of these easing conditions from October on, they think are durable because of what inflation's done.
I think that's right. And remember, you had Rick point out that the 2-year is now down on the year, which is quite remarkable. Now, we did have Michael Gapin on Squawk Box this morning. He thinks financial conditions are still...
You had to be quick there to get that, which was the reversal. I just, you don't, it's pretty strong, but what I'm looking at is it going to pull back to yesterday's close at all? Is it going to pull back and test any of these levels? Right? Resistance? I mean, in order to, you got to pull back and test that 100-day moving average. It feels like, unless there's something I don't know, unless there's news that I don't know about. And there's the pop.
Steve, thank you.
That's what I was afraid of right there.
Of course, let's get more on the market implications of this move.
And then that's what happens, right? This is why I did not take that. Look at it just go. They got squeezed. I thought about taking the long, but I was a little uncertain on the trend. I mean, I'm not uncertain about the trend. I know the trend, but you know, if it was going to break out or not, because of the volume started to seem like it was fading off, right? And it felt like the volume was trying to pick up on the sell side, and I just want to see if we can get a pullback, right? Pullback into that 100-day moving average.
Pretty impressive bullish uptrend, a breakout in the indexes, and mostly, and not just because, the market is craving and pushing for lower Fed funds rate down the road, but because Powell explicitly tried to further delink Fed policy in the short term from what the economy has to do to get us there, right? The Fed doesn't anymore feel like it needs to really kneecap the economy to get the job done. And I think, in answer to the question you guys have been talking about, what changed recently.
All right, so where do we go from here? Where do we go from here?
We've got this run of data that have not just been pretty much right center in line with the soft landing thesis, but also coming in really close.
About 250, I guess.
Surprises and numbers that are exactly as you might want to draw them up have combined to create this confidence that the disinflationary trend is reliable at the moment, and there's time to figure out how that develops without having to do anything on rates for a little while. So now, in the very short term, the stock market's quite extended.
God damn it.
But you definitely are getting a little bit stretched out there, and so many things have been working together. You had the short squeeze, low quality rally in stocks that have been left for dead. You had the rate relief rally, pressure off the bank's balance sheets, the soft landing celebration, and then you had the repositioning. People just were not prepared for a strong stock market. They need to raise exposure. A lot of that stuff is probably played out. Maybe it's the first quarter's business to try and reconcile.
There would be your next buying point. If you want to get long, if you want to get long, it's 246. 247, I mean. That would be the area I would watch.
For the market these days and the equity rally. But now that we're getting to these levels, I do wonder, Mike, with the GDP picture subdued, even if it ticks higher for fourth quarter after retail.
If this thing falls out of bed, I was going to say.
Yeah, I mean, that's the question. First of all, the fourth quarter earnings forecasts have been cut pretty significantly. I mean, it probably sets off a pretty easy beat cycle once we get the reports. But I think the test of whether 2024 earnings are plausible.
Again, don't sit there and try and fight the trend, guys. Just, it's not worth it. All right, stock strong. It's going up on high volume. That's everything you need to know that it's strong. It's not shortable. All right, MSFT, Microsoft. All right. I need to find something. Wow, look at Google breaking down below this area, guys. If anybody's here, look at Google. Look at Goog. It broke below the 100-day moving average? Hold on, let me fix this because I know it's off. I know this thing's off. My camera, there's too much going on, man. There's too much to have my camera and shit running. I got time and sales on 2 different charts, level 2, options on level 2, the charts, you know what I'm saying? It's just a lot right now, and it'll probably freeze up. So, I can do it next week or something. It's not really, I'll have to, all right, so 50-day rejection. It's breaking below this level. It's filled that gap. All right, where do we look for? I mean, you don't have really any support until you get down to 130. Come on. God damn it. It's already down a decent amount. No.
When I'm not selling hot dogs, I invest in a fund that advances innovations like robotics. Fresh warm hot dogs straight
Yeah, but like I say, I will. We'll do it Monday or something. It's just I got a lot going on my computer. Like it's a lot, right? It's a lot. There's a lot going on here. All right, where's the market at? Where is the market? All right, market's pulling back. Tesla's just breaking out on higher volume. We cannot short that. That would be stupid unless we get volume that's up, that matches that buy side. Then it's not shortable. Amazon. Amazon did bounce. Let me see here. All right, so on a 15-minute chart, we have a nice wick right off that value area high. That's resistance, resistance, resistance. We pulled back to it, made it support. This might be a long here. Just make sure the volume is there, backing it up. Oh my gosh, what? That's that's crazy. That's not cool. That's pretty sick. Has a crush on his nephew. That's pretty sick. Ask him if they're from Alabama or Kentucky, from the South. All right, so let's see here. All right, so Google, there's lows making it resistance. I gotta try and put a trade on Goog because it is. Hold on one second. Hold on. There is a bit of divergence. See, I don't want to short it on the lows, but it broke that level. Watch out, because that is some nice volume there. Oh, 131.88. This might be stupid, but 132. 132. So I'm looking at the 132 puts. All right, 132 puts. Let me see what the deltas are. I want to see what the details are on this. 31 minus 3. So you'll lose $3 per dollar. Yeah, it is, bro. It is. Say you have a crush on your nephew. That's pretty sick. I use that word a lot too, though. Goofy. Fucking goofy ass motherfuckers. So again, you have a gap fill here. It looks like, guys. Looks like we have a gap fill right there. Yeah, there's a gap fill down here at 131.74. We just need to get I feel like we need to get the market behind us or something. I'm going to take this trade and on a bounce back up to this area. It's in the 9 EMA right now. 3 minute. I don't like that volume right there. Oh, that's because it's probably some selling involved. Let's see if we can get that 9 EMA entry. I'm trying to be patient a little bit, but I also feel like I missed some names that are really, you know, showing some strength of. Yes, absolutely. 200, baby. It's so strong. I don't want to turn away from Google, but yeah, it's going. It's already there. It made it. Nice trade, bro. No, I know you said it, man. You know, I know you said it. That's a nice, not so volatile trade. It's a, you know. Uh, did you see Oxy today? Did you see that they came out with new Berkshire was buying them, and look, it got right to our target of 59.50 today from this morning. That dude, we nailed that trade, bro. We nailed that trade. We fucking nailed that trade. Right? And I'm thinking the same thing. You know what I think's next? It's Baba. I think Baba might be next. I think you could get some China ADR news. I really do. I'm kind of seeing the same thing, but this is a bit weaker. Sorry, my cat was... She's praying. She's hunting. She's hunting right now in the window. Shit. Let me not deviate from what I was doing. Man, I do not want today to end. Like, I want to get something going here. So the markets are pulling back. They might bounce off this level, honestly. It's pre-market resistance. Alright, looks like Tesla is starting to become a little weaker. The strength isn't really there, but I'm not going to fight that trend. It's at 250. Watch, it'll probably rip here. Yeah. I don't know if anybody's noticed the divergence in yields. They've really started to reinvert themselves. I guess because of financial conditions. I think the bond market's telling Powell, like, yo, you're messing up, bro. Because, you know, the bond market literally, go look at the 2s, 10s, and 30s. They're so separated. The 2s are holding, and the 30s and 10s just dumped. So we'll see what happens. See if you get a pop here. Man, this sucks, bro. Fuck, man. I feel like I missed... I didn't know... Like, Microsoft. Microsoft had a nice... Oh, shit. NVIDIA was the other one. Come on. NVIDIA. Alright, so NVIDIA didn't move. AMD's moved a little bit. This could be a second opportunity for AMD. Alright. Doesn't matter if it's overbought. There's just a ton of money chasing the same object. Alright, so look at that. Pivot high. Oh, I don't like that volume. I do like this volume here, though. Look at that. Look at that bull flag. Boom. Boom. That's a failed breakout. See if you get resistance here. See if 140.74 becomes resistance. If not, then it could start to reclaim it, which I think it might. I don't know. It's already did the thing, so that move's already been made. Yeah, I was thinking two. Yeah, 250 is the obvious target. Um, I think that's where everybody's expecting it to go. It's putting in a bit of a bear flag or bull flag. I mean. All right, that's a pretty nice bull flag here. Come on. I'm sorry, guys. Just my mouse is fucking up. Excuse my language. All right, so
Everybody realized they were suddenly a candidate for inclusion in the S&P. Look at that. S&P, they're up 50% in 1 month. This is called the S&P inclusion effect. Stock tends to rise going into the
come
S&P
on.
500, and then of course
Oh my god.
sideways to down. You get all of the value going in as it's going into the S&P 500. All right, tomorrow's going to be big. You want to talk some more cashing? Yeah, you know what's really great here. We just caught up with Art.
I guess they're going to bring Art Cashin on CNBC. I'll turn it on when he comes on. Oh, Harry's. It's an old Wall Street place that I'd like to go. Look at Uber, guys. Uber's pulling back. Is Nvidia going right now? I thought it was just sitting there. It's got to hold this level. If it doesn't hold this level, you're going to make your way back down here to 475. It's just stuck here at this range.
A lot more spending. And that goes to the first issue that worries him in 2024, that the flood of new treasuries and less demand for our debt
478.
may keep rates a bit higher than people think.
The Chinese were big buyers of U.S. treasuries to protect their currency, not to put them in a trade disadvantage.
Alright, I gotta find something, man. I gotta get something. I gotta get a trade on here. I gotta get something going for myself. Alright, EMPH double bottom on that 100-day moving average, but the volume is not there. The volume's not there for this name. It's just screaming sell. That's not gonna hold, and you could see a gap fill coming in here. Alright, I might try to take this. Let me dot my I's and cross my T's here.
The broad market is very pricey. Valuations are nearing extreme levels in some, but not all sectors. I asked if that would be an issue in January when some people.
Yeah. Oh shit. The 100-day moved. Never mind. Take that back.
Oh, of course, and that's the problem. You know, the fear of missing out, the idea that train is leaving the station, the idea of got to get on board, and so you begin to ignore multiples, and you pay up, and that's where bubbles come from. People go in and say, yeah, but the train.
Yeah, is it? That was the other one that's on the list. I appreciate you bringing that up. That's the other one that was on my list. Let me go check it out. Anybody wants to get me a Christmas gift? I could use a mouse. This fucking thing, man. Alright. Let's do it. Amazon? I was thinking 170 or 147. But hold on. I guess I didn't mark it. I don't know. I had Amazon up. I was watching it. I'm gonna throw this fucking piece of shit mouse out the window. Oh, the frustrations. Comes with the territory. It is what it is. See what I mean? I just can't get nothing to work for me to just sit here and be able to do what I need to do. Instead, I'm just dicking around with other stuff. Because it's fire. I know. I like AMD too. That's what it's actually what I use. I have a Ryzen 7 in my computer. I like AMD as well. I was looking at this level. It already broke it. So I was looking at this pivot high here and see if we couldn't get some volume off of it. And you have a gap right up here, right? Let's see if we can get this thing into that gap. You're at VWAP right now. It's crossing in. Yeah, I did some of that yesterday. Let's go look at some of these airlines. So right now this is blinking. I push backspace and it doesn't do anything. I hit it twice. It didn't do anything. Whatever can hold me up. I should have got long. Tesla's just... I mean, it was pretty easy to see that it was going to give you that extension because look at all that volume. This is the biggest volume you've had in a while. And look how it just held this level perfectly. Right? When I looked at Tesla, it was right here. You had a double bottom off the initial morning low. Boom. Right? And it's just... What a trade. What a trade. I think that's it. Right? That's it. It's just going to climb and climb and climb. Alright, so you got to look at the daily chart and say to yourself, where's she going? She's really got room to 260. 260 is going to be my target on Tesla. If things get real crazy, you could see some pullbacks. Longs at 247. And so what I did was I ended up taking my 38.2 fib and my Fibonacci to see where it would be for highs to line up. To get my 38.2 at these levels. And look where it's at. 251. That's not... Not that that's how you use a Fibonacci, but... Alright. Let's see if we can find something here. Alright, it's 10:30. Oh shit, Meta. I forgot about Meta. I literally forgot about Meta. If we can get a bounce back to this previous like 330, 250 area, I wouldn't mind taking a short there. I wonder if there was... I think there was news or something with Meta. Oh, fucking Netflix. It's down 2%. Breaks that pivot. I don't know what... I mean, where is it going to go? Right? 465? 465? Yeah, I would look for Netflix to pull back to 465. You could start to see some of these names start to sell off because they've performed real well, and they're going to take the profits, and you could see this money being taken and put into other names. Some of the names that are beaten down. Fucking Bank of America still. It hasn't made a new high yet. Fucking Google. I'm sitting here going through stocks, and I forgot about Google. So we were just talking about the gap fill on Google, and it just did it. It just did it. Because I didn't stay on this name and continue to watch it like I should have. How do I get rid of this? That's the name I'm watching. Alibaba's what I'm watching too, man, because it's got a nice reversal on the daily. I'm just curious if there's going to be a catalyst that could bring this thing up. I want to see a pullback to 72, 71.60, and then I will be taking a shot at Baba. I'm going to use the restroom. I'll be right back.
Left his option. Thinks they're done. It's likely the next move will be down, not up, but he's keeping the option open. And the things that they're going to, and if I were there, I'd be watching very closely. What does service sector inflation do? Goods inflation's been very weak, but the service sector is still over 5%, and they want to see some improvement there. You've had a big oil rally. We've got the benefit of it in the inflation numbers. You could easily have that reverse. You see that today. And then the other thing is we are spending at historic levels. You've heard me say this before on the fiscal side. That he probably won't talk about.
But what I'm trying to think of, Anmo, you got to remember, if yields are going to pull back, what is going to benefit from yields pulling back? What's going to be strong? What's going to be weak? That's what I'm thinking right now, and I'm going to follow the trend. Solar stocks, right? Remember what I said yesterday? Solar stocks are interest rate sensitive. Rates pull back. What does that mean? And look what they did yesterday. Right? That's a 95 to 110, 115.20 today. That's a $25 move in a day and a half. So you can see where the strength is. All right, that's what I'm trying to keep in mind. Like, I want to get on a trend. I want to follow the trend. They're on their lows, so there's going to be money getting put into them. Things like that. But I got you.
It turns out, listen, this rate rally is good news for the fiscal side, and that the issue for this coming year, let's say we have 27 trillion of debt in this country held by the public, okay? The Treasury is going to have to issue 9 trillion of new debt this year, 7 refinance, and another 2 to finance the deficit we just ran. And the debt rolling off is probably in the low 2s, and it's going to get refinanced even in a positive case, probably in the low 4s. That's 200 basis points, or $180 billion more plus of interest expense before we've even started the year. So I don't think the Fed is explicitly going to focus on it, but I'll tell you, I'm focused on it, and I think the markets will be focused on it. We've got a substantial amount of Treasury volume that we've got to issue in the years ahead. Debt to GDP is over 100%, and I'm more focused right now on what the 10-year does over the next 3 to 6 months. I'm as focused on that as I am on what decisions the Fed makes and the timing of those decisions.
You think the 10-year stays below 4% through next year?
I mean, I don't know. The reason you've got estimates all over the map, for those who think it's going to come down a lot more, I think they're expecting a more severe slowing in the economy.
Yeah.
They're expecting even a recession. For those who think it's going to be sticky here, I think they're thinking the economy will be resilient. I personally think if we continue to run $2 trillion deficits into 2024 and we keep spending on these projects, I think the economy is probably going to be more resilient than people think. And the Treasury is trying to respond to this very quietly by front-end loading issuance, i.e. in bills, not testing the market's capacity for the 10-year and the 30-year.
Yep.
And I think this will be one of the things I'll be watching very closely is how deep is the bid for duration in the Treasury market. And I think the Treasury is going to be very careful about going overboard in testing that.
Agree. Thank you, Robert Kaplan. Really good to get your insight, especially as someone who's in the
Good to
room
talk to you.
recently. Former Dallas Fed president.
All right, we got news on
Goldman Sachs up
pending
5%.
proxy fight for Nelson Peltz that we've been talking about for some
Insane.
time. It's now official. Just a few moments ago, Peltz's Trian putting out a press release confirming what our own Jim Cramer actually had reported a few weeks ago, namely that they would nominate 2, not 3, 2 board members for Disney's board. Of course, if you recall, Peltz a year ago was in the midst of a potential proxy fight to seat himself on Disney's board, and then he gave up that proxy fight right after an interview that I did early this year with Bob Iger. They're back, and this time it is not just Peltz, but also another nominee, Jay Rasulo, which is an interesting name to note here because Mr. Rasulo had been the CFO at Disney from 2010 to 2015, and also had run the parks and resorts from 05 to 09. The Disney I know and love has lost its way, Rasulo's quoted as saying. As independent voices in the boardroom, he says, Nelson and I are confident the combination of his decades of experience at Disney and Nelson's significant boardroom skills and history of driving positive strategic change will get things back on track. Those are my words, not theirs. What I also would share with you from their letter is the following. They say the root cause of Disney's underperformance, in our view, is a board that is too closely connected to a long-tenured CEO and too disconnected from shareholders' interests. The board, we believe, lacks objectivity as well as focus, alignment,
All right.
and accountability.
Man, I want to find something with a nice setup. I'm trying to think of some names here.
Objectivity.
Is Oxy going to pull itself back today?
Reactive board self-refreshment on the eve of a proxy
I was
contest
happy
is
to at least call
in their
this
opinion,
name
both
out
because the new
yesterday.
directors were chosen without shareholder
We
input,
fucking
and they
nailed
don't
that.
seemingly own any
That was a
amount of stock.
perfect
They
call
do
out.
talk about, Sarah, the
Beautifully.
fact that non-management
It's just
directors
executed
collectively own
beautifully.
less than 15
Seen the
million shares of
divergence,
stock,
got ahead of it.
and Iger has sold the
Sometimes,
vast
you
majority
don't
of
want
his
to.
ownership stake as well.
You
I
know,
would
you want
make
to
a
pick your
point, though,
battles,
that
but I
the
felt
third,
really
believe
confident about
26 of the
Oxy
33
yesterday.
million shares of Trian lists are actually like Perlmutter's, not Trian's.
Which has been a Disney argument
Yes,
against him.
without a
let's
doubt.
I mean, if
see.
you just look at the stock price, so
American Airlines,
Peltz called off the last
BA,
fight in February with you.
HD.
The stock was at over $110.
Look at Home Depot,
A share
getting
is at 93
smacked.
right now. So, 2 questions. What's wrong with
So
Disney?
what does that mean? Oh,
And
that's
is
GD.
Peltz going to get what he wants?
General
Very much
Dynamics.
unclear whether Peltz will get what he wants at this point.
HD.
You know, I would have said it's somewhat of an uphill battle for him, potentially to seat himself. Jay Rasulo is a very interesting nominee, no doubt, especially given his experience at the company for quite a period of time, both in parks. Although parks is not the issue here. Again, to answer this other part
All
of your
right,
question,
so
I mean, it really
look
is
at
about getting streaming
Moderna.
profitability,
It went up to the
dealing,
100-day
of
and
course, with the
rejected.
collapse of the linear cable ecosystem, that of which we've all been a part for so many years. Iger talks about
You got a
these
lot of
challenges
sellers in that name. I
very
feel
much,
like any bounce back's going to get sold.
upfront, and
They're going to have
he
to
has
come out with
cost
something just
significantly, far beyond, in fact,
crazy
what they
for this
originally
stock
targeted. And so
to do what it
while
did
you
before,
certainly can
get
make
back
an
to
argument,
those
Sarah,
levels.
that, there needs to be more accountability, and that the board is
Defense
too closely
policy bill.
connected
This could
to
help the
Iger,
market,
so to
guys.
speak.
If they pass a
We're still
defense
seeing-
spending
we're
bill, this
not
could help the
seeing
markets.
Specifics here at this point in terms of
could.
what they would recommend that they do from an execution standpoint that isn't already perhaps underway at Disney. My expectation would be that will be Disney's argument, particularly with that recent board refreshment, adding Gorman, for example, from Morgan Stanley to the board.
Expectation is that Tryon will do so as we get into the proxy
that would be an
context as well. They usually release white papers and have all
Hey.
sorts of recommendations.
Exactly.
Hey.
Meantime, getting some news out of D.C. Let's get
Hello.
to Emily Wilkins with that. Emily, is this about defense policy?
Yes, so Congress has passed a major must-pass defense authorization bill. This bill, it's almost $900 billion, incredible critical piece of legislation that Congress is getting done today before everyone goes home for Christmas. And look, a lot of this bill does have to do with the military, a 5.2% pay raise for service members, additional funding for Ukraine. But there are also a number of provisions in here that deal with other interests and other topics. One really big one is AI. We are seeing dozens of provisions in here as the Pentagon and the military really look to adopt this new technology. That includes trying to see if they can hold a competition to get someone who can identify watermarks on AI and AI-generated content so you can tell what's real, what's fake. And they're also basically sponsoring a program telling hackers, hey, come ahead, test our AI, see where our faults are. We want to make sure that we are putting out a really strong product when it comes to the AI models as well as cyber defense models. There are also pieces in here on China and Taiwan, having the Department of Defense basically train Taiwan military and help boost up their capacity. And we also have another provision in here dealing with U.S.-Mexico trade, a huge, huge package for Congress to close out the year with. But of course, a lot that did not get done this year and will need to be addressed very soon in 2024.
We'll see them in a few weeks. Emily, thank you. Emily Wilkins this morning in Washington. Still to come with some potential rate cuts on the horizon. Is it time to start betting on housing stocks? We'll discuss that and get some top picks for 24 when we're back in a minute.
If CNBC could stop playing that fucking Mercedes or whatever commercial, it's fucking commercials are getting like irritating. They're getting old.
They can deliver.
Quick programming note. Big guest coming up in the next hour. SEC Chairman Gary Gensler, fresh off news that the agency is investigating investment advisors' use of AI. We're going to talk more about that move, his priorities, wins and losses from 2023, and what he's looking to do in 2024. That's coming up in the next hour, 11 a.m. on Money Movers.
Meantime, D.R. Horton and Pulte trading at all-time highs. Other home construction-related names like Masco and Martin Marietta also new highs. The Fed now expecting more rate cuts next year. What is the outlook for housing stocks in that environment? Joining us this morning is Oppenheimer's Tyler Batory. Tyler, it's good to have you. I mean, an important 24 hours we just had. What does this new rate environment do to some of these builders' margins and orders?
It's definitely a tailwind, certainly. And look, you look at the playbook for next year, which we think is definitely going to be turbocharged by what happened yesterday. I think the playbook and the outlook for next year looks pretty similar to this year, actually, for the industry. Still limited existing inventory out there. We don't really see that changing. So there's a market share shift underway where new homes or a lot of locations are the only game in town. The public builders, they have size, scale, access to capital that allows them to grow their inventory, buy down interest rates. That's attractive for the end user and for buyers. So there's really a market share shift going on where the demand is being funneled to new homes. It's being funneled to home builders. And for the stocks, we think it's a group that's really grown up. These management teams, the public builders collectively, they're very focused on returns. They've really adjusted how they think about deploying capital. So you roll that all up in the blender. We think there are some fundamental tailwinds here. And I think an outlook that's really quite positive for the industry and for the sector overall.
Is there an argument that if rates come down enough that it unleashes a supply of existing homes and the new builders do face more competition?
Yeah, it's kind of odd to think lower interest rates might not be a good thing for home builders, but certainly this tailwind in terms of limited existing inventory. The reason why there's not much existing inventory out there is because 40% of those homeowners with a mortgage have a rate below 4%. So if you have a mortgage rate that's at 3%, 3.5%, trading that for a 7% mortgage doesn't really make a whole lot of financial sense. Obviously, if rates start to tick down, that math starts to change a little bit more. So it is possible you could get some incremental inventory coming onto the market next year. But our perspective is lower rates would be a good thing for demand that would offset any incremental supply that might come. And then for the home builders, if rates are lower, likely means they don't have to offer as much in terms of incentives. That's a tailwind for their gross margin too. So from our perspective, with rates potentially moving lower next year, mortgage rates moving lower as well, we think that's a tailwind still for the industry.
I mean, it was a funny environment for home builders because the stocks
It's just so irritating when this thing does this with the mouse and everything. Alright, I'm going to look through some small caps, see what we have going on. I think we don't really have many viewers today. That's all good. It is what it is. Rome wasn't built in a day, right? One good trade. That's all it takes is one good trade. Alright, so what I'm watching is, let me go to this. Let me go to a bigger chart because I can't really see it, but I want to get... trying to figure out where this level is for Amazon. Obviously, okay, so there's a nice level. All right, now it looks a little bit better. As you can see here, this was 47.25, 47.73. So it's like, oh man, what to do? What to do? What to do? Let's go to a 5-minute or a 3-minute. are you?
You already know, Jacuzzi has been making water feel great for more than 65 years. And now they're bringing you this special TV offer. We're waiving all installation costs and postponing all payments for 1 year. Jacuzzi bathroom model has the design you'll love at a price you can afford. And best of all, they can install it in as little as 1 day.
All right, so that's what I'm going with. That's what I'd go with.
It's fabulous! Taking a shower had gone from being a joy to being a burden. I was afraid I would fall. I called in just 1 day. I had a shower I could feel safe in.
No matter your situation, Jacuzzi bathroom model has a
4750.
solution for you. From a safer, easy entry shower with features like grab bars and a custom seat to keep you feeling comfortable and independent at home, to a stunning family bath, or how about a luxurious upgrade with a timeless
All
design
right.
that'll look great for years to come. Plus, they're built to last.
Let's see if this market can start to turn itself around here. It did do a good job. The SPY did a good job of holding pre-market.
Absolutely perfect. It's exactly what I was thinking of. If you haven't already experienced what Jacuzzi bathroom model can do for you
Oh, shit.
and your home, don't wait any longer. Now is the best time to call. It's never been easier. Take advantage of this special TV offer today.
Go to jacuzzibathremodel.com or call 800-319-4242.
I might have to
That's 800-319-4242.
come on bright and early. Let's see here.
Call now.
It was a really good quarter when it matters most.
This growth was driven by transactions.
Come here.
They talked to John Ford and Morgan Brennan, closing bell overtime.
Yeah, I got you. I got you. I got you, boo-boo.
CNBS, CDverse announcing to acquire the North American rights to
You're not getting up here until I get you some ovens. Yeah.
VOX Fox announcing 3 new consulting offerings to accelerate secure AI adoption.
Okay. Small caps. That's what we were doing. Small caps, large caps, anything that has. Let's see if we can't find something here. Hold on, baby. Please don't press that button. She's gonna buy 20 contracts. She's gonna be, because I had the orders setting up and they're still up, oddly. Over here, Bobo. Come over here. Come on, I need my book. I need to see what my pre-market watch list is. Let me see what my pre-market watch list is. I need to wipe your eyes. Come here. Let me wipe your eyes, Mama. Let me see. No. Daddy just want to wipe your eyes, baby. It's okay. He's gonna wipe your eyes. It's okay.
STTK hitting new highs.
No, let me wipe your eyes. Let me get it. Let me get it. Get you. You know you're not getting away.
Company yesterday announced new data from their cancer treatment trial. That's Sandy Tango Tango Kilo, now up 47% today. STTK.
Was that so hard? Was that so hard?
Now moving above yesterday's high.
All right. Looks like Apple's getting ready to break down a bit.
And those are areas where we're expecting to see outperformance next year.
My stomach.
The rally broadens out because they got two.
All right, so you can see Apple looks like it's trying to break down just a little bit.
Performance. When you look at the equal weighted return of the market, it's about 10 or 11%. And actually, remember, my job is responsible growth of client capital, but also preservation
XBP.
of client capital. And when you look at the 2-year annualized return,
Of course, it goes to a fucking. God damn it.
significantly, it's like 2 or 2.5%. So if we still protect on the downside, and we're not out of equities, we're just not overweight or so concentrated.
All right, let's see if Tesla's still holding up or not. I wonder what. All right, so we went to 150. It's pulling back as expected. It's not pulling back on higher volume. It's pulling back on lower volume. So I would assume it pulls back. Maybe just hangs around, like just chops sideways, and then maybe you get an extra lift into the afternoon on Tesla.
Much less risk and much less volatility. So we're extending duration there to lock in higher rates for longer for our clients with equity exposure.
So if you had to choose, you'd choose fixed income over bonds, or over stocks.
We're overweight equities. We're overweight fixed income. Apologies. We're neutral on equities.
So you're lagging the market.
Alternatives because I think where capital is scarce and in tightening credit markets, there are very few places to go. So if you have money and you can lend in the private credit space, we really do like that area.
What is the Neuberger outlook on growth next year?
So our outlook on growth is we're cautious. We are cautious. You know, we think economic growth is going to slow. And with respect to the pace of rate cuts, whether it happens in March, whether it happens in June, I think we don't expect
Just listening
to happen in the first
to this.
You choose over stocks.
her.
We're overweight equities. We're overweight fixed income. Apologies. We're neutral on equities, and we continue to be overweight alternatives because I think where capital is scarce and in tightening credit markets, there are very few places to go. So if you have money and you can lend in the private credit space, we really do like that area.
What is the Neuberger outlook on growth next year?
So our outlook on growth is we're cautious. We are cautious. You know, we think economic growth is going to slow. And with respect to the pace of rate cuts, whether it happens in March, whether it happens in June, I think we don't expect all of it to happen in the first quarter. And if it does, that will be because there's something that is bad that has happened in the economy that the Fed is trying to protect against. So I think there will be thoughtful and responsible cuts next year, barring a surprise like inflation to the upside. We think growth will slow, and we think the job market is going to soften. But in that environment, we still see opportunities really in all asset classes, in fixed income, in equities, in areas that have been undervalued, in alternatives.
Munis? You always love munis.
We
You
still like munis, yeah.
All right, thank you, Holly. Good to check in with you on a day like today, especially.
I heard the craziest thing yesterday.
It's a big day for Intel. Let's turn to the chip space. They're making some AI announcements in the last hour, focusing on
Late night.
PC space.
I guess he was live.
At the Nasdaq, having talked with Pat Gelsinger.
Or whatever. And said that he was
The race is on to be the first to market with AI PCs. Like all of those PCs right behind me right now, Intel says they are first, despite Qualcomm actually announcing their own version very recently. I caught up with Pat Gelsinger just this morning, and he said they are already shipping these PCs and will have about 100
just
million
my cat keeps
units in the
kicking the
market by
damn
year's
door
end.
open
That's actually
and running in
five
and out.
times, according to them, 5 times more of their competition.
This kid was talking about
Speaking of competition,
Palantir and some other stock that was going to go 4 or 5 times, and it's like, So I forget. He said the market cap. Let's just say 50 billion, right? He said it could 4 or 5 times 10 that. What product are they selling that you think that they can 4 to 5 times revenue roughly, right? Like I'm just like, does he have any idea like what he's actually saying? Doesn't like. It's not that it doesn't make sense, but it's like what are they going to have to do to get to that? I know a lot of people are on Palantir and stuff. There's a lot of value with Palantir, but I don't know. It's not about Palantir, but it was just like some of the things that he was saying. I'm like, 4 to 5 times. You go 4 to 5 times your money in the next year or two. I'm like, do you understand? You're talking about going from a 50 billion market cap in a tightening cycle, and you're talking about going from 50 to nearly 200. Right? That's what that would be, right? 50, 100, 150, 200 billion. What products are you selling, and what industry are you going to take over and acquire, and how are you going to obtain that is the question, right? Because if it's not just products, are you going to be buying companies that have other products already out, and like that whole ordeal, and then managing it? It's like not that easy. I don't know. If I could, if I had, I don't know who it was. I never seen this person before, but you know, I guess when you think stocks just go up, and I don't know, it's just what he was saying. It just kind of. I'm like, do you hear what you're saying? You hear what you're saying, that they could 4 to 5 times in the next year or two. You're saying they can go from 50 billion a year, which would be what, 15, roughly around 15 billion a quarter, to 15 billion to 50, like what their market cap is right now is what they would be making in a quarter if you're talking about 4 timesing that company 4 times. Do you know what I mean? So I don't think he really fully understood what he was saying. Whoever liked the stream, I appreciate you. I appreciate you. All right, so I am watching. I'm trying to find something. So if anybody has anything, it feels like we kind of just. I feel like I missed some opportunity there with the Tesla long. I wasn't comfortable in taking the long because I didn't feel like it had enough room to the upside, right? You're talking $5. That's not a. You know what I mean? I need more than that. All right, I just made a sandwich. So I'm going to scan around the markets. You guys have any questions? Throw them in chat.
Wells Fargo with a 100-page 2024 outlook for banks this morning, most notably swapping out its top pick for the sector. JP Morgan goes to number 2. Citi now holds the top spot, bullish on Citi's multi-year restructuring plan and the potential for future buybacks. Wells also thinks that Citi's earnings growth can accelerate long-term. Price target there goes to 55. That would be welcome news, as you know, Sarah, to a bank that's had to do a lot of internal restructuring lately.
Absolutely. The SEC, speaking of banks, making progress on a number of new rules across cybersecurity, treasury clearance, short selling. On top of that long list, SEC announced this week that they will probe investment advisors' use of AI. And the future of crypto still hangs in the balance. Joining us to discuss all of that in an exclusive interview is Chairman of the Securities and Exchange Commission, Gary Gensler. Chair Gensler, welcome. Good to see you.
Good to be with you, Sarah.
I mean, I just went through so many different rules. Maybe we just start there, because it's one of the criticisms of your leadership at the SEC that they're just coming so fast and furiously that you're not taking the time to really look into the impact and consequences of those rules. Isn't it better to do less and get them right? How do you respond?
I think we are getting them right, Sarah. I think we work for the American public, both the investors that watch your shows and the people trying to raise money, the issuers. Those are our clients, and we're trying to update our markets for the 2020s. We put these proposals out to public comment. We get a lot of feedback. We generally take between a year and 2 years before we finalize these rules. Yesterday, we finalized a very important set of rules around the Treasury market. It's the base of our entire capital markets, the U.S. Treasuries. It's how the Federal Reserve does its monetary policy. Of course, it's how we fund ourselves. That rule was out there for 18 to 20 months of comment and feedback from the public.
No, on the public point, so you put it out for public comment and then make changes. Why then do you not go out and repropose it so it can be vetted again with the changes?
Because we've already put it out there, Sarah. We've gotten a lot of feedback in terms of this set of proposals for the Treasury market. It's really important for the markets that we lower the risk in these markets. You might remember, as COVID was breaking out around the world, there were challenges in our U.S. Treasury market. Even the year before that, in 2019, there were very significant challenges in the funding of the Treasury market, what's called the repurchase market. And I would note, this is a market that has a lot of leverage. Hedge funds are borrowing from banks and broker-dealers through something called the prime brokerage relationship, but they're borrowing from them through the repurchase markets, and we can lower the risk in the system for the American public by implementing this rule.
I'm curious what you're doing on AI, because I know that's new. It's something you're focused on. You've warned about the perils of AI when it comes to investment. I think warned that they could create a financial crisis. So how are you tackling this issue?
I thank you. I started studying this actually when I was honored to be up at MIT as a professor. Artificial intelligence is I really truly believe, the most transformative technology of our time. As transformative as the internet, but even if you go back to the 1920s and the whole industrialization in the automobile. AI is already being used across finance, whether it's just in call centers, compliance, various ways you can process claims at insurance companies and the like, but it's also being used in those robo-advising apps and brokerage apps that you might know of. So what we've done is we did put out with the simple concept that you need to keep the investor's interest ahead of that of the investment advisor or broker or dealer, and you can't have the algorithm putting the investment advisor or the broker dealer ahead of the investor.
Chair Gensler, I'm wondering, the performance of these tools and their capabilities, is it running ahead or behind your initial expectations?
I would say that we're in a mode of acceleration, that the technology curve, if you wish, is probably picking up, and it's about the computational power, and it's about the data analytics behind it. The buzz, of course, is around generative AI, but in finance, it's already being used. And I would say this, I do think that there are natural economics around artificial intelligence that will lead to dominant or single source based models, just like we've seen elsewhere in technology. I mean, we largely have one search engine that we all turn to, or maybe 3 cloud providers. I think similarly we'll end up with a very short list of base or foundation models in artificial intelligence. And unfortunately, if the markets are relying on directly or indirectly one base model, that could lead to real problems in finance and a future financial crisis. We could be sitting back on this program and we'll be saying, it was that base model that got it wrong, and we all kind of invariably went off a cliff based on that model.
Are you seeing symmetry between our policy efforts in this country and Europe and Asia?
It's a great question. Each jurisdiction is taking it a little differently. In Europe, they're actually passing laws through their parliament and taking a different approach. I think that we are fortunate. We probably have the lead in terms of the technology and the private sector here in the U.S. And then I would say, just thinking about China for a moment, more of the development there is happening at the official sector. I like our approach. It's in the private sector. But there, they may have some advantages where they can take the data from 1.4 billion people and aggregate it all together at the official sector.
How much do you take into account, Chair Gensler, worries about stifling innovation and technological deployment and advances when generative AI is coming? And a lot of people think it makes us much more productive and can help democratize the markets even further, like other technologies have.
Again, I think it's even broader than generative AI, and artificial intelligence has probably already boosted economic activity. I mean, it's changing science, it's changing medicine and radiology, and it's changing finance. It can lead to greater access and lower cost. Even those robo-advisor apps can have lower costs. But it doesn't mean there's not challenges as well around explainability, around bias, around accuracy. And these challenges we need to sort through as well.
How is the, on another topic, approval process going for spot Bitcoin ETF? I know you're facing a window in early January. What does that look like?
Well, Sarah, we have, I think it's between 8 and a dozen filings. I'm a chair of a commission. I'm not to prejudge anything, so that's going through the process right now. And as you might know, we had in the past denied a number of these applications, but the courts here in the District of Columbia weighed in on that. And so we're taking a new look at this based upon those court rulings.
Market's excited about it. You're referring to the Grayscale, the subsidiary of Digital Currency Group. It doesn't look like you're objecting to that ruling from the courts, which is why the market is excited that this might finally happen.
Well, look, Sarah, we do everything at the Securities and Exchange Commission within the laws Congress has passed and how the courts interpret them. We look keenly to the economics. But I would say this about the crypto field. This is a field that your viewers should be aware that there's a lot of non-compliance with the securities laws that are there to help give you the disclosure so you can make the investment decision, but also to protect you against fraud and manipulation. And there's been far too much fraud and bad actors in the crypto field. There's a lot of non-compliance, not only with the securities laws, but other laws around anti-money laundering and protecting the public against bad actors there. And so I would note, this is a field where you still don't have the fundamental information on many of these projects, and the intermediaries, the so-called crypto exchanges, are commingling and doing things that we do not allow anywhere else in our financial system.
There is this strange kind of thread of thought within crypto that because there have been high-profile either convictions and sentencings or examples of cooperation that somehow fraud's been flushed out. I would imagine you'd push back on that pretty hard.
I just think that I take the other side of that. I think these repeated bankruptcies, these repeated frauds, we've brought somewhere between 150 and 175 cases either settled or litigated successfully. And what we've found is this is really the Wild West, and it's around the globe. I would say, again, this is a small part of our U.S. capital markets, but it can undermine confidence when so many people have been hurt, and all they can do is then stand in line at a bankruptcy court. And it's not just one actor, and it's not just, oh, it's just a few bad actors over here. This is something that pervades a lot of this field globally. And it's hard for the good faith actors even to compete because there's so many challenges elsewhere.
Well, we eagerly wait that decision. I just also have to talk to you, Chair Gensler, about some of the legal challenges. Just this week, a group of hedge funds sued on the short selling disclosure rules that you've proposed. There have been numerous other legal challenges to some of yours, the buybacks ones, the private fund industries. Do all the legal challenges undermine what you're trying to do?
Look, we do what we do based on the law and how the courts interpret it, and it's part of our great democracy. These industry trade groups or others have a right to go into court, but I'm very confident about the work that we've done. And let me just address a couple of the things you said. Transparency helps our capital markets. Transparency, economists have studied, lowers the cost of capital formation on the one side and raises the returns for investors because it drives to greater competition and efficiency in the middle of the market.
Well, they say though it discourages short selling and shames them, and it's an important part of the market structure.
I would say Congress weighed in after the financial crisis and mandated that the SEC address and have rules around the transparency around short selling for investment managers, I think is the term. And I got to the agency 9 years later. The SEC had not done a congressional mandate. I'm very proud that we took it up. We proposed something based upon a lot of public feedback, and we adopted a rule. And I think that it's a really important, I mean, for many of those investors out there, the everyday investors that might be investing and looking at these markets, remember the events around GameStop. What was that? Nearly 3 years ago. And no, seriously, like about transparency in the short selling market. We have a lot of transparency on the long side. Let's add the transparency on the short side that Congress mandated.
I only chuckle because of the list of issues you've had to tackle, from crypto to China to SPACs to memes to AI. I can't imagine it's anything like what you thought when you took the job.
Look, this is a great privilege. I pinch myself. I can't believe that this boy from Baltimore, neither of my parents went to college, has this opportunity, and I'm serving my third president. But more specifically, the great honor of being part of the 5,000 people at the SEC, and that we help oversee the markets and help those issuers and investors. But you're right, it's a wide swath of parts of the market, and the base of that market is the U.S. Treasury market. I'm just bringing it back because I'm so proud of what we did yesterday, and there's a lot of leverage in that market, and there's a lot of risk from time to time, and we want to promote greater efficiency and competition, but also resiliency in that market. We've got some really important projects around driving greater efficiency and competition in the stock market that you follow, the equity markets, and as like.
Well, there's been pushback on those proposals too. So can we expect another 24 or so rules in 2024?
I don't want to prejudge anything, Sarah, but you're right about the figures. We've now, I think, adopted about 30 proposed rules have now been adopted, again, from China to the Treasury markets to the transparency projects we talked about. But there are really important projects, and you're right, it's about 25 or so, that we are still considering the public comments. and we're taking them on only when the staff is ready, the commission's ready, and it's based on the economics and the law.
Well, we look forward to talking to you about each and every one of them, hopefully. Chair Gensler, thank you very much for taking the time.
Thank you so much, Sarah and Carl, and happy holidays to all your viewers.
Happy holidays to you.
Got a news alert on GM today. Company announcing that its Cruise robotaxi unit will be laying off 24% of its workforce. It's roughly 900 employees. Layoffs come a day after Cruise dismissed 9, quote, key leaders for the company's response to that October accident that led to the fleet being grounded in San Francisco. It has been a tough time lately for autonomous, whether that's in the experimental or the practicing phase.
Kind of puts another one in the category of announcing layoffs with businesses that have been challenges. It's not like mass layoffs we're seeing, but the announcements are piling up here after Etsy and Hasbro and now GM Cruise. Up next, why European stocks are rallying despite the ECB's effort to push back against rate cut bets next year. That's next.
Plus, if you missed part of the show, don't forget to follow and subscribe to our Money Movers podcast, available wherever you get your podcasts. We're back in a moment.
Просто потянули чуть-чуть. Вот. Снимается все довольно легко. Не как в предыдущих Теслах, где вы можете сломать клепки. Все. Снимаем камеру. Как ее снять? Вот и все. Демонтировано. Если вы хотите снять эту накладку, то вот здесь 1, 2, 3, 4, 5, 6, 7 болтов. Также она простенько снимается. Если было полезно, ставьте лайк, подписывайтесь. Просто потянули чуть-чуть. Вот. Снимается все довольно легко.
European markets mostly higher this morning. The German DAX crossing the 17,000 mark for the first time earlier this morning before giving back some gains. The bullishness comes as the majority of central banks hold rates steady. Norway was the only exception. The European Central Bank, Bank of England, Swiss National Bank all staying put. Norway raised by 25 basis points, but says it expects to maintain the rate for, quote, some time ahead. Bank of England agrees, saying that monetary policy is, quote, likely to need to be restrictive for an extended period of time, singing a different tune than the Fed. And ECB President Christine Lagarde expressing similar sentiment as well.
We don't think that it's time to lower our guard. And we believe that there is still work to be done, and that can very much take the form of holding.
Lagarde also mentioned that the ECB did not discuss rate cuts at all during their meeting, which was in contrast to Fed Chair Powell, what he said about how the natural thought to go from rate hiking to stopping would be rate cuts, and that they did discuss it at the meeting.
Were you satisfied with Leisman's answer about the difference between us and Europe and
For
in the
sure.
mandate and the
All right,
timing
we
of
get
our initial
above that
hikes?
level
Of
and
course.
start
And
closing
his
up
point
here.
was that
I
we started
will.
earlier.
I mean,
we
you got
did
room.
more here in the U.S. So maybe that's
I hate
why.
to get long
but
up here. I
also,
was
you
thinking
have
of
to keep in
literally
mind that they have a
thinking about
single
getting
mandate
long
in
at this
Europe,
double bottom
which is just
VWAP,
to get
but I wasn't paying
inflation to target,
attention,
and they're not
and it
there
kind of
yet.
just took
And
off
the Fed
without
has
me.
that mandate too, but it also has a mandate for
It's up
jobs
4%.
and to keep employment going,
You know,
and they have to be worried
I don't know
about
if there's
the
a
other side of it. I
catalyst.
think Robert Kaplan of the
You know,
former
what
Dallas
I'm
Fed
getting
came
at
on
is,
with
you
us
think
and
this
said
thing's going to
the
do
backstory
8%
here
today?
is they don't want
You know,
real
on no
rates
news?
to be rising because
Probably
when they
not.
pause,
So
that does happen.
I
with
wouldn't be
inflation
surprised
coming
if this
down.
thing just
They're
ends
also
up
still
just
doing
pulling
quantitative
back and
tightening.
we test
so they
this
don't want to
100-day
be
moving
choking
average
off what
again.
appears to be a soft
I
landing
don't
or
think,
immaculate disinflation
you know,
by
until this thing
continuing
starts to
keep
get
a tight,
squeezed,
restrictive
which I don't
monetary
think it's
policy that
done
gets
that
even more
yet.
restrictive, and that's why he pivoted.
Wow, 10-year now.
I don't think
below
there's a
3.9.
reason
We're
for
gonna
a
watch
big
that.
move
Let's get
just
a news
yet.
update with Kate Rooney. Morning, Kate.
Hey, Carl, good morning. A big reversal
that's
this
Tesla,
morning
by
in
the
Rudy
way.
Giuliani's civil defamation trial. His lawyers say he won't take the stand today as the only defense witness, which means proceedings will go into closing arguments. Then the jury will be left to decide how much Giuliani, the former New York City mayor and longtime Trump ally, will have to pay two Georgia elections workers for making false statements accusing them of election fraud. And Danish authorities say 4 people have been arrested on suspicion of planning a terrorist attack. Police arrested 3 of the suspects in Denmark and the 4th in the Netherlands in overnight raids. They have not identified the suspects or identified the possible target of that plot. And the U.S. is expected to sign a defense pact with Russian neighbor Finland next week in a deal that would allow Washington to send troops
Here's going to
the
be
country. The Finnish
your tell
foreign
right
minister
here
said
if
today
Tesla
that the
can
NATO members'
hang on
defense
to this
minister
level
will
right
be in
here.
DC on Monday to
If it can
confirm
hang on,
defense
you got a
authorization
shot.
agreement. Carl, back for you.
I mean, I guess I could argue that even if you pull it down here to 247.36, but I think this is your level. I think this is the level Tesla would need to hang on to if you're going to make new highs today. Look at the volume. You're getting an increase in volume on that sell-off. Or pullback, I should say. Getting an increase in volume on that pullback. Let's see here. INHD. Let me turn that down. Sorry, I know that was probably loud. This should be. This should automatically zoom. Oh, is this an IPO? Yeah, I'm not sure what's going on with this name, but it's got, come on. Jesus Christ. I don't know what's I don't know if this is an IPO. Maybe somebody out there knows. I don't know, but, it's halted. So, keep that on watch for later. I'm just going to run through some names. I know NVIDIA was still stuck in its, in that little range. I don't know if it broke out. Yeah, see, it's still just sitting there. It's not moving. It's pretty much flat. Isn't that crazy to say Nvidia is down 0.5%? It's pretty much flat when it's been making $20, $30 moves at a time. So this could be nice, right? It sits here, it consolidates, bang, get a nice breakout through this resistance level. I almost got short that name this morning, but I just felt like wasn't going to give us enough. Just didn't feel like it had enough volume. To me, it didn't seem like it was going to give us that pullback down to where I thought it would get to. It's got a lot of buying and selling in here, so that's what's, kind of holding it up, giving you that chop. See if Google bounced off of that level. It has. Where is it? So this is a close. Well, it was a close, I thought. Let me see. Because there was a gap down here that I was. This was the target for a gap. Oh, it did get to it. It did get to it. All right, so there's your gap right there. Didn't quite get to it, but it did quite get to it. So I'm just going to scan around. I didn't have some of these on watch. I had Tesla on watch. Baba, it's making new highs. This is a name I want to get long. It's kind of got the same setup as Oxy yesterday. We talked about Oxy and the reversal and the divergence we were seeing on that, and it's up huge, right? It's already at the target in 2 days. So, and there's Oxy, and it's just hanging out. We called this out yesterday and said here, right here, pre-market, pull back to yesterday's close, and that's exactly what it did. Get long, right there, double bottomed right at yesterday's close, and the rest was history. India November Hotel Delta. All right, so we're getting gaps on this name, guys. So I don't know if it's gonna be. I don't know what's going on with this thing, but if we can get a pull, I'm gonna watch this. Yeah, so it is a. I am going to watch this name because these are halt ups. You could get this thing could go to $30 before you know it. You just got to be quick. You got to know where. You got to know when it's halting, when it's unhalting, so you're able to get in. Be careful. Trading names like this if you're a beginner or a novice, because you can and will lose your money if you don't know what you're doing. Let's go see if we can get the halt time for this when this unhalts. This is insane. I literally didn't get long this name at the 100-day moving average like I should have. Look, even more volume today. Wow. That's pretty crazy. That's pretty crazy. I forgot the ticker. Recent INHD. Okay. It sucks I can't get this, like, just bring this thing over to the right a little bit. It sucks that it, like, makes it stay to the left. It's such bullshit. You should be able to move it over. If there's nothing there, it should be able to move. INHD. Let me see if there's something else on there. I'm going to look at another chart. No, I don't even know, but I know it's a it's an IPO. I wonder if the 2 year is going to try and bounce here. I'm looking at 4.2 for a bounce on the 2 year. I'm not saying that it's going to go out to new highs or anything, but I'm just looking for a, we sold off, get that pullback. That's all. This could be a nice trade here on Adobe, guys. This could be a really nice trade. All right, we are, man, maybe it's 595. You'd have to give this thing a few dollars. This looks really good, guys. This looks really good. I'm telling you. 90 MA, 15-minute chart, coming right into resistance. It broke that major support level, right? This pivot low here. Support, right? It broke it. It's into it. Support, support. Well, I guess you call that somewhat of a double bottom. And now you're right into it. It's already sold off so much. We'll just watch and see, right? You start getting some volume coming in here on that rejection. You could get a sell-off. Let's see. Not really a sell-off, but let's see if this thing wants to pull itself back. Let's see.
Dow Jones Industrial 1,000. The 10-year lowest level since July. Small caps with a 52-week high. The market, Josh, is raising now the probability of cuts. March, 85%. May and June, 100%. Hotsiest over at Goldman. We expect earlier and faster cuts from the Fed. Our question to you first, does this pivot clear the way for the next leg of the rally?
I think the next leg of the rally didn't wait for this pivot. I think it front ran it. Let's put up a chart of IWN. This is small cap value. This is the place to be. We talked about this around Thanksgiving time. If you're betting on a year end where everyone's chasing and people who weren't in NVIDIA and Apple, what are they going to do? We said this is what they're going to do. This is what they did. IWN, small cap value ETF, is up, get ready for this, 18% over the last 30 days, which of course is ridiculous until you realize how much catch up it has to play just to get anywhere close to what large cap S&P 500 names did. That 18% is versus 7% total return for both the triple Qs and the SPX. So that catch-up trade has worked. We knew it would come. It did come. It comes every year. You get this much outperformance from the large caps. I think there's still room. Look at the 52-week high list today, away from small caps. It's anything but large cap tech. I guess Intel, with the exception of Intel, but it's Blackstone, BX, Lennar, Pulte Homes, Home Depot, Wells Fargo, JP Morgan, 52-week highs. None of those companies do AI. No AI. Okay? That's the message. The catch-up trade is working. I think it's got room. It can continue to work.
Okay, so Rob Sechin, Goldman's head of hedge fund client coverage, Tony Pasquarello, normally puts a note out, into the weekend. He put one out today, just before we came on the air, in which he says, quote, I suspect there's still a little bit of gas left in the tank. To Josh's point on small caps, he says this was the exposure that most everyone in the community was short at some point in 2023. Well, those shorts are being covered. We've entered a seasonally strong period. Furthermore, a backdrop of easier financial conditions alongside a totally decent growth trajectory fundamentally argues for strength in small caps. Do you agree?
Do agree. Higher for longer has been taken off the table. Refinancing risk has come down. I think there's going to be a broadening out of markets. When you look at this from a macro level, Scott, there's a number of ways that it can play out. It can play out awesome, too awesome, or there's a problem. And we're in kind of the awesome camp for equities broadly because of the broadening out that Josh talked about yesterday.
But you haven't been, right? You've been a little more.
Second half of the year, we've been invested.
Yeah, but you haven't been using words like awesome to describe what might lie ahead.
We were in the higher for
now,
longer camp,
right?
We were in the higher for longer camp. We thought inflation was not going to break the way it broke, and obviously there's a lot of issues out there. It's not like we weren't invested, though. We were invested.
I hear you.
And I do think when you think about the awesome side of this, you're going to see benefits from animal spirits, IPO activity picking up, M&A activity picking up, while the labor market continues to remain strong as economic growth may accelerate. Where it becomes too awesome is kind of like 1998, after long-term capital, when Greenspan fed the fuel on the fire and it kind of lit too high. But that can also be positive because we can stay positive for longer. The problem, and this is what I want to get to, which I don't think is going to happen, is if the Fed starts to cause this reacceleration in inflation, because energy prices have been key to this. As you pick up in economic activity, you get a weaker dollar, you're going to start to probably see some reacceleration in energy prices, which may change the inflation narrative.
Maybe. I mean, so I'm still hearing Jimmy the Bull, about the lagging impact of what the Fed's already done from Wolf. No change in their bearish outlook for the market for 24. Some are pointing to 89% of stocks above their 50-day as a reason to sort of take a pause. And then, I spoke with Gundlach yesterday right after Powell finished on closing bell about the idea that is money going to come out of money markets because rates are continuing to drop and then push into the stock market, and that's going to fuel the next leg of the equity rally. Here's what he told me, because he thinks that might not be the case.
I think the logic that people have that money market bloat is going to go into the stock market is wrong. I think it's unlikely for investors to go from risk-free 6-month T-bills to the Magnificent Seven. at massive PEs and all-time highs on the Dow Jones Industrials. I think they're much more likely to go from their mountain of cash in T-bills into bonds.
I don't agree. Big surprise there, right?
But, you know, by the way, Rob doesn't agree. Josh said yesterday, right after Gunlock finished, that with all due respect, he didn't agree.
Yeah.
So give me your reasons why you don't.
I mean, look, I can understand his point that T-bills at 5% are attractive, but they're not as attractive as stocks that, depending on what sector you look at, might get 5% in a month. Now, look, I am a risk taker. I appreciate Jimmy the Bull as the moniker. But here's how I look at it. Here's how I rationalize it. I'm not just a guy with a nickname. If you look at, say, non-tech stocks, right, a lot of these companies have had fabulous operational results. I'm talking about, you guys know these stocks with me, General Motors, Alaska Airlines, Delta Airlines, Wynn Resorts. I can go down a long list of stocks whose operational results have been nothing short of awesome, okay, but their share prices have stunk. And what you're seeing right now is the market realize that that recession is less and less likely as the Fed pivots, and that the durability of those awesome operational results is intact and is a giant mismatch from where the share prices are. So that 5% in a month, I mean, look, yesterday, look at those stocks I'm just naming, we're up 5%. A lot of them are up 5% today. I mean, if you want to play it safe, God bless you, take the T-bills. If you want to make some money, get in the stock market.
So the problem with the T-bills, too, so you hear people screaming 5%, 5%. Dude, it's an annualized 5%. If you don't own it for a year, and definitionally, you buy a 6-month T-bill today, you will not own it for a year.
And you roll it.
In 6 months, you will roll it. You will not be rolling it at 5 unless the Fed stays where it is right now, which they're already telling you is likely that they won't. So let's be careful when we say, oh, it's just 5% risk-free. Annualized. That's not 5% in your account. So everyone needs to chill out with that also.
I feel like there are a couple of debate points to have around this whole issue of next leg of market rally and where it comes from, whether it's a rotation out of mega cap winners or if it simply is money from money markets, which Pasquarello at Goldman addresses as well, where he says, quote, there's nearly $6 trillion sitting in money market funds. Household net worth around $150 trillion. Wage gains continue to outrun the rest of the inflation basket. So if households want to add some value stocks to their portfolio, there are plenty of ways to do so that don't involve selling the winners. So he's making the case for money coming out of cash from money markets and going into stocks that you don't necessarily, Rob, have to have a bleed from mega cap tech to make anything happen in these other lagging areas.
You don't. You could see it happen in financials, and we're seeing that in the last few weeks, frankly. You could see it happen in industrials. You're going to see it happen in other capitalizations like small cap, which is ripping, and I think that continues. I really do. I don't know that there's a bell that's going to ring to say to everybody, hey, now's the time to get out of these large caps. They're very fundamentally sound businesses, but you are definitely going to see a broadening out.
Can I put a little mustard on that for you?
Yeah.
Because I like what you're saying. I did this after, so we were on with Gunlock last night. He made the comment, stocks are more overvalued than they were a few months ago. I think it's important to point out some stocks are, and Jeff is right about that. But I made the comment on the whole, it's just not true. This is what I want to share. On a forward basis, we know the S&P 500 is selling at 19.3 times forward earnings. That's not cheap historically. It's obviously not cheap in absolute terms. Mid caps and small caps are both 14 times forward. But even more interestingly, even in the large cap universe, ex-tech, the S&P 500, 26 times, pull out tech, it's 17. So if I tell you, you can buy the average non-tech S&P 500 name at a 17 forward PE, and the next move for rates is more likely to be down than up, you probably would look at that and say, okay, great, I already bought a lot of cash this year. I'm part of that group that added to $6 trillion in money market. My next move should probably be to add a stock, even if it's a large cap, if it's non-tech and you're buying something at 12, 13, 14 times earnings. It's probably a more productive move if you could think about it from a 3 to 5 month standpoint, not is this the right decision for the next 30 days?
In equal weight, Josh, equal weight trades at a discount to where it typically does. The equal weight
Equal weight's at what, 15? times, right? 14, 15.
And I think history is somewhere north of 16.
Maybe growing as we're, watching the market sort of go down the tracks. Speaking of buying names, not small caps, Jimmy bought United Health.
Bought United Health. There's a little bit of a story here. I'm going to do this out of order with where you started, which is to say I sold Nike. Let's start there.
Well, you sold Nike, you sold Bristol. You used some of the Bristol proceeds to buy United Health. Just tell me the buy first, and then we get to the sell part.
Okay, so United Health is because I want healthcare exposure, all right? This sector has been a dog. We know that. It's lagged all year. I do think that the value is there. The dividends are there, and I want to have healthy healthcare exposure, no pun intended, going into 2024 for what is likely to be a mean reversion trade. But I had to buy United Health, more or less, because I sold Bristol Myers. Bristol Myers is typical of the healthcare sector this year. It's just done awfully, and I needed that tax loss, Scott, because I sold Nike. Nike, I'd held it for 2.5 months after the last earnings report.
That's short for you.
And you know what? It's up 27% in 2.5 months. You're exactly right. It is short for me. The market gave me this gift. I had to take it, Scott. Think about it just from a psychological point of view. Do I really want to go into next week's earnings report and risk that gain in 2.5 months? The answer is, it's a rhetorical question. Of course I don't. And I hope that holders do well. I hope the earnings are great. The stock blows it out of the water. I got 27% in 2.5 months. That would be good for a 12-month return for me. I'm going to take that money. I'm going to find other things to do with it.
What do you guys make of these moves? Rob, you first. I mean, you own UNH. You own Bristol Myers. You don't own Nike, but it is an interesting strategy to sort of take the money and run in a short period of time from a name like Nike, where Jim surveyed it for an awfully long period of time, wasn't ready to get in for an awfully long period of time, then did. Now he's out.
Totally get what Jim did and appreciate what he did. We did the opposite moves of Jim, though, in healthcare. We've been trimming UNH, have owned it for a very long time, and have been a steady trimmer on declining profitability, growth, and free cash flow. We did buy 2 weeks ago on the show BMY. So stocks underperformed the S&P by 50% year to date. It's down 37%. I'm sure there was some tax loss selling related
Well, it was
to
to
that.
offset Nike. Right? It was to offset the gain in Nike.
Got it.
It's portfolio management.
Yeah,
That's all.
just portfolio management. Stock's cheap, trades at 7 times. I think healthcare is going to be a beneficiary of this broadening out, and that's why we took a slightly
Why
different
is Bristol
tack than
Myers
Jimmy.
so terrible this year? And what's the catalyst that you think will turn the trend around? I don't follow it closely. I'm genuinely curious.
It's the business has been quietly performing well, and our thesis on that is that earnings are bottoming here. So really simple. We're trying to find ways to add value stocks in portfolios, and that was one that 2 weeks ago we talked about on the show.
Almost a 5% dividend yield. Is it solid? Are they debating doing anything with it?
I don't think so.
Okay.
Why don't you think that the gains, which by the way Nike called top pick today at Barclays, and there's been a lot more positive commentary on Nike lately than almost any other footwear or apparel related stock. Remember, there's been a multitude of notes in the last 2 to 3 weeks where they've taken Lulu, for example, not necessarily in a downgrade, but down a notch in favor of a Nike on multiple lists. That stock has gone up.
Yeah, if the stock goes to 140 from here, I'm happy for everybody who owns it. I will try to take those proceeds, which again, look, I bought the stock at 24 times forward earnings, which I was saying all along was my line in the sand. Maybe some people felt it's arbitrary, but I've had great success over the years buying Nike at that level. It's now at 30 times, right? That's what happens when it goes up 25%. I will, Scott, try to find a stock with those proceeds to buy that will have the same or better return as Nike going from 120 to 140, but psychologically, and there is psychology involved here. I just don't want to go into that earnings report next week. I think they'll do fine, but if they do badly and all of a sudden my 27% gain evaporates, I don't want that.
How do we feel today about financials, which have hit a 52-week high, Josh? Since November 1st, the real heart of this market burst, call it such. These stocks are up, most of them, more than 20%, in some cases greater than 25. The only one that's not is JPM, but it's up 17, so it's not exactly a slouch.
Well, I think the steepening of the yield curve is the story here, and I think the anticipation of that happening, because of course it hasn't happened yet. But there were some serious questions about the balance sheets. Bank of America, most notably, a lot of mortgage debt. that they were upside down in, and a lot of debates about the held to maturity portfolio versus held for sale, and whether or not that was a legitimate way to even think about how much liability the bank had, et cetera. All of those debates kind of go away if we think the forward course of rates is that overnight rates are going lower and intermediate to long-term rates probably have peaked for the cycle. We could stop worrying so much about some of the things that have held those stocks down. And look at Bank of America. It's almost like trying to hold a beach ball underwater. That's a parabolic move to the upside you very rarely see in a company like that. So it's a pretty notable 180. I'm not in that stock. I'm in JP Morgan, though. It's at a 52-week high today, very happily. A lot of the financials have gotten that benefit of what's happening in rates. I don't really think there's much more to it than that.
Jimmy, Mayo over at Wells Fargo today names your city his top 2024 pick, his number one large cap pick. Stock's up near 30% since November 1st. What do we think about financials here, specifically that stock which you own?
I like the financials a lot here for a lot of the reasons that Josh just mentioned. I like Citigroup in particular. People have to understand this is not JP Morgan. It's not the same company. They shouldn't be compared to one another. This isn't an investment banking company. This is a security services and cash management company. And what Jane Fraser, who's been CEO for 2.5 years, has done is the right thing. First, she started out by rationalizing the international businesses, getting rid of things that were non-core. That's done. Now she's rationalizing the domestic business, getting rid of expenses, cutting layers of management. The street is applauding. This is what Mike Mayo and others have wanted all along, is to get the return on tangible equity for Citigroup up. You do that by cutting expenses, stocks being bought back by the company below book value. And there's something that Josh mentioned about, as the Fed takes its foot off the neck of the economy, this helps on the margins credit delinquencies. Citigroup has a very large credit card business.
What is the growth story? So the stock is down 6% since she took over versus an S&P that's up about 35%. What is the growth story for? So we get it. She's restructuring. It sounds like you agree with those moves. Then what? Like how does this stock not be 8 times earnings? Still sitting at the same price roughly where it's been for 15 years?
Couple of things. I mean, first off, keep it simple. And this is why I said the comparison to JP Morgan is not right. JP Morgan has a lot of awesome things going on. We know that.
They're goated. Take them out of the conversation.
Right.
I agree.
No. Got it. Okay. But Citigroup is just basic banking, Josh. It's just.
Is that a good business?
Yeah, well, it is if the economy does what we've been talking about, what I've been talking about for quite some time.
Banking, that's good. We like it. No wealth management, really.
You lend at this rate, you borrow at this rate. It's really good. And at the same time, you're cutting costs. At the same time, your credit delinquencies are getting under control. Stock has a lot of cash flow. They're buying back those shares. And I know I talk about this a lot, but buying back shares below tangible book value, like at a 40% discount to tangible book value, it's accretive on the balance sheet right away.
So we're Overweight Financials. We started to add to our position in JP Morgan in June. November, we doubled our position in Wells and added Comerica. It's up 25% since we added it on the show 2 weeks ago. I think you have to be overweight financials. There's going to be this broadening out of the value trade. Financials are one of the largest beneficiaries of that. In addition, these companies are very, very cheap, especially the regional banks.
Would you add exposure here?
Might be my final trade.
Okay. Nice tease. Thank you very little. Okay, let's address, I don't know if it's the elephant in the room or whatever, but let's address mega cap, okay? Did the game in any way, Josh, change for mega cap stock performance yesterday with this apparent pivot, that's what people are calling it, by Powell? The rate trajectory is now lower.
Yeah.
Did the game change yesterday? The goalpost move at all for that trade?
I think one of the things we've learned in the post-financial crisis period, we now have like a decade and a half of history. One of the things we've learned is that in periods of time where there is doubt about overall economic growth, these are the stocks that catch a bid and tend to lead the markets, both on the way up and they go down less than the overall market. And there's a good reason for that. They have secular growth, or maybe they used to more so than they will now, given how big they are. But there were market environments where there were serious concerns about global growth or U.S. growth, or why can't the Fed stoke any inflation whatsoever? Why are we fighting disinflation? We had inverted yield curve in 2019, way before COVID, and these stocks were leading. Because when you have growth and growth is scarce, you're worth more to the investing public, and they will bid your stock up. If the game is now going to change, and we're not hung up on the recession starts next week, no, the week after, no, the week after that, and we think there's a path for overall economic growth, it makes less sense to bid up the Mag 7 because they won't be the only growth in town. So that's the way that I think about these stocks. They get more coveted when no one else can grow. If other stocks, other sectors have their own growth story, they're less coveted and therefore should shrink in proportion to the overall market.
That was kind of Rob Gundlach's point too. It's not like he doesn't think stocks, can do well. It's just, quote, I think you want equal weight rather than market cap weighted at this juncture. He's speaking directly of Mag 7, the multiple expansion that we've seen there. Apple, new record high today, but you saw the others on the list. There are several that are selling off just a little bit. Reiterated sector weight at KeyBank is Apple. A lot of the other names talked about almost on a daily basis. The stocks have just done incredibly well. I'll ask you the same question, though. Did the game change in any way yesterday?
I think if it hasn't, it's going to. We've been overweight tech all year. We're evaluating that right now. It's tough to evaluate it in December. As you're approaching year end, you've got a lot of clients that have huge embedded gains in these names, and even just resizing the positioning. I'll give you an example. We bought Broadcom in April. Okay, Broadcom has been such an unbelievable performer.
Record high today, by the way.
And it's also
reiterated overweight, $1,200 the target at KeyBank.
And it's also become our second largest position in very short order because of that performance. I think people have to pay attention as they go into next year about exactly what Josh talked about, which is where am I going to get the funds if they're not coming from cash and I don't want to increase equities? You're going to reallocate within equities. And so I do think there's this catch up. I think there's going to be beneficiaries beyond the Magnificent Seven, and you should be prudent. It doesn't mean you have to run from them. I think that would be foolish as well. These are companies that are some of the best businesses in the world, but you have to right size them.
Speaking of non-Mag 7 tech, Qualcomm overweight, 145 at KeyBank. That's a 52-week high today for that stock.
Yeah, I mean, this dovetails exactly with what Josh and Rob were just saying. And let me point out a data point that may seem arcane, but it actually matters. South Korean exports are up heavily. Okay, what does that mean? You think South Korea is exporting lettuce? No, they're exporting semiconductor chips. And this is semiconductor outside of AI.
I was going to guess kimchi.
That was pretty good.
Go ahead.
All right, but these are semiconductor chips outside of AI. These are mobile phone. These are automotive. This is Internet of Things. It's even laptops. Okay, it's clear that the cycle has turned for mobile, which is helping Qualcomm. It's also never turned down for automotive, which is why NXP and Qualcomm are doing well.
AMD, Josh, yours top pick for the first half of next year at Rosenblatt, 52-week high again. Price target $200.
I mean, this is one that I don't own enough of. I typically buy a stock, and my assumption is I'll be wrong, it'll get cheaper. I consider that a form of schmuck insurance, just the way I carry myself generally in life. I shouldn't have done that here. I should have owned more. So now I got a stock that's up like 45% in a month, and I barely own enough to even get excited. So I don't really know how to answer your question or whether or not that does. I just wanted to share that because I think if I bottle it up, it doesn't do me any favors later in the day.
All right, I appreciate you letting that out. You feel better?
No.
Maybe you will after the break, because we're going to take one. When we come back, calls of the day. We've got a ton of analyst activity today. I've got some stuff on Palo Alto. We're talking Live Nation, Wynn, GM, Honeywell, Delta, and on and on. We'll do them next.
Oh lordy! I just had to run outside. They're running. Wow. So Meta's right there right now, guys.
What do you think?
I mean, this is, from my
looks like
perspective,
it's gonna
this
pump
is going to
above
be
it.
a growing pie.
Nope.
I don't think it matters that much which slice you own, but I think be careful because eventually there are going to be some very clear winners and not as many players as there are today. My personal opinion, CrowdStrike's going to be in the winner's circle. I've been saying that for years. Stock's up like 150% this year. I'm sticking with it. I think it goes higher.
Rob, Fortinet is your play here.
Yeah, I mean, the metrics on this company, 40% free cash flow margin.
I was thinking of a swing trade on this if we could get a bit of a rejection.
Phenomenal. Anytime there's a concern though with any slowing top line,
because
look
at where it could head to.
None of them are cheap.
I think the risk to reward would be pretty nice,
Upgraded today to overweight. That's
especially if we could get it down here.
About 25% higher than where it is now.
You're giving me all my Hanukkah gifts in one night. I don't know what we're doing here.
325.
It's almost too many.
I have to go through
Live
this
Nation looks
chart
great. Look, the stock
again.
basically sat out most of this year. It's been
bottom.
back and forth between the 70s and where it is right now. I do think there will be a breakout, though, at some point. I'm keeping this holding as well. The concert business is absolutely on
bottom,
fire. What Taylor Swift did this year is absolutely historic. She won't be the only one. I think next year you'll have massive tours. I could reel off a list of 5 or 10 names. A very big one, Drake and J. Cole. These are all Live Nation venues. You're going to see.
But it's breaking above that pivot high, so I would give it up here at like 334. See what she does at like 334, and if we get another rejection,
this is where the money is being made right now. That's not going to change.
Jimmy, a win.
or it's just going to go make new highs.
JP Morgan. Overweight,
so,
$104.
You know, maybe I'll put the trade on at like 334 to see if we can get some downside. Here, how about this? Instead of just like making up like what we think it's going to do, let's just go find out what the fuck it is going to do. All right, it's not that hard. All right, stock is not making new highs, while the S&P is making new highs.
Rolling all around that city.
Got some serious volume up.
It's not just a recovery from Macau. It's the multiples that are being placed on the Macau levels right now are out of whack.
Divergence.
The gross gaming revenue is
it could
right
just
now
go higher.
Macau. There's all
I
sorts
would
of
let
positives.
it
They're
just
buying
run
back shares.
back up
They
to
initiated a dividend a
340s.
couple of quarters ago. This is a ridiculously cheap stock. I like Win a lot.
Are you finally going to get some performance from GM now?
I think so.
Because it was named a top pick as well at Morgan Stanley. $40 is the price target.
Right there. It just made that
Jonas,
support.
Excellent analyst. He's in some sort of toxic relationship with GM and the U.S. auto industry. I think he wants to cover another industry, honestly, because he says, I'm reading it right now.
The volume to the buy side
we remain
stinks,
concerned
though.
about the future of the U.S. auto industry, even more than during the fiscal crisis
you know
of
what?
2008, 2009.
Because he's been worried about what they're spending. Right,
but they pulled that back. They've pulled that back, and internal combustion engines are going through the roof. I mean, by the way, prices are coming down on new cars. That's good. That's good for the economy. Volume is going up more than enough to make up for that. Right. Profits are terrific. They've got a lot of cash at GM, a lot of cash flow. They're buying back a quarter
Especially
of
if we try to make another new hire, get up there. I think you're seeing some divergence here.
26%.
All right, I think we do have a bit of divergence, right?
Honeywell, Robbie, reiterated buy today at Goldman. Price target $230.
Right, there is that.
All these economically sensitive
right,
names,
and then
GM, Honeywell. I mean, I think what you're seeing is the fact that lower rates are going to stimulate
stock trying to make
activity
highs,
prospectively.
while
Investors are getting
RSI
out in
making
front of that.
lows.
You know, and it's
bearish
going to benefit names like
divergence
this and
to an
the others
extent.
mentioned. Do you not love Jimmy's inner monologue as he talks?
I do.
But what's the catalyst going to be?
He'll give him another chance right now because Delta was reiterated by
making
Goldman.
new highs.
Price target goes to
RSI
47.
making new low or
Relatively
like lower
strong balance
highs.
sheet, they say. Accelerating growth in high margin businesses
and you can
like
see here.
Customer loyalty.
Look at your MACD and
Great
momentum
airline,
indicator.
but I think emblematic of the airlines overall. This is what I was saying earlier and what Rob was just saying. The operational results of these companies have been nothing short of fabulous, nothing short of awesome. The share prices have languished because
I think we're just stuck in a range,
recession.
honestly.
As Josh said, and it was
I
funny,
like
you know, the
Baba.
recession's
Like,
gonna
if
be
you want to
next
see
week, the
something
week
that's
after
like
next.
gonna,
Guys, it's off the table,
like a
all right?
trend
The
reversal.
durability of these
It's
operational
kind of just
results
stuck
is
here.
intact, and
Meta's
with
just
that,
stuck
the
in a
share prices
range.
should
Just
go
see what it
higher.
does
What
at
about
the
Boeing, which was called the top
highs.
pick today at Goldman?
You know, I don't think
Momentum,
it's
lot
a
of
long
positive
or a
sentiment at
short,
Boeing, and I think
honestly.
it's deserved. This is Boeing's
really
victory
don't.
to not lose. Okay, as long as the
Again,
production continues to increase,
334,
and they're
the
gonna
high
go to 42 a
333s.
month and 737
You
max
could get a
production in
chance to
February.
get
That's a
Meta
lot. That's going to generate free cash flow. It's going to allow them to pay down the
down
debt that's on the
here.
balance sheet.
It's got a
Things are
ways to
looking
go down.
great.
Like,
Order
it could
book
be
is
a nice
fabulous.
trade.
And by
It
the way,
could be
at
a
some
nice trade if
point,
it plays
I think
out.
soon,
This would be the
China's
first
gonna place
target.
an order. That's a catalyst that is not in the stock right now.
Last but not least, Depot. Rob, you guys have Depot and Lowe's. Target at Home Depot, 370 at Guggenheim today. Set up to impress investors in a
328.
transition period before its plans to grow its pro segment take off.
Come on,
Yeah.
man.
Again, household formation is not slowing
There
down.
we go.
I think, you know, as interest rates come in, economic activity is
Right,
going to pick
bounce.
up again, specifically
right
in the housing area, and they're going to be beneficiaries of that.
maybe it
The
did.
stock's
I don't
been,
know what it
been
wants
on
to
a tear.
do.
I'm glad we held on to it.
You
I
don't
was
have
tempted
much.
to-
If you can break
tempted to
this
let it
level
go
here,
earlier this year,
you
it
don't
did
really
nothing
have
for a
much to
very
You know what's so
hold you
long
up.
great about Home Depot, and I don't own it, and
And that's
I
all I
feel
have to
terrible
say
every time
about
I look
that.
at
There's
it.
not really-
What's so great is in a terrible
not
housing
much
market
here.
like the one we're in now, which is basically frozen, right? So people have to stay put. What do? They spend money to renovate.
Yeah.
In a great housing market, guess what? They go to Home Depot anyway, and now they're building. And it's almost like you win either way because they're so good at
You
executing.
do have to be patient a lot of times with this stock, though.
Yes.
It stalls for periods of time, and like I said, patience has been rewarded.
All right, let's get the headlines now with Julia Borston. Hi, Julia.
Hey, Scott. Former President Trump's bid to overturn the gag order in his civil fraud trial denied today by New York State Appeals Court. The court ruled the impact of the gag order was limited and narrow, and that the gravity of potential harm from it was small. Closing arguments are underway now in the trial of Jonathan Majors, the actor and Marvel star accused of assaulting his former girlfriend. The defense rested his case
All right,
Wednesday.
so this thing is
the jury
starting
expected
to-
to begin deliberations today. He faces up to a year in prison if convicted on all
This
charges.
thing's kind of calmed down
And you
and
don't
pulled
see
back.
this very often. A bull on the loose in northern New Jersey. It was spotted this morning on tracks near Newark's Penn Station. Police eventually corralled him behind a fence and tranquilized him. He was taken to a nearby animal sanctuary. No word yet on how he got there in the first place. Scott, that's a pretty unusual reason to have delays for New Jersey transit.
It's like a metaphor for something.
If they don't name that bull Tom Lee, then I don't know.
Those are my peeps. Those are my
Julia, thank
peeps
you.
on the tracks.
That's Julia Borston. Somebody sent that around earlier. I thought it was fake.
It's too good. It's too on the nose. It's like a meme, but it actually happened.
The bull's running. The bull is
All
running.
right, I'll be
today.
right back. I made some coffee. I'm
not
going
in
to go
every
pour it,
stock.
and I'll be right
Not in
back
every
and see if we
stock.
can't
We're gonna
find
show you
something for
one
the
that's down pretty
afternoon, maybe a
substantially
possible
today
swing into tomorrow.
On its guidance, it's from the software space. We do have ownership up here. We'll do it next.
CNBC.
It's not all fun and games today, is it, Robbie? Adobe's down 6.5% on, well, no, it's less than that, about 5.5 now. Guidance was weak. It's one of the worst stocks in the S&P today, and you own it.
We do own it, but let's not neglect to say that it's up 88%
That's
year
fine.
to date, giving
That's
some
fine.
back. And, you know, listen, the guidance wasn't good. The earnings didn't beat as much as expected. This is the danger of owning a stock that's kind of priced for perfection, because if you end up having not a perfect outcome, your stock's going to take a hit. And it doesn't invalidate the company, but I think the setup for this entire AI ecosystem is one where, you know, the expectations are so high that a lot of these stocks, if they disappoint, you're going to see stock price reactions like this. It's no surprise.
In the break, Josh, you were flagging Snap shares, which are up 4% today.
I'm trying to count how many days in a row this stock is up, and I lost track at like 13. It conceivably could be up 15 straight days or something like that. There's something interesting going on here where their Snap Plus users have surprised to the upside. They had 5 million users of Snap Plus, which people pay $3.99 a month for. That jumped to above 7 unexpectedly. And one of the main reasons is the AI tools they're giving to those users. Imagine you're a user of Snap. Imagine you're 14 years old again. Your friend sends you one of these AI-generated images, and you're like, how'd you get that? And they're like, oh, Snap Plus. Oh, I want Snap Plus. So the AI story at Snap is really interesting in that it could be generating more paid subs than Wall Street expects. They got an upgrade on Monday from Wells Fargo, $22 price target. I am not in this name. It's been on my radar for a long time. It's down huge over the last 3 years, and now I'm watching it.
It was a $7 stock. I mean, it's the 52-week range is from 7 and change to the 17 you're seeing here.
And they're actually selling something that's not an advertisement. So the main revenue source for Snap is ads, hence why the stock's so terrible. But this is another business that they're in that actually might have legs. So I'm going to start paying attention now.
Let's kick Berkshire around for a second because they're buying more Oxy. It's like a broken record because they've been buying so much for so long at this point.
Yeah, they love it.
27% is the stake. Why don't you hit that quick, and then I'll hit Jimmy, too, because you guys both own Berkshire.
The thing to keep in mind about Berkshire is that they are not a dilettante when it comes to energy. I think they own the second largest utility in the United States. So they understand not only the output side, but the input side as well. And so seeing them continue to accumulate this stock, I think should get people's attention. Energy has been a tough sector this year. It's lagged pretty much everything. But these are companies with tons of cash flow. A lot of them are paying big dividends. And I think if Berkshire is this committed, we should probably give the space a second look as well.
Jimmy.
Exactly. Tons of cash flow from the space. And I think it's easy when oil comes down from $90 to $70 a barrel for people to say, oh, see, this is why we never own fossil fuel companies. That's the wrong way to look at this. We need fossil fuels for the next several years. It's highly likely that the economy recovers not only here, but globally in the next year. That pushes oil demand up. This stock trades at a 10% free cash flow yield. That's what's attracting Warren Buffett to it. And those free cash flows are likely to grow as energy recovers in price.
Nice. Well, we have more stock stuff ahead. Steve Weiss alerted us to a stock that he's buying. We're going to take a break. We'll come back. You'll hear from Weiss. Mike Santoli's on the other side of the break as well with his midday word.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
All right, I'm back. All right, let's do this. See if I can't find something here. The S&Ps haven't really moved. Opened up at 372.52 and we're at 373 or 473.20. So you've moved 70 cents in total. That could change. You know, we could start to rally towards the end of the day.
Senior markets commentator Mike
Could get a
Santoli
chase
joining us
for
with his
alpha.
midday word. I can't hear,
Or
I can't
chase
wait to
for
hear
year-end
what it is
performance.
today, Michael.
Whatever you want to call
we
it.
have the no pain,
We'll
big
see.
gain trade on. It seems like everyone has decided that there isn't going to be really a dangerous trade-off between what we can expect in terms of easier financial conditions and economic growth. So that's the view from today. You know, on one hand, you take it in really short bites. Yep, the big indexes are looking pretty extended on a very short-term basis. Seems like we've had this culmination moment where all the things you've been asking for has more or less been delivered. On the other hand, you know, markets up, S&P's up less than 3% from the managers, the fresh week midday today.
This thing
and
just
they're
left.
below the equity exposures of July, even
Hold
though
on
they've
one second.
chased this rally to some degree.
Hey, Mike, 91% of the S&P 500 above the 50-day. That's the highest since November of
Alibaba just
2022.
left.
78% of
It's the
S&P
same
500
exact
names
setup
above the
as
200-day. That's
Oxy,
the highest
right?
since
This
January of this
was
year.
one of my top ideas this
Historically,
morning.
Not the best place to be adding new positions.
Wasn't really ready
Maybe
for
not
it.
a sell signal.
You know, I
usually
wasn't really
not
focused
optimal.
in
You
on it
agree
like
with
I
that,
should
right?
have been, I
would.
guess.
So you have all these signals like
something I was
that, which
just
say,
watching.
you know, we've come a long way in a short period of time. It's been a pretty indiscriminate rally in the short term. On the other hand, usually the forward implications of that, if you go out a few months, are positive. So when you have one of these big rushes higher with almost every stock running, it is usually time to cool off a little bit. I don't know if that happens, you know, in this sort of seasonal
It's a
air pocket
back-to-back
here,
nice
but you're absolutely
top
right.
trade
That's what I
idea,
mean by
right
saying
there
it's
for
kind of
Alibaba.
extended, but the message of what the market is trying to price in
So,
here is
I
still
just used the
relatively
same
encouraging.
analysis
Yeah, I mean, you
as
got 700 points nearly on the Dow.
what's up, Bingo? I'm not
since
sure if you're
yesterday
here. I
afternoon.
just seen your
So
message
your
here.
point's well taken. Mike, I'll see you in a little bit on closing bell.
Same
Thank
exact
you.
setup
Mike Santoli, our senior markets commentator.
as
Up next,
Oxy yesterday.
we're tracking the trades as
Right,
always.
smelling
I
that
told you, Steve Weiss
divergence,
just
right?
added a new name to his
It stopped
portfolio.
making new
We've got Farmer
lows and
Jim's attention
using
as
the
well.
indicators
Tell you
and a
about
few
it now.
things, and it just telling me that it's turning around, just like that Oxy trade yesterday. I was wondering if Berkshire was going to step in to buy it, and that's who was buying it yesterday. You know, that's who was buying that trade yesterday. So they were paying whoever took that trade. Have a nice double bottom here. Negative divergence here, right? There's a low. Your RSI makes a low. It makes a brand new low. Stock makes a brand new low. The RSI is starting to anchor itself up, making a higher low. That's the divergence I'm talking about. That's just one. All right, that's just one. So it's a pretty. Just can't believe it's already worked. Already worked. All right, I'm gonna wait for. Man, I don't think it'll give it to us. I don't think it'll give it to us. Either I gotta wait for a 72 fit, like 72.70 pullback. It'll have to be high a day. I was wanting to try and get a pullback into here, right? This would be a double top here. Right? Support, 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 resistance, resistance. We break it on an increase in volume. It should act as support. It should pull back in and act as support. I wonder what Nvidia's doing. Nvidia felt like it's just stuck. This is the same kind of pattern too as Nvidia. Like if you look at Nvidia, it has this little trend here and then it drops lower and it's just sitting inside of this range. But Baba's obviously broke out. It's just a similar pattern to Nvidia. Stephen Weiss. I'm gonna go look at the indexes and see what's leading and lagging and all that fun stuff.
All right, welcome back. Told you Steve Weiss was making a move. Joins us now.
All right,
I think he's on the
IW.
phone.
Well, start with the SPY.
Weiss, so you bought back
Alright, so
Deere,
the SPY's
which you sold
pulling
in the
back.
summer. Why'd you do that?
I did. And when
I
sold
wonder
this
if the
summer,
Qs
stock
never
trades about
retouched the
370
highs.
to,
Let's see.
to 410. While
They
we're
never
trying to figure
did.
out the
I
economy
knew it. I could
and
tell by
trying
the
to figure out
SPY's
some
price
policy
action.
construction, all of which they're
It's
involved
lagging.
in. So I actually did buy a little at 470, very, very little, and it didn't hold. Traded down to about 462. But
That's
as
such a
Powell
big
was
move
talking
yesterday.
yesterday,
That was such
I
a
said,
big
how do
move.
I get exposure in the cyclicals? Because the only exposure I truly have is in Freeport, which is doing quite well. And Deere was the easiest for me to go to because it's a
Got
company
something
I
in my
know
eye.
well.
Hold on.
So I bought some yesterday as he was talking. I bought a little
Alright,
bit
so
more this morning, and then the stock just ran too much. So I
see
can't
if
tell you it's going to be a
Dow is
long-term
still
hold, but I'll
leading.
tell you what I do like about the company. And
I wonder if the
reason why it
Dow
may
could
not be a
start to
long-term
turn
hold is
itself
I think,
around
again,
now.
I'll be able to get it cheaper. They cut their production schedule a little bit early in the year, so management is pretty astute as to what's going on in the market. While prices are coming down, so it's kind of ironic in a way because inflation's come down, allowing Powell to say what he said yesterday in the dot plot, which is what I was really focused on, to add another hike for this year. Prices coming down in commodities, as we've seen with corn, as we've seen with beans, soybeans, etc., isn't great for the farmers. So you've got that little juxtaposition of inflation coming down, but not coming down where you want it to come down here. Nonetheless, there's going to
Bank
be
of America
continued
is just
broadening
an
of the market,
animal,
in my
man.
view,
It's an
and this is
animal.
the best way for
Look
me
at
to
that,
get
day
into
two
it, 'cause I
continuation.
know it. The others I'm looking
I
at,
seen it this
frankly,
morning.
and
It was
makes
still
you happy
strong
well,
as hell.
Hopefully, are General Motors. I'm also looking at BMW. because got a
It's
much
just
larger
leading, right,
dividend.
compared to the others.
So,
Well, never mind.
hopefully
JP
some of
Morgan
these
did
fall
pick
back
itself
where I can
up.
get the exposure.
JP
And
Morgan
then the
was
only calculation I have
struggling.
to go through
Bank of
is
America
even
never
if there
tested
are weak
tested
earnings,
yesterday's
which I
pivot
still
high.
believe will be the case in the
But
January
JP Morgan was
quarterly
kind of lagging,
announcements for
and
the
then you can
fourth
see
quarter.
what happened. It
Will
did
the
pick
market
itself up.
continue to look through it? And right now, the sort of
Wells
leaning of the
Fargo.
market will look through those announcements. But you want to keep powder dry to
Okay,
buy on the
PNC.
initial hit, like we're seeing with Adobe today, where it can be kind of brutal on a sell-off.
I was waiting for you to finish.
Man, I wanted
waiting
to.
for you to finish your commentary with,
Where's that
and I just
short?
want to end with the note that Jim's been right, and I'm sorry for trying to beat him up for all these months on the market because he's looking pretty good right now. And if you bought Deere and even managed to utter the words, "I'm looking at General Motors," to him, we could show his face.
I mean,
that is.
Well, I would say that, but
You can see this.
seal of approval of him and his view like I've never seen before.
You can see the support level that Adobe broke,
It's not. In all
right
seriousness,
here,
Stop
up
while
at
you're
this
ahead.
495 level,
I'm not ahead.
and if it poked its head
Let me
right up
just finish
into it,
thought. It's actually
probably
not
look
so
better on the
cool because
15-minute
Jim's
chart.
positioning, everybody
Yeah, right
has
there. You
different
can see it on a
value
15-minute
positioning.
chart.
It really hasn't worked the whole year. The only things that's worked are the ones
Which is
stocks
a
I've been
nice
involved
rejection.
in, Meta, Microsoft, and others.
Really nice rejection
So
there.
while Jim's been bullish, it's all where you put your dollars. It's about positioning.
All right, I'm still going to be gracious even though he's being a snot there. Steve, I do applaud you. Here's why. When the facts change, you got to change with it. That's what you've done. You've been bearish, and now you're clearly pivoting
look,
with
guys,
the facts on the ground.
Look what you
let
have.
The snottishness go. I gotta
Look at
applaud
all
you.
this room. If we can get
Thank
some
you.
continuation
I wish I
here,
could be a better
which I
man,
don't know if
but-
we
I do
will,
too. I do too, Steve.
man,
Work on it.
there's nothing stopping this thing from
I
getting
thought
back
this
down to
conversation was
565.
going to just have a much.
We got to see the
lovelier tone
volume
to it.
pile
I'm
in
sorry
here,
that it
though.
didn't. Weiss,
You're
thank
going to
you.
need an
Yeah.
increase in volume.
You know, I actually did.
Are you new? Are you new here?
Did. Apparently, I'm naive. We're back with finals next.
And I don't see that. I don't see it happening. Oh, look at that, though. You know what we have here? We have the 50-day moving average. So that's why it's key to look at everything and know what's going on. All right. I wish I knew if somebody was able to take that Oxy or even Baba today. I wonder if anybody took those trades today. I don't know if I feel like I'm cursed. The past 2 nights I've been like past couple days I went back to streaming, and it's just like I don't know if it's because I think about it or what it is, but I feel like I've been struggling to like sleep appropriately, like fall asleep at a decent time and stay asleep. It's so I feel like I'm cursed. It's so crazy. I'm telling you guys, it's nuts. The 2 weeks I took off, I swear to God, I was in bed at 9:30, 10 o'clock, up at 4:30, 5. I was up around 5 o'clock, 5:15, right? Just, it's crazy. It's crazy. I don't know. I'm gonna try and keep my cat up, and if there's a watch list, I was thinking about doing a watch list yesterday because Powell mentioned yesterday in the Fed meeting that I don't think anybody really picked up on. I didn't hear anybody talk about it. And just because I haven't heard anybody talk about it doesn't mean that it wasn't picked up. But he said nominally rates coming down, or not rates, but inflation's coming down 2%.
As folks are calling it. We'll definitely talk about that.
You know, I guess if you do the rate of change or something, that rate of change would give you, I don't know what he meant by it. I don't know if they took all the numbers and said, okay, we are, you know, inflation is at that 2%. I don't know what he meant. I just know that he said yesterday it's coming down.
You want to talk about just what's happening in this market?
Yeah, we actually
nominally
have a breakout in
2%.
progress in shares of Empire State Realty Trust, which we
I don't
talked
know.
about on the show.
I don't know. I don't know
Not
what
for
he
a
meant
while.
by it.
Last time we talked about it, it was $7.
But that really,
This fall, now it's almost 10. I think it can
when
get
they
above
said
10.
that, it
It's
really
been
stuck
part of
out
this
to me.
huge
So I'm like,
rally
all right.
in real estate, especially office real estate.
I was
The company is
honestly
profitable, paying a big
a
yield.
little
I
bit
think,
surprised
just
on
too
how
cheap under 10. I'm
bullish
staying with it
everything
for
was
those
because
short
nothing
periods.
really changed from the September meeting. And the thing is I think people are taking too much weight on these summary of economic projections. They are never. It's not. I'm not going to say that they're never right. But if you go back, they are. If you just go back to I don't know 2020, right, and look to see where the summary of economic projections were when we were in COVID,
You know, we spent
and
a quarter
where
of
they
a
thought things would be coming out,
mentioning
it is
utilities every day.
completely
They were
different.
down for like 9
It's
or
completely
10 days.
different.
Componentry, not the defensive componentry.
So-
more like the REITs.
Yeah, I think the important part is the defensive element of these. I mean, these stocks, a lot of the
It's kind of
utilities
like you
got
don't know
hammered
what the
in middle of
fortune
this
is going to
year.
be, right? You
So
don't
now
know
they're
what's
not
going to
as
happen.
expensive
You
as they
you got
were
a
at the end of
presidency
last year.
next
Maybe they're
year.
attractive, not just on the yield
So-
basis, but on them having come down and having attractive valuations.
Dollar, you know, obviously dropping yesterday.
There's that
Energy,
volume on
leading
Adobe,
sector today
guys,
near 3%.
coming in.
About energy stocks here.
That's some nice volume on
If
Adobe
you're somebody that
coming in.
believes in mean reversion and you want to go into the new year with an underperformer, that's probably the best place.
Oh, I forgot we're doing finals. Just give me a name.
Zoom.
What do you got?
America.
Paramount.
Oh, sweet. Good shit, Bingo. God, I'm so glad you did. I rewatched the live stream yesterday. I rewatched a little bit of it. And I had taken some melatonin the night before. And,
Thank you very much, Scott, and welcome to the exchange. I'm Kelly Evans. Here's what's ahead this hour.
so I was a little groggy yesterday morning. And I rewatched it in the morning. And like Tesla, for instance, right? I thought that I like went over this pretty clear yesterday game plan, which was long to yesterday's close, and then a short, right? Because of how weak it was in the morning, and then, you know, and like I said, when I took a long here up at VWAP, I was hoping to see if we would be able to get like a double top or possibly break it for a scalp, but I don't think I wasn't as apparent, or I didn't explain things like I had in my head. I didn't explain it, so I gotta, you know, that's something I gotta work on and take notice of some of the things that I do wrong, and to be able to fix it. And the only way to do that is by watching it. The other thing I did was I watched myself trade yesterday, and I was just flipping between a whole bunch of things, not paying attention to the 2 to 3 stocks that I needed to. Right? I mean, again, I'm trying to do a stream and, like, you know, talk and kind of have a little bit of entertainment, so I'm trying to juggle the both. But okay, cool. Yeah, I just, you know, I think my mind was a little foggy with the melatonin that was still in me. But
doing really well. I just want to show you another example of how the market's breadth is wide here. High beta stocks have been very high.
yeah, I do too. Like, do you have different time frames on them?
These are stocks.
I mean, it makes it look so clear. It really does. It makes it really easy. Oh, did you notice? I don't know if you noticed or not. I saved it to where, like, if I go, like, watch the screen, like where it is. So I don't have to.
Look at these moves up here, and they were up big yesterday too.
I don't have to like fit the screen size. You notice how when I just did that it automatically fit. I went and did some research yesterday and saved it. It wasn't too hard either. Now the next thing I want to be able to do is just like kind of be able to go back and forth through tickers pretty quick.
Teens right now, so and this is just today. Yesterday they were up the same thing here. Regions, Synovus, Citizens, doesn't matter.
Yeah, I see. I get it. Yeah. So I like to use the 1 minute because I get the trend, but it'll give you the volume. Like, do you see? Like, look at this volume here. And you have it on a 3 minute too. But you also like right now on this 3 minute chart. I don't know what it looks like on a 5. I could change it. But do you see that candle there that came in on a 3 minute chart? Now, should you believe that sell candle? Now look at the 1 minute. So don't get fooled. That's why I have a 1 minute, because I want to really know what that volume. I want to really know what's going on underneath.
Let's rewind the clock for a minute, shall we?
And that's just the way I've been, you know, going to trade. Like, if somebody sees this right now, you're going to have a lot of people think about trying to go short or do this and that. Well, 15 minute just crossed VWAP, and you just pulled back on a 15 minute time frame in this 249 area of support. I wonder if this is going to start to be our reversal, but I don't think it is. Like, look at the 1 minute volume. All right, look at that volume that came in there. So,
which is not, you know, the healthiest sign, and so, yeah, it would be just a little bit careful here.
3 minute, it's underneath 90 MA.
You know, we had
This morning, I seen Tesla right here. It was perfect. And I almost took a long on it this morning. Right there is when I looked at Tesla. It had made this high, right? And it did this, and it broke up above this 240, let's just say 245 level. And it right here, it put in this double bottom, and I said it this morning. I'm like, oh shit, that's about as this right here. This is all I seen. Right there is all I seen. I seen that, and I'm like, holy shit, this thing's going. It's above the 100-day moving average. You have that. This thing's ready to go. It's ready to go. But I couldn't take the long because it's at 244, 245, and I have resistance at 250. I can't go long on a $5 move. If that's what I think I got. I think I got $5 and the ATR is around 10. So I didn't take it. And I'm okay with not taking it. Because I said to myself, here was the other thing. Here's also what I did. I said, at the time, it was up over 2%. And I said, for this thing to get to 255, 260, I don't know if it has news. I'm sure it has something. There's always something to talk about with Tesla. I said, do you think Tesla is going to do 6 to 8% type of day? Like, does it have a 8 to 10% type of day in it? It doesn't. And it's been averaging $10 a day, roughly, like $8 to $10, and that's around 3%. 3-4%. And I'm like, I don't see Tesla going like much farther than 250. It did, obviously, 245 to 255. It did do the $10, so I was wrong, but it is what it is. So I just wasn't comfortable. I just didn't think that trade would have been worth it, in my opinion. Now, did the trade pay? Yes, but who's to say that I could have sat comfortable in it? I like to get in things that like, whether it has news or not, that like breaks a nice resistance level and is pulled right back in there, and we're taking the long. I got the market behind us, and like just like Oxy, you know, I just didn't feel comfortable trading, going long Tesla today. I also didn't even short it because that would have been stupid to fight that trend. That's a strong move. Freaking Amazon, man. I don't know what happened here. Rivian is up because Rivian on stock is taking off mainly because electric vehicle companies allowed. Okay, whatever. I do want to start keeping these solar companies on watch because if rates are going to pull back, which the 2-year isn't, but the 10s and 30s are, the inversion's gotten a little bit more inverted. I want to watch these names. I said it yesterday that if rates pull back, these things are going to go, right? What else is interest rate sensitive? Solar stocks.
And earnings are up basically pretty strongly this year.
Marcus just being a little bitch. It's taking forever.
We've got 11.5% earnings growth.
I missed that short yesterday.
Let me ask you a business.
What else is there? Let me go look at the thing. Sometimes it helps to
you do look at the leading indicators and things like that.
To go look here. Communications. Semis, obviously. Look at ARM up 8 points.
Almost hit that 0.5% mark. There's signs that
ARM had a nice setup today. I forgot about ARM. There's been like so many names we've been watching that I forgot about this name. Look at that. That's a beautiful, beautiful.
I mean, if you would allow me, I would just change the question around a little bit.
There. Look at that. It just pulled right back into that previous high, took off. That's beautiful.
95 or are we in 99?
I think 200. I think 200's a good price for Apple.
Very possible for the cycle to
right, I think 200's a good price.
The interesting thing about that cycle
now, does AI or something, do they come out with something new with like
for instance, in the
Like,
student loan
do they
office.
try to
Those
make
kinds of
like
things.
like AMD? Are they gonna try and make like a
It feels like those
like
kinds of
a
things point you towards a different outcome.
I'd
like
say
a
it is and it isn't, because if you look at
whatever
the
they
senior
call
loan
that,
officer survey for the last quarter, it actually eased a little
shit.
bit. And if you look back basically at the sluice,
Oh, wow, it's pulling
generally
back.
tends to peak in a recession.
I think
Very, very
honestly,
few
I think you
false
start to
turns.
see
So
a
the
little
question
bit
is
of
whether
profit
you
taking
lead
up
the
here
turn down.
in some of these names, but I think 200. I think 200's a good price for Apple. That's just my personal opinion. I think around that 200, give or take, a little above, a little below, is a good spot for Apple.
I actually don't pay. I mean, I pay attention to the sluice because everybody else pays attention to the sluice.
I'm trying to think
do simple
of
exercise and just overlay the sluice to the ISM. It's not hard
you know,
to
do they try to come out with like
that,
a
well, the sluice is why it got a little better is because
like
the
that
ISM's picked up
what
a little
do you
bit.
call it?
They're pretty strongly
They
positively
call it
correlated, and so
high.
you know, if growth does pick up from here, and
What
this
is it
goes
like?
back to my
Big
very
data?
first point,
Some I forget what the hell it
the
is.
Fed
Pretty
is
much
obviously
for
aggressively, it does reduce
like
it, maybe
GPUs,
even ease it,
like the commercial kind that like Nvidia and AMD are
cautious there
making.
because we are talking about 6 months from now, and we just had two rather large changes, one in 2
You know
weeks
what's
and one in
funny?
3 months.
Amazon
so
is
if
lagging
you
the
look at
market.
something
Amazon's
that's
really
6 months
weak.
Out, we can talk about it, of course, but
One quick final question. There's like 10 more things I'd love to ask you, but I'll stick with this one. So this
I honestly have no idea where Amazon should and shouldn't be. Right? I don't know. I haven't even looked at any of their financials and anything like that, man. They've bought. They're in every sector. I don't know if that helps or hurts them in the future, but look at this. All the Magnificent Sevens are up here, roughly, right? Even Google. You know what's funny? Right? I said this before. The two things that had in common, right? Remember when Apple and Microsoft were taken off? Apple, right, was taken off to new highs right here over the summer, June and July. Microsoft, same thing. But what was Amazon and Google doing? Right? June and July, they were nowhere near. They were nowhere near making new highs of the year. Right? They were, you know, they were. They just broke a new high of the year, at least. You know, Apple and Microsoft at this time, they're up here. They're trading up here, right? But remember what happened? The pullback, right? When Apple pulled back and Microsoft pulled back, this pullback here, which was in like July, August. Then you had Amazon and Google start taking off, right? Right there, 7, right? Look, they started taking off. That's when they really started to take off. But they're still lagging. They're still lagging in the market. The S&P, the Qs, those indexes are getting ready to make new highs. Amazon is not. It's like at the halfway mark. And today, think about what happened today. This level here, I was trying to see if we could get into this orange line, right? If we could get in this box here to be able to like start a higher trading range, right? Right in here to start like to get in here and start trading in here. It could look at this candle today. Look at that. Look at that candle. That is a major rejection. The day is not over with, and you put in almost as much volume as a Fed day. Amazon's weak. There's something going on with Amazon, right? Or it's got to test its 50-day or something. I mean, this thing literally has done the volume half of what it did on a Fed day, on a pivotal Fed day, FOMC day. So there may be something going on, like there may be something that's not sitting right with the market. It's underperforming, number one. You just tried to break through that major resistance level to take this stock to a new highs. And look at that candle. It just dwarfs all of that consolidation. And you consolidated. You sat here and consolidated. You went to breakout. Bang. It just sold off. So that's a pretty clear, you know, I'm not going to sit here and say, you know, if you have leaps or calls, you may want to rethink those or just back them up with insurance by selling some. Maybe either, or buy half of that position, half of what you spent. Maybe grab some puts like 2 weeks out, 3 weeks out, and try to, you know, recoup that loss, and if not break, you know, actually make money. Because that's the main thing we want to focus on, is getting that equity curve up. So if we just see a major rejection here at that level, that's a problem. Apple, Microsoft, even Google, I mean, hell, NVIDIA, AMD 147.50 in this area up here. I personally, if I was in leaps, I would either think about not selling them, but backing them up with like 2 week out, 3 week out puts and playing it and taking profits on those and just rinsing some puts, if you know what I mean. Right? I would seriously think about that. If we could get another bounce back into like 147, if I think we'll be lucky to get 147, 148. But 147, I would look to put in like, I mean, personally, I would probably do 2 weeks out, not next Friday, but the following Friday, and get, even if it's like 1 or 2 contracts, and play the volatility and put the money in your pocket. You know what I mean? And that way, whatever you're down on the leaps, if you're down, you're getting paid still, right? And at least you could, with the puts, maybe make that leap for free. And, you know, so a hockey, I don't know. I'm not sure. I don't know. I mean, whatever that would come down to a personal opinion, you know, as far as a hotkey. Probably your orders, maybe. I only use Thinkorswim for futures, Forex, like, and I usually will do that if there's a main event. If there's a big event like presidency or something happens, then I'll trade. I trade. I usually use E-Trade, Interactive Brokers, and Lightspeed. But I would use, you know, I kind of have a few different portfolios that, you know, I have, like, I don't want to look into my long-term stuff like that, so I have an account that I don't trade, that I'll just buy, and stuff like that. So usually my trading is through either E-Trade or Lightspeed, depending on, you know, what I'm trying to do. Because my smaller account is in my E-Trade, and it's like, do I want to work on that? Do I want to try and get that up? You know, so
Thank you very, very much for
it
joining
all
us.
depends
Really
on what it
appreciate
is that I'm trying to do.
David Rosenberg. Coming up, the drop
But
in
I would seriously think about that. What are you, what
We're down a full point from that multi-year high of 8.03%. The president of the
Oh, so you don't own leap calls. Okay, I'm sorry. I thought you did. I thought you did own leaps. That's good. Well, you know how I feel about leaps right now. I think today told you everything you need to know. I'm going to see. Let's see where's our pullback going to be. That's the question. All right. Where are we going to get a bounce back to get another entry short? Because I think Amazon's got some more room. It's just, that's crazy. That's so insane. Look at that candle. And it's only 1 o'clock, 1:30. Look at the volume. Yesterday was one of the biggest days the market's had in years. And you're over half. You've done over half of that volume already. So I think it's pretty clear that Amazon's weak. And where do we think it's going to go? Let's find out. Let's see here. How could we do this? There's a couple ways we could do this. And you know what?
This is the exchange.
There goes Rivian again, I guess. I'm going to have to look at that. But I think I want to make a play on Amazon. I think this thing's just getting started. You have that negative divergence here too. Right? And the stock making... Where are we at here? Making highs. Making highs. Making lows. Alright. I mean, the obvious target, it's going to be 140. Alright, I think that's pretty easy to see, is 140. That's so crazy. I wonder what's going on with Amazon. Something's going on with it. I know there was some news where they won. They did something with their court case, I heard today or something. I think it's going to be this pivot low from yesterday's. That's so insane. What just happened with Amazon? I didn't hear anything. Do you guys see anything with Amazon on this here? I don't know if that's a technical... You know, I know that that's a pretty clear technical level, but... That's a huge increase in volume. Alright, I wonder if this is going to try to act as resistance. I was just getting ready to use a fib level. Yeah, I do. I used it on Tesla today. I was just getting ready to use a fib level on this. I was trying to think of where and how I would use it to figure out my pullback. I mean, you could say your 38.2 fib is a nice level here at 125. That's pretty far. Not to say it couldn't get down there, but I think 140, 139. I think 140 is in the books for Amazon. I do. I really do.
That's right. Yes.
There's something seriously going on with Amazon. unless somebody knows that news today, because it must have been pretty serious to do half the volume from yesterday and just completely just flush out the whole consolidation in one in a half of a day, not a day, but a half of a day.
Sometimes as little as 0.5% can motivate somebody to refi, depending on what their motivations are, whether they need cash out, etc.
So what do we make of this dynamic for the housing market? 6.6% is still much higher than most people in their 40s, whatever their home buying audiences are used to. It's better, but it's not great.
Right, yeah.
And look, that 38.2 takes us to that pivot. So I would use that as an entry. I would see if we could consolidate, and it's already down. Well, it's not down that bad, but so if I was looking to get short, right, I would use that pivot low here, 38.2 pullback. I would stay within the 50 because the trade is still somewhat on in this area. But, you know, I just use a Fibonacci to measure movements. That's really all it's for, is to measure moves. Right, to measure your pullbacks. But the thing is like, after using a Fibonacci, I can already tell you where it's going to be. So I can look at the chart and not have to, like, physically put up a Fibonacci to see where, you know, 38% is going to be, 38.2 fib.
there's no reason rates couldn't go down.
Like if I had to draw a fib from here to there,
some of the
I think my 38.2 would probably land up here around 140, 137.
I think that we could see that territory that quickly, but it really depends on economic data, chiefly inflation, getting to the 2%.
138, right in the middle,
question, but
right?
as most people in the market are well familiar,
So,
the spread is still historically wide, and is there any sign of that normalizing?
It could be like a sniper. It'd be like, yo, I'm looking at that 38.2 fib. They're like, yeah, where's it at? I don't see it. Right here, bro, right at this level. Yeah, but you ain't got it on your chart.
Should naturally come down as
I don't know.
Overall come down.
Just like hiding in the bushes, like sneak attack. Yeah, I'm going to put my entry right there at that 38.2 fib at $28.04.
You too.
Where's your fib, bro? I don't see it. I don't see a fib.
Today could bring some relief to the frozen housing market after pending
Like, don't worry, I know it's there. That's where that retracement's at. Trust me, I know. When you've been in the trenches for X amount of time, you kind of start to know where things are when you see things over and over and over and over again.
Thank you, Kelly. I really appreciate you having me on the show this morning.
I was thinking, I mean, you have more drama between what's going on at NAR, what's going on in the housing market, what's going on with commissions. This is like, you're like in the middle of a hurricane. So maybe we'll just start with the overall
I want to
housing
know
market.
what
Do you think
happened with
this'll give
Amazon
realtors
today.
A bit of a sigh of relief on what's been a very tough year.
It's got to be up here.
Rates, is that the question?
Yes.
When did this sell-off take place?
6.6%. That's much better.
Absolutely. I just heard your previous speaker. No, there's no question. So what our buyers, because we do have still such a pent-up buyer pool that's just been waiting on the sidelines. The interest rates rose so quickly that it took so many of them out of the market.
Yeah, I seen that this morning, but it sounded like it was good news for a court case. I thought that it was like decent news. So I think it could be a technical. I think what happened was like it broke this 147.50, and you can see once they broke it, they just piled in on it. So I'll see if there's any news here at like 12:50. Call it 1 o'clock. 12:58, and I don't have anything there. Let me see.
Everything went up and down at the same time. To see a market where
It could be. It could be. But it feels like this doesn't feel like a take profit day. This feels like get rid of it. Do you know what I mean? The volume is already double. If you think about it, the volume's double what that Fed day was yesterday. And yesterday was a huge day for the markets. And Amazon's already halfway there, and it's the half of the day. So I'm not going to say double, but you know what I'm trying to say. It's just like there is a lot of volume, and there's a reason why that volume is there. Something is attracting that volume to Amazon. Maybe because it's a laggard. Maybe, you know what? Because it's an underperformer of the year, and year end, they want to get rid of it. Right? They're starting to sell some of these stocks that they're not like they're not up on. They didn't perform that well, so they're dumping it, I guess. You're not going to have them dump Amazon and Microsoft until it's a reason. Like they'll slowly sell it at those levels, but Google and Amazon have just underperformed.
And they're here, and we're looking forward to that. That's a good, normal market.
So let me turn to how the experience could be changing for people who are buying and selling their homes going forward. I've noticed there's now a lot of other commission lawsuits. There's ones on the West Coast and so forth as this appears to be gaining traction. Do you foresee a time in the next year?
Have you been paying attention to Amazon stock? Shares have been on the move, with the stock up 3.9% over the past month. This thing is getting crushed. 1 day ago. 4 hours ago.
It's interesting as we look at this, and I will tell you, first and foremost, I'm a realtor.
If you read this news, you would think the stock's ready to. It's ready to be bought.
So I get to work with my agents.
Amazon shares print yet another 52-week high. Sending the wrong message.
Heard that verdict that day.
Yeah, this ain't gonna give it to me. I gotta go to.
So first, for the sellers, let's just talk about that. They have had so many options in the market. They've always had options in the market.
It is funny, isn't it? If you literally everything there in that column was bullish.
With them and explain to them how we can
you can see the prerogative there.
As the listing broker, and that model is to share some part of the commission that we've negotiated with our seller to the buyer's brokers. That incentivizes those buyers, and that gets them to the table so that they have that professional representation and can come into that marketplace. The seller wants that. They want as many
That's hilarious. That's
at
hilarious.
price for their home.
Hilarious.
You turn that conversely
You shouldn't overlook it. Don't let that huge volume and that candle that wiped out 2 weeks and half of a day steer you in the wrong direction. Let me tell you why it's a buy.
Of those buyers, and we're gonna talk about our first-time home
And
buyers, our first-generation.
I mean, they're getting paid for that article.
Our middle and low-income buyers. We talk about our veteran buyers, and we cannot
so
disenfranchise
let's
them
see here.
because they can't out of pocket pay for professional representation.
JP Morgan names Amazon and Google among top internet picks for 2024.
With the market, complex process of getting
whatever.
from point A to point B and
let's
actually
see here.
closing on the home. And then what we also don't want to see, and this would be the tragedy of all of it, is that those buyers just simply don't come into the market.
Press
now what
release.
happens to our sellers? And that is what this is all predicated on, which is why we will continue to fight. We want to take care of those consumers.
And I'm trying to think through if the market fragment, because I thought it was very interesting. So Redfin has now pulled out of NAR, if I'm not mistaken, in order to settle their suits. Remax and Realogy, now that's anywhere,
I get,
not going
unless
to
it has
require
something to
agents
do
be
with
members of
Rivian.
NAR going forward. So will this, does this mean that listings will still be funneled through MLS and we'll all have to use realtors and so forth, or does this mean that now it could
Yeah,
be
I don't
almost more
know.
like the
I
rental
wonder if
market
it's
where
because of
there might be
Rivian.
internet listings that anybody can come upon? Have we fully seen the implications of all of these changes yet?
Now here's the thing. Here's what I will say, Bingo. I would watch Amazon if it takes back the majority of this move today and does it tomorrow. Then my thesis would change a bit. Then I would say, all right, I don't really know what happened there. There's obviously a buyer that's stepping in. So, because it's just like Boeing and these airlines, like you'll see, like if they can make, like once you get that quick recovery, it's on to the races. Like it recovers quick. It went down, but it came right back.
Consumers don't have to shotgun it and head to one direction or the other, but can go to one place. So will the realtor still be valuable? Absolutely. The realtor is there to take all of that information, everything that's out
What
on
did
the internet,
Roblox do today?
be able to sift through it and
RBLX.
put that
So
expertise to
Rivian.
it. It's interesting because I hear that
Rivian's still
the
got a little
buyers
more
don't need a
room.
realtor. They can find their home on the internet and they can go to the seller and they can get it bought.
No,
At the
I
end of the
didn't.
day, even
I
just
haven't.
that
I
process
don't
of
really.
finding that home, I can walk in with them and
I
can
could
say,
pull it up.
You qualify for your loan.
I could pull up
but
the
house
options
isn't gonna
activity, but it's not
qualify
really.
for the loan. The loans
You
are
don't know.
particular,
So,
and we can put that expertise to work for them before
like,
they
just
don't
because
have a
somebody
path
buys or
of
sells something, it's like, like
expensive, where they've paid
we don't
for
know
home
why,
inspections, they've
right?
paid for
Like,
appraisals,
what are they long, or what are they doing with the money?
even
It's just
that
like.
one step.
Exactly.
I don't know. I don't
For
know.
us going through the process, it's an incredibly
I'm not going to sit here and say I know it all because I definitely don't, you know. But I kind of don't really. I'm not really worried like too much with like because I don't have to be told that it's institutional money flow that's moving that stock with a day like that. I don't know. I don't know how to explain my thought. It's just like when somebody does something like we don't know why. Like we don't know if like they're buying 100,000 puts or like 2,000 puts, but what are they long? Are they long 1 million shares, and they're backing it up with 2,000 puts, or that's the thing. And like who's doing what along with that? Like what you have so many different institutions and family offices. Right, you could have a few people doing one thing and then a whole another group doing another thing. So, I don't really get too wrapped up in. It's good to know, right? It's good to see where some big money, to follow the trail. But, I could pretty much just use the indexes and the sectors to see where institutional money is being put, whether it's energy, financials, healthcare, and stuff like that. And it's just how I look at the markets, you know. But I'm not subscribed to Unusual Whales. I don't know if it's on Thinkorswim or not. There's so much about Thinkorswim that I probably don't know about. This is what I wanted to do. Hold on one second. I was wanting to look and see what were some of the what was kind of going on. Man, we nailed that Oxy trade yesterday. We literally picked the bottom to that thing. And I knew it. I said it yesterday. I was like, I wouldn't be surprised if we got Berkshire news out. I think I'm pretty sure I said that yesterday. Like, we're ahead of the move. We're already in the trade. And then, like, people are going to hop in because they're just finding out about it because they're not looking at it. And then you have somebody to sell to. That was just crazy. That was just... I should have played. I should have put money to work on that position. I don't know why I didn't. I think I was too irritable with Tesla trade, and just my mind was foggy yesterday. So, what do we have here? So, financials are still outperforming. Semis are still outperforming. I can't believe this ARM company's doing so well. What's up, Basic? How you doing, man? ARM is just like, I don't know if you guys know what ARM does, but they pretty much like lease out, like when I say they engineer it, I don't mean like they physically make it, like they come up with like the crop design, like the blueprint to a semiconductor, and then they give it to like so like they'll own the rights to like a certain processor or whatever that they make, but they don't like physically make it with the material, like with copper and metal. They're not doing that. They're just designing it pretty much like on paper and blueprints, and then they give it to like Qualcomm or Taiwan Semis or whatever, and whoever one of the bigger manufacturers, they'll rent it out from them. They'll rent that out from them, and that's how they get paid. So it's just crazy the valuation that ARM has, and I wouldn't be surprised if you do start to see some selling here in the next like month or two on ARM. So I just think that it's just way overvalued, and that doesn't mean anything. Just because something's overvalued doesn't mean shit. I'm a firm believer in that, but I think ARM will have its day, and I think all it needs is a bit of news. I think one day, whether it's earnings, it could be earnings, which will be in the end of January or February 1st. It looks like. I think that could be a catalyst to bring ARM back down into like that $20, $30 level. I just think it's a little much. It's just semis are hot right now, and it's just, you know, it's been a good trading tool, that's for sure. And I've said it before that ARM it's a fun stock to trade because it sets up patterns pretty easy. Like you don't have to like fight for like, oh, should I be short? Should I be long? You pretty much know. It breaks its levels and it turns it into support or resistance. Actually, let me go here. Like today. Like look at that pivot high that it pulled back to right there. Boop. Look at that. Perfect. Perfect. Like literally like damn near to the penny, and that's what I mean by like this thing is for anybody that would be new to trading, like this would be a pretty cool stock for you to like get to learn price action on because it sticks its levels. All right, like you don't get much clearer than that. That thing fucking stuck it right to the penny, just about. I do think this thing was a little spready. It was. What is that? 112. I don't know if that's puts or calls. It's probably not even for the stock. Yeah, this thing is spready though. 117, 131 with a fill of 120. Something that. So, did you trade anything today, Basic? I seen that IPO was kind of making some noise. What was it? No, it went away. Shit. It was gapping up right off the IPO, and then it started consolidating, and then I just didn't even watch it. All right, so the SPY broke 471.45. It's down into yesterday's high.
Welcome back. Are we making too much of a short squeeze fueled rally in stocks? Of the 57 S&P stocks with the highest short interest, 41% are up 10% or more this month. Our next guest warns the correlation between short interest and equity returns has been running at a high, and after a record Dow close yesterday, he expects that correlation has only gotten more extreme, which may be a warning sign for markets. Joining me now is Tavis McCourt, Raymond James institutional equity strategist. Tavis, it's good to see you. So just kind of run us through the historical record here and how much this episode
Did
sticks
she
out
say
to you.
Tabitha?
Yeah, so this year is most notable. There's been 3 significant periods where
Tavis McCourt. Okay.
equity returns have been highly correlated to high levels of short interest.
I was gonna say I don't care what people do. I was just like, did I hear her say Tabitha? Like that's a pretty weird name.
A pullback in equities for the next 2 months. Another one was May and June on really the AI-related rally. We hung in there for about a month.
All
And
right,
then
I
equities
got to
kinda
do
started
some.
weakening again.
I got to
And the
do
third
some
one really has
searching,
been
guys.
November
Here.
and early December. So there's a lot of reasons for the rally, but on top of that, we've had a lot of short covering, and it doesn't mean that we're going to roll over completely. But
Sadly,
some of the fuel for the
I did not trade anything today. Sadly,
near its end.
and I was yearning for a trade. Don't, I was yearning for a trade today.
You know, I think at some point
I didn't think the juice was worth the squeeze on Tesla.
And
like I was saying a little bit ago that I thought that Tesla was going to go to like 150-ish. I didn't think it would give me that $10 move, or I probably would have played it. When I looked at Tesla, it was literally the best setup. I literally saw Tesla right there. Literally, when I looked at Tesla, it was right here.
Small caps that were
right there.
below historical norms are now only
right there. Literally, it was sitting right here, and I'm like, oh, that's a break, double bottom, holding the initial morning high. We broke the 100. We're going higher. But I'm like, we're sitting at 245. If my resistance is up at like 250,
I think we're okay. But
should I put up that money for a $5 move? Why don't I just, wait for the, we still have a gap below here, so I just didn't take it. I didn't take it. All right, looks like Tesla's trying to turn in here. So look, let's see if Tesla breaks 250 or 249. I'm sorry.
For sure. I mean, you can think of
with the volume. So I still don't trust the short, even if it does pull back. Hold on, let's see here. Let me resume here because it's just not getting the volume. Look at those candles. Look at those 1 minute buy side candles. They are legit. That screams bull. And I just don't want to sit here and try. I'm not fighting the trend. So this thing could hold and you could get another leg higher. It's probably coming back down to test 100-day, but Tesla's not a play for me. I would have had to have been in it right off the bell, off that double bottom pre-market right here to take it. Or at yesterday's lows.
You just don't know for sure.
At that support area.
So before we know for sure if this soft landing really is stuck.
All right, takes some courage to issue the warning in a week like this. Tavis, thanks for joining us. We appreciate it. Yeah. And we'll find out, as you say, in a couple more weeks if this short squeeze runs out of steam. Coming up, rent inflation in November jumped about 7% from last year, but
the other one was Alibaba.
Come down. Why Manhattan rentals could be at a turning point. Next on The Exchange.
The other one was Alibaba. I felt like this morning I couldn't find a trade. I was looking at some of the names we were looking at throughout the week. Oxy. That was an idea from yesterday, and it was flat. Like it pumped and it never broke back down. Because I was going to see if I could grab like $1.50 and push to the downside and try to just like get in this area down here. But it never did it. It just stayed sideways. The other one was Baba. I was a little late on it because it just, right off the bell, it just went. And I'm like, all right. You know what I mean? Like, what am I going to do with that? I'm not in it already, so we'll get our chance with this because I'm looking at really I wanted this area here, but it gapped up above it. I looked at this name last night and was like, it was literally just about pretty much the same setup as Oxy Petroleum, as Oxy from yesterday. So I was hoping to see if I could get like a pullback to 71.50. Right, I think that is. Yeah, right here, this double top. 71.50, right? I was wanting to see if we could break this 71.50 resistance, turn it into support, get my long, and grab $2 or $3, $4 out of it. Take it as it goes. But we went right into this range here, and that range is from 72 bottom to 73. So maybe we look for 72 to become support again. Let's look at a 15-minute chart. I wonder how long it is for this thing to start squeezing because it's just so oversold. Like somebody's got to start thinking about taking profit. Man, I wish I could have got this entry here at 71.60. That would have been a pretty bad entry, man. Been a nice entry. That break above there, it never pulled back into it. It just went. Like, look at that. It just went. So, it's coming into support right there. Let's look at this 1 minute chart to see if you start to see some, see if we see an increase in volume. No. It did break VWAP a little bit. Well, that's also because I have extended hours on, so VWAP's probably a little bit lower than if I were to have it off. Yeah, the volume is to the sell side right now, but look at that buying. Right, look at so that's up there. Yeah, we could get some buyers to step in here. We could. It's possible.
That rents actually fell in the nation's largest rental market. Median rents now
I'm just gonna watch it and be patient.
Average rents are still above $5,000 a month, and apartments are still 11%.
I want to watch Amazon. Oh, Roku did the thing. Roku went today. Or yesterday it did. Yesterday it really sold off. Yesterday.
Brokers say landlords don't want to officially cut list prices, so many are quietly offering a lot of concessions, like a month of free rent or even.
I gotta figure out what I'm gonna do.
Better deals are leading to more rentals. The total number of leases.
Like financials are just taking off.
10%. Rising supply suggests
I gotta figure out where I'm gonna get, like what I'm gonna be long, because like I'm trying to, you know, stick with the trade that involves like the sentiment, and the sentiment is rates, longer term rates are pulling back. So therefore, maybe mid-cap companies are, you know, should get a bid. Like I say, your solar, your, you know, the names that have a ton of debt, or depend on financing to get revenue. You know, semis obviously would be there, but not as much as as solar stocks. Trying to think of another sector like biotech. biotech's just really biotech's just cash intensive no matter where rates are, but it does help when rates are pulling back.
September where they were flooded with calls. Similar apartments listed in October, November.
Maybe utilities.
Not hearing from prospective renters. A lot of questions about why that might be, but they're just not getting.
You know, some of these names aren't liquid though, and I want to trade options with it, or at least be able to back it up with some options. Oh, cybersecurity, like Zscaler, your software names.
It's a demand issue, and again, some of it
Look at
might
Square,
be
it's up
brokers
6
speculating
points.
here, but some of it might be these cutbacks we're seeing, you know, at Citi and some of the financial institutions also cutbacks.
Dude, Moderna's going. I wonder if I could take a short on this name. It broke that level. I said it this morning that I thought that you have way too many people that are stuck in Moderna, and anytime it pops, unless it's like serious, like they've cured cancer, this thing's just going to get sold. Every pop, they're going to take their money. They're going to take their loss. Because you have a lot of people sitting in this name that bought at way crazy valuations. Now me, this was the only stock I bought, Clarity. My average in this name was around $20, $30.
Real estate, it's one of the top performing sectors today as yields retreat to their summer
And it was the only COVID name I bought. I'm not trying to toot my own horn. It's just I got lucky. It's not that I got lucky. It's just like when I was reading, like what did I think would be the winner? I thought it was Moderna because they were already going into stage 3 while everybody was like trying to get past stage 1. And it just felt from the articles that I was reading, Moderna was going to be the winner, and they were. And they were. Moderna and I guess Pfizer, but I didn't buy Pfizer. Gilead, none of them. I just bought mRNA. And it paid off. It paid off. Got some minor support here, pre-market levels.
Benzinga market update. Major indexes are now mixed. Dow roughly flat, S&P down 0.16, Nasdaq down 0.5%, and Russell up around 2.2%. Following that Wednesday Fed decision and earlier unemployment data.
They just had to throw the following unemployment data in there. Like, come on. Come on. Roblox is hanging on. I feel like there's a short coming. I'm gonna go grab a cup of coffee real quick, and a snack, and we'll see if we can't put something on at the end of the day. The markets aren't really moving too much, so it's not like I can play the equity markets, or you know, I can't like not Tesla, like the indexes, SPY Qs. They're not really moving. At least the SPY wasn't. But that doesn't mean it can't move the last hour of the day. Is it holding? No, it's not.
Welcome back to the exchange. Multifamily REITs are on the rise today as the 10-year dips below 4%. My next guest knows a thing or two about that. He's developed over 170 properties in the past 3 decades, totaling more than $11 billion in real estate assets. For more, let's bring in Kevin Maloney. He's Property Markets Group CEO. Kevin, it's good to have you here. Thanks for joining us.
No, thank you for having me. I appreciate it.
I don't know if you just heard that chat we were having about the New York market in particular, where it seems like there's been some demand softness.
Yeah, so I'll tell you that in the rental market specifically, I have a couple of projects going up in the New York area. We're actually seeing pretty much the opposite of that.
50% off.
I'm thinking about a pullback on Roblox. I am. I'm thinking about it. Maybe get like 2 weeks. Maybe get next week options on this.
Over 170 properties in the past 3 decades, totaling more than $11 billion.
I think I might try and put this on.
For more, let's bring in Kevin Maloney. He's Property Markets Group CEO. Kevin, it's good to have you here. Thanks for joining us.
No, thank you for having me. I appreciate it.
I don't know if you just heard that chat we were having about the New York market in particular, where it seems like there's been some demand softness.
Yeah, so I'll tell you that in the rental market specifically, I have a couple of projects going up in the New York area.
All right,
We're
so
actually seeing pretty much the opposite.
let's see what these are for next week. Let's see what we got going on
You might
here.
be aware that the New York State recently curtailed their 421A program. You actually cannot launch a rental in the New York City corridor without having a 421A tax abatement.
43.
So the supply side of the equation has completely stopped. This happened 5 years ago as well.
Because you have a nice bear flag right here, guys.
And
just
at this
remind
point,
us what that tax abatement does and why it went away.
Come on. Bear flag right here on the 1 minute or 3 minute. What? It don't matter what time frame.
35-year real estate tax abatement. Taxes might be $20 per
I'm
square
getting
foot. And,
whatchamacallit.
the cost of building housing with all
I guess
housing
it's like
requires
acid
an
reflux
affordable
or
component
something.
in New York City.
Right here. Right there,
It
guys.
would be impossible based
I mean, I
on
guess
the
you
cost
could
of
call
the
that a bear
infrastructure
flag.
to launch one and to build one.
Right.
Especially in today's environment. But even with where cap rates and interest rates were at 3%, it was not a feasible project. So for decades, many decades,
So let's see what happens here at like 44.
which allowed you to have a 30-year tax abatement on your real estate taxes while you were in this particular program, which made them viable. That they have now sunset that program. So if you were not really out of the ground in the last probably
I gotta
6 or 8
put this
months,
here because this is going to
really
definitely be a support level.
supply of any
Like a
even
minor
market rate or
support
affordable
level.
housing has just come to an end.
That's really
And
interesting.
All right.
I haven't been keeping up with my New York Post reading, clearly.
You'd have to speak to the legislator up in New York, up in Albany, but no question, it's going to probably in their wisdom they felt there was just too much being given away, and but the result is the supply side is really just there will be no new housing created.
So you think, or I don't want to put words into your mouth, but it's pretty obvious if there is a stall and new supply coming online, maybe that will put more upward pressure on rents in that market. But you have exposure in a lot of different markets. What would you say is going on with the consumer, with rent patterns? What are your we're showing some of these markets.
I gotta do it. I feel like if I'm gonna do this, I gotta do it now. So I'm just trying to make sure that
and then of course the Fed,
I'm seeing everything correctly.
18 bips,
Trade line crossing over VWAP.
SOFR is 530 today.
They're crossing
Last time
below
I
it.
looked, or somewhere around there. I mean, you're talking a 30x
Volume.
increase in a
Volume.
historical short period of time. That really put the brakes on all. I don't know anyone who could really get based on.
All right, I'm gonna go get a coffee. I am looking at
Inflation during COVID. I don't know that.
because I want to see if we can pull down to like yesterday. So if I'm gonna have possible support at 43.50,
but saying that, a lot
I
of
was looking at the 43s, and I think they're about 60 a
A lot of
contract.
people entered those markets. A lot of units were creating a lot of housing, and you're going to.
And again, this is for next week, 65, 67 for next week contracts.
Start to see some rent increases, but
that is fascinating.
They're like shortable. You know what I mean? Like just because something's not a long doesn't mean it's a short. Just because something isn't a short doesn't mean it's a long. That's the old saying. I know, I'm with you. That's where I'm at. Alright, I'm looking at Roblox because I feel like if I were to get contracts next week, I could at least get $1 pullback into this level. But I could also get screwed. It could also go up and before it goes down as well. I just feel like this is the breakout. Let's let it pull itself back and close down here somewhere. Getting $1 out of it. But I'm with you. I'm gonna go fill my coffee up real quick and then fill my mug up and then I'll be right back. Tesla. I do have my eyes on Amazon because it is just a disaster. Markets are coming off one of the best days they've had in a while. Look at the SPY. It's selling off on volume, guys. The charts look so funky when you have these big moves. It looks so weird. Good. They should. They should block to ban it. It's not like the person who is a law-abiding citizen is the one out there fucking making dumb decisions and killing other people and not killing themselves. Nah. I haven't, Chris. How you doing, man? Yeah. I feel, buddy. Said I like my money. I haven't. I kind of just, it's been tough picking. Like, I talked to myself out of going long Tesla because I didn't think the juice was worth the squeeze. I just went over this a little bit ago, but Baba, I was going through the charts and what I was looking at. Baba, it just ran off the bell. Oxy never pulled back. I was just thinking about Roblox, and I'm looking at Amazon, but I noticed that the SPY just started to pull back on some volume here. So it kind of caught my attention. I'm going to go grab a coffee real quick and then see if I can't find something to put on and put it on overnight till tomorrow and possibly into Monday to get something going here. I'm going to look to see if we turn... Man, look how far below we are from VWAP. This might be a hell of a buying opportunity here, guys, to go long. It's not that far, but it looks pretty far away from VWAP. It kind of is. 469.20, 472.15.
Let's look at the 10-year now. We are down below 4% still. Yes.
Yeah, I briefly looked at SoFi. I briefly looked at it. Financials are just killing it. Financials are killing it. Like, Bank of America is just... It's a winner.
We start with the record market rally, though, following the Fed decision. The major averages on pace for a 6th positive day in a row.
Up there.
And I guess we have to wonder, is the optimism going to continue into the new year and what it could mean for the Fed going forward?
I keep forgetting. Oh, so Nvidia finally pulled back. This was another one that I was looking at trading today, but it just was consolidating, right? It's just it wasn't moving. So it's a good thing I didn't try to throw that trade on, because it would have just sucked premium out. Look at AMD, guys. What does this mean for ARM then? Maybe we could look for ARM to pull back. If semis are if the market's starting to pull back with semis. So I'm going to look for AMD. If AMD breaks 136, I'm going to... Let me make sure. Let's make sure of this. I don't want to just say something and it not do my due diligence. We got some room. It's well over 2%, and as you know, in normal times, that real interest that was a nice buying opportunity right there on the SPY. Like just a nice scalp long.
Well above that, and the Fed, I think, is very concerned
I'm thinking about this paper trading
maintaining too long, too tight, and that may actually...
Yeah, that sounds good. That sounds smart. I would. That sounds like a great idea. You can back test some things and you know.
And that's exactly what he's hoping to do. Let the market do the work of lowering that real rate back to more normalized levels.
All right, so what was I thinking about?
Jason, what's the probability or the concern that you may have that the market's gone too far with
no, I need to take ARM away from it because these spreads are just insane. I'm good on that.
But the market seems to be acting that way. If you look at the probabilities, it's up darn near 80% or 90% for a rate cut in March, but he didn't say March.
Yeah, look, I have to admit I feel a little bit like the Grinch sitting outside of Whoville
right
right
so
now.
Oxy's
I
doing...
tend to agree with what Bill said in that the Fed
pulling
knows
back
they've
here.
taken rates really high to a point where it's damaging to the economy, and they need to pull it back in. But there's just such a distance to come in at this point in time.
Come on, I need some names here. Just look at Amazon. It fucking took back 3 weeks of trading in one day. Yesterday was the biggest day the markets had, and Amazon has already done half that volume today. Look at this. They can't get rid of this thing fast enough.
In order to get to where they want to get. They're trying to thread a needle here, And this is difficult, and the markets are basically saying, it's done. We're good. We're going to move on from here. That doesn't seem about right.
I can't do nothing with Amazon. It's already did the thing. All right, I'm gonna go. This time I'm serious. I'm gonna go put some coffee in the cup.
Substantially, yes, that's supporting equities. All of this kind of hopium into next year. But to have a 10-year still
Fucking big boys are selling off.
3.5
Or is Apple the last to go? Maybe. Oh, it already went. So I was gonna say there's a trade we could have probably taken earlier, and that was following, the top set, the FANG stocks down. Wait, Meta.
We're now adjusting to an environment of 3.5% plus.
Meta hasn't really sold off yet either.
Fair value on short term is somewhere in the 3.5 range. Fair value on longer term, like
Netflix, same thing.
4. This is a big difference.
Went right to that level and stuck it.
The economy hasn't really made a way to filter it through. We're still sitting on a lot of debt at lower rates that's going to be rolling off over the next couple of years and need to be refinanced.
I worry a little bit, Kelly, that the market's acting like money's free again. It's not free again, and it's not going to be free again. But, Bill, I guess there was a lot of pent-up demand, or that the idea that the Fed could hike again, which now looks to be off the table, was something that held back investment in the equity market. There were a lot of people, Bill, who were pretty happy for a few minutes there that were clipping Treasury coupons and collecting 4 or 5% in money market funds. Maybe they're not so happy today. What do you guys think? Are they still investing in treasuries?
Think we get a little short on there?
Risk asset. If you were trying to make quick money, it was a good thing. But maybe for the long term,
is it a bit too easy?
Well, as you see what's
is that a
happening
bit too
today,
easy there?
Portfolio readjustment, right?
I just don't know if the volumes.
I got to do something with my money rather than sitting back and clipping coupons. And I think that was fed a lot of that market rally. But now you see the market itself is rotating. It's rotating from one sector to another. Oh, that magnificent 7 surge that we had is now been brought into other cyclical companies. And I think
that's so insane.
Really
we were early as hell to this name. Berkshire paid us yesterday. Whoever took this trade from yesterday, this call out, one of the top ideas with Tesla, man. You got paid. Charlie Munger said, here you go. Here you go. Rest in peace.
At 3.5 to 4% long-term interest rates, that's a good number for them to
just because something's not a long doesn't mean it's a short, but I'll be damned if that ain't a nice setup. I just need a little more volume, I feel like.
That is where the burden's going to be, and crowding out is going to occur. Government's going to suck in money that really should be going to the private sector.
Jason, I think most days are not days to make any changes in your portfolio. I think very few news things come along that really matter that much. I think yesterday might have been one of those days. And I'm just wondering how you're thinking about portfolios differently.
All right, I'll be right back.
My take was that Powell did what I thought he was going to do in January. He did it yesterday, so I thought there was time. That time has gone away. And I'm wondering if you think there are things and adjustments people ought to be making because of those events yesterday.
Look, I tend to agree with you. We quite often try to keep our bat on the shoulder in terms of portfolios. Right. Quite often that it doesn't make sense to make big shifts, but then sometimes the markets present you with opportunities to do a little bit more. And this is one of those where it just feels like the market's gotten a little bit ahead of itself. And even if you're looking at your portfolio back in time here, if you're positioned well about, say, 3 months ago and you look to your portfolio today, the likelihood is it is not positioned the way you want it to be today because of the magnitude of movement. So that provides opportunity to bring it back in line. And that, from our perspective, is getting a little bit more conservative in portfolios in recognition that the market seems to be just a hair ahead of itself at the minimum.
Quick question. I don't know if your strategy, Jason, involve bonds, but what do you do after this move?
Look, bonds, 5%, I think bonds were a fairly good deal at that point in time. We were actually saying that unlike the equity market that was overvalued, bonds were actually undervalued. At 4%, we think they're actually reasonably fairly valued. We've been pushing out a little bit on the yield curve. We've kind of paused that a little bit and are sitting with a pretty neutral duration exposure right now because we think bonds properly reflect the expectations for interest rates that are sitting out there. Now, when those expectations change, that math will change. But for right now, they're basically in line with fair value.
Bill, real quick, we have to go. When does the Fed cut and by how much next year?
if the market continues to lower long-term rates, the Fed can delay, and I'm guessing they delay until somewhere around mid-year when they can actually do a large cut and be done with it before the elections.
And how much next year?
I'm guessing they have to lower rates by about a percentage point.
Wow. Thanks, guys. Jason, Bride, and Bill Lee.
That's how you get just the trading sessions we've had the last couple of
Right.
days. The 10-year yield below 4%, below 390 earlier for the first time since August. Rick Santelli in Chicago with more. Tell us, what's the buzz, Rick? What does everyone make of this?
You know, I think the buzz is that the Fed being done is where the party began, and then the Fed pushing yesterday the notion that maybe they're not done, but by the end of the press conference, it certainly seemed as though all of my sources had a major change of heart, and we're definitely in that FOMO camp. It's all about FOMO. So if you look at a two-day chart of 2s and 10s, you can see that right as the meeting was being announced, the statement was being announced at 2 Eastern, what we saw was a drop of significantly larger proportions on the short maturity to 2-year versus the 10-year. So you dropped about 30 basis points on a 2, you dropped about 23 basis points on a 10. Why is that important? Because if the short maturities are leading the way, the last guest said he believes that the 10-year yield should be closer to 4 or 4.25%. That would make sense if you interpolate where the 2 years going to go with a Fed that's going to ease nearly 100 basis points if that actually happens. You look at 2s and 10s on an annualized basis. I always use the 30th of December. Right now, 2s are under that 443 close. 10 years are just a bit over it. They closed at 388. And the dollar index, it closed at 103.52 on the 30th of December, which means on the year it's down a smidge less than 2%. But get this, on the week thus far, it's down over 2%. So what's going on? There's a lot of FOMO, and a lot of things have to work out picture perfect with regard to the Fed. But doves rule, so maybe the FOMO is on the right course. Steve?
Rick, I want to follow up on this because you and I talk to different people. I talk more to the managers, and you talk to the traders, and we can debate and duke it out who's smarter. I have a lot of respect, obviously, for the guys you talk to. Everybody I talk to over the course of this year has been short duration relative to the index. And that's part of the whole FOMO thing. And I think even today, they're short duration relative to the index, which if you want to translate that into English, it means they didn't own enough 10-year, 20-year, and 30-year paper. Is that still the case, Rick? And does it create potentially more gains to come on the long end of the curve?
You know, I think you're right on it. I think an easier way to look at it is the yield curve 2s to 10s.
Right.
And many, of course, were looking at selling the 2s and buying the 10s. That trade is reversing, and I think a good chunk of the phenomenally quick drop from a one touch of 5% to under 4% was driven by the liquidation that you're alluding to. But I think it's almost done. As a matter of fact, I think many traders are starting to go the other way. The fear of missing out on the Santa Claus equity side is almost wagging the dog on the Treasury side.
We got to come back to this, Rick, because the steepener trade is the equivalent of Rocky Road ice cream being the flavor of the month. Everybody is in it. It's not quite paid off yet, but people are still in it as a trade. We'll come back. Let's do a segment on the steepener.
And one more thing, real quick. One more thing, Steve. The other thing people are talking about on the floor is the most recent group of governors that are put on the FOMC committee are doves.
For
and
next
the
year.
Elizabeth Warren side of the equation, yes, that basically Powell is going to continue to get outvoted and that politics is going to win. Maybe not politics directly tied to the Fed, but it is an election year, and there's many in Congress who do not want to see rates up at current Fed levels.
That's another discussion, the board for next year, and whether or not Powell was leading or led by the committee. I'm hearing a little bit of both on both sides. Thanks very much, Rick. One more piece of economic news out this morning. Retail sales beating expectations today, coming in at 0.3. We're looking for a negative number, but looking just at retail ex auto and gas, it was even stronger, 0.5, 6% death of the consumer, greatly exaggerated once again. But I want to point out that's very close to the CNBC NRF retail monitor. powered by credit card data we get from Affinity Solutions. We launched it last month.
I remember.
We aired that data on Monday, October. It came in at 0.08, was also within 0.2 of the government's number, which were revised down closer to our number. And you can see there the government's 0.77. We were 0.77. The government came in at 0.56. We're not always going to be that close. The gap some months could be wider than others, especially because our data should end up closer to the revised census data because it's not estimated data. But it's a good start for retail data that we're really proud to be offering
Not
viewers.
least because I don't know if you caught Dave Rosenberg last hour when he was talking about some of his steadfast bearishness, said he doesn't even believe the government data half the time. So here's another data point that can at least tell us what's going on with the
And
economy.
it's going to flatter the fourth quarter GDP reports.
Important to note.
Yep.
And by the way, tomorrow morning, Squawk Box, 8:30 a.m., you and?
John Williams, New York Fed president. Now, just to be clear, this was planned 6 months in advance. They are not rolling out John Williams as some kind of emergency redirect on yesterday. And the crazy, we plan these things. We have done it for many years. John sits down with us at the end of the year.
It doesn't mean if he wants to seize the opportunity.
To redirect. Or otherwise give us more information. You are correct, Ms.
Looking
Smith.
forward to that. Coming up, Wall Street's alt-right alternative. Nikki Haley earning support as a pro-business alternative to Trump. What is her economic policy? Plus, a real estate power player will speak to Don Peebles about the state of commercial and residential real estate. Power Lunch is back in 2. Dow's up 59.
All right, sorry about that. I had to grab a bagel because when in doubt, bagel, cream cheese, blueberry bagel. I was thinking about spreads. I was thinking about maybe selling, doing a few spreads, like going into the end of the day. I was thinking about it. Just got to see if it's worth it. You know, the VIX is down. Let's look at let me just look at the SPY and see. I'm going to eat this real quick, so I'm not crunching in the mic. But I am here. Look at this. This might be a nice setup, guys. If we can reject this area. All right, maybe we might have a trade. Man, but VWAP's all the way up here. I don't see it pulling back. If we pull back off of this level, I would look for, I don't know. I don't see a right here. I would look for looks like it already did hold it. 470.59. All right, if I do something, I'll let you guys know. I think you gotta. I think you're gonna run it up and at least test prior lows, if not VWAP. So in order for me to get long, I need a pullback. I need a pullback off that level. Yeah, that would be a perfect spot, like right around here. And it already did it, so I was a bit late.
Welcome back. Wall Street always wants what's best for Wall Street. It goes for everything, especially the presidential election. Some would say, gridlock is good. Others say, could Nikki Haley be what's best for investors? Eamon Javers is here to explore that option. Eamon?
Hey there, Kelly. Well, Wall Street is in the middle of a major swoon now for Nikki Haley, and it's really easy to understand why that is. As a GOP presidential candidate, the former South Carolina governor offers a mix of traditional Republican tax and spending policies that Wall Street traditionally loves. Haley rolled out her economic plan back in September, pledging to eliminate the federal gas tax and to offer permanent small business tax relief. She would eliminate the state.
I can tell you right now,
deduction.
that's a waste of money.
Cause some angst, though, to her supporters in the Northeast.
That's a
where
waste of money.
taxpayers benefit the most from that provision. She also says she would cut
Nothing
income
wrong
tax
with her.
rates. Nikki Haley,
Other than a few, other than
Joe
like
Biden
she's
and
really
Donald
political.
Trump for running up the federal deficit
And acts like
says
your
she
friend,
would
just like
link
Biden,
federal spending
but they
to a
ain't your friend and they
percentage
want
of
to
the overall
regulate and
U.S. economy. She would
have
also
you do
eliminate
things
Biden's
so they
green
know who
energy
you are
subsidies
and get in your
and says she
business.
would
But she's
withhold
got that.
Congress's pay
She's got
if it
that
fails
side
to
to her.
pass
You
the
can see
budget,
it.
although
She lets
it's
it
a little
out every
hard to
now
see
and
how
then.
she would get Congress itself to go along with that one. Haley also says she would cut regulations by requiring congressional approval for any federal rule with an economic impact of $100 million or more. Now, Haley's critics say that although she denounces corporate welfare now on the campaign trail, as governor, she lavished subsidies and tax cuts on companies such as Boeing, Volvo, and BMW in an effort to bring them to South Carolina. And they say that simply offering more goodies to lure jobs away from, say, Georgia does nothing to move the needle on jobs nationwide and could cause workers pay cuts while placing a burden on taxpayers. Back over to you guys.
Eamon, tell us how Nikki Haley is stacking up against the polls, say in head-on races with former President Trump and even against President Biden.
Well, look, what's interesting is she's actually polling better against Joe Biden than Donald Trump is, but everybody is getting absolutely creamed on the Republican side by Donald Trump. Donald Trump is running away with
if
this
anybody
in these
actually
very
believes
early
that,
polls, and we should say these polls are very early.
This is what's wrong with TV.
A while now before any meaningful contests actually happen, but all of these candidates, including Nikki Haley, have a lot of digging to do to get themselves out of the hole that they're in. But Republicans who are looking for electability in a candidate might look at Nikki Haley because up head-to-head against Joe Biden, she polls better in most of the polls that I've seen than Donald Trump does.
We're not that far. We're a month from Iowa. Eamon sounds like he has what I have, by the way. I think we have the same cold.
I had it too.
Eamon. Yeah.
It's going around. Somehow it got down to the D.C. Bureau.
Go ahead, Steve.
Eamon, I was at a dinner with a bunch of executives, and they were all really excited about Nikki Haley. I just wonder the extent to which this is a sort of either elite Wall Street, maybe elite Washington phenomenon that does not have a presence or staying power at the grassroots level among the Republicans.
Yeah, look, I mean, if you look at the people on our air who are endorsing Nikki Haley, right? You see people like Jamie Dimon, who's a Democrat, saying that Democrats on Wall Street should send her money. You know, you've seen other billionaires out there endorsing Nikki Haley. The question is whether that can translate into real support among people who actually vote in the caucuses and in the primaries that are coming up in 24. So far, we haven't seen any evidence of that in the polls. And one of the big questions here is, are all of these candidates who are running against Donald Trump right now on the Republican side sort of there for the, in case of emergency, break glass moment where if Donald Trump's legal troubles get the better of him, and he has to drop out of the race for one reason or another, they then become viable candidates. Because looking at the polling now, they're really not viable now. But this is a situation that we just haven't seen before, with a candidate running at the top of the field, facing the scale of indictments and the scale of legal jeoprdy that Donald Trump does.
All right, do me a favor, Amy, we got to go, but send me
He
an
just
email about how
contradicted
she
himself.
pays for roads by getting rid of the gas tax.
He just contradicted himself.
Okay.
He said she was leading, but
Thanks
yet
very
ended
much.
with
After the break,
the person that's
post-COVID
leading
Moderna.
has charges.
Moderna?
Just because you
Moderna?
have
What is the
charges
future
does
of the
not
drug
mean
maker
you're
beyond
guilty. Like, let's
coronavirus
just
vaccines?
put
We're gonna
that
talk
out
about
there.
that next to get the
The
pronunciation
state
right.
can try to F you sideways, up and down. So just saying, oh, the state went after them, that's discrediting the person. Because how many, I'm just saying, whether he's guilty or not, like, to just say that they have, like, just to say somebody has something, like, the point is you can't stop the state from doing things like that. Like, it's not, I don't know. I don't know how to say it. Just because somebody has charges, doesn't mean shit. It's just, it is pretty ridiculous. Just to show you guys what's going on in Georgia, what I would do is go take a look at Young Thug's court case. Go look at Young Thug's court case, and you'll see what a fucking joke that whole state is. they really are like the truth about whoever is leading with these, not necessarily even the judges, because the judge is supposed to not be like leaning one side or the other, but he clearly is. And the state has no case. And every day that this case goes on, it just further and further shows the waste of money. They didn't have a case from the beginning that it should have been never taken to trial because they didn't have a case, but they decided to do it anyway. Now they're looking like fucking fools. And this is what's going on in Georgia. It's like what's going on is coming out. Starting with the Young Thug case, them going after Trump, just the list goes on. The list goes on. It's hilarious. It's hilarious, and it's sad because it's a waste of money. People don't have, citizens don't have money to just waste like that just to go do things. Let's just try to indict this person when we know, it's just like, who do the people go to before the court hearings? It's like, do we have a case or do we not? Right? I don't know. But keep on rocking, Georgia. It used to be a state that people liked, and it's starting to come out that
NBC.
You got a lot of shit with you. Whoever's just
Shares of
been in
Moderna
charge
sharply
lately,
higher today following
sad.
data for a skin cancer drug it's developing with Merck. Angelica Peoples joins us now with more on this interesting development.
They're they're
Moderna
showing
and Merck
people's
are saying that
faces.
their
They're showing the
experimental
jury's
cancer vaccine
faces.
Plus Merck's Keytruda cut the risk of recurrence or death from melanoma by 49% after
It seriously
3 years.
is crazy, though.
Now, this vaccine
If you guys
is
haven't seen
tailor-made
what's
for
going on
each
with that Young
person
Thug
to
trial
help their immune
or that
system
Rico
recognize and attack
gang
their
trial,
cancer. The idea here is
is
that by combining the
crazy.
vaccine with Merck's powerful cancer drug Keytruda, that it'll keep the cancer from coming back after it's been surgically removed. These results are the latest update from a phase 2
I'm
study,
surprised
and they're even better than
state
what's been
hasn't
previously
just
shared.
said, all right, we're
Now,
going
Moderna
to
thinks
drop
that
it,
regulators
because
might be open to
every
quickly
day that goes
approving
on,
the
it just
combination
proves the
based on
point
this
that
data,
there wasn't
but
a
analysts
gang.
aren't convinced
Whether
that's
there
possible.
was,
And I reached
whether
out
there
to
was or
Merck.
wasn't,
They're sounding much more conservative.
they're not
telling
proving
me they're
it
focused on
at
the
all.
phase 3 trials that recently
Matter of
got
fact, what's
underway.
getting
So
proven
we'll
is
have
the
to
fact
see
that there
exactly
wasn't.
how possible that is.
It's
There's
just
a little bit
crazy.
of a company
And
split
the
there.
fucking
Maybe Moderna
the
just
state's
has more
attorney
noise or obviously less robust
added
of a pipeline. The
lines
shares are
into
up almost 8%
Instagram
on
posts.
today.
Yeah, and it's interesting because,
Like,
we
it's
saw
that
yesterday
bad.
with Pfizer,
It's that
investors
bad.
are so focused on what's next. for these
Telling the
COVID
people she's
heroes.
asking
They saw
questions,
such highs over the
no,
past
that didn't
year,
happen.
and especially for a company like Moderna.
It's like,
you know, any piece
no,
of
no,
move,
it did
any piece
happen,
of news,
actually. I'm the
excuse me,
cop.
can
It did
really
happen.
move this stock. So an 8%
No,
move
it's-
today
it's so
is
funny.
really
It's
not
so-
all that uncommon
it's
for
crazy.
Moderna these days.
It's
How
crazy.
quickly in a normal track would this thing be able to come to
If you
market
guys
if the
haven't
phase
seen
3
what's
trials
going on
are-
with Young Thug, you guys got to go just
come out well.
YouTube
So
some of that
Moderna
stuff
CEO
because
Stefan
it is.
Bancel was on Squawk Box
it's
this
crazy.
morning, and he
It
said
really
that
is.
a normal timeline, if they waited for the phase 3 trial,
And
would
it- and
be
it
about
just goes to show-
2028. But they're thinking that if they can get this
don't
to
know,
market
that-
sooner, they're looking at more like
they're not worried about what they
2025.
should be worried
so that's
about
a
at
pretty
the end
big
of the day.
difference, 3 years.
That's a huge improvement on outcomes for a disease that I know I've lost some people to that disease. It would be really quite remarkable if it was available.
Definitely.
Thanks,
It is
Angelica.
2:30.
Angelica Peoples. Let's get to Contessa Brewer now for the
2:30. So we got a
CNBC
little
News
bit of time
Update.
here.
Contessa.
I'm not gonna
Administration
give up.
is urging Israel to scale back its war with Hamas. National Security Advisor Jake Sullivan met with top Israeli officials today. According to the White House, he discussed transitioning from the large-scale
what?
ground invasion
It's
to a
not
more
up to you to tell
targeted operation in the near
Jerusalem
future.
what to do and
International
not to do.
pressure
They're their
is,
own
of course,
country.
mounting right now for Israel
Nobody
to do
told you to
more
not go to
protect
Iraq.
civilians in Gaza.
Nobody told
The
us to not go to
jury in Rudy
Afghanistan.
Giuliani's civil defamation trial is deliberating right now. They will decide how much the former New York City mayor and Donald Trump ally will have to pay in damages to 2 Georgia election workers. The mother and daughter at the center of the case are seeking at least $24 million each. They say they suffered reputational damage when Giuliani falsely claimed they committed fraud in the 2020 election. And a spokesperson for the late Emmy Award-winning actor Andre Braugher confirmed today
you
that
can
he
make
died
claims
of
all
lung
you want.
cancer
You do it all the
just
time,
a few
right?
months after being diagnosed. Auer was best known for his roles on NBC's Homicide, Life on the Street, and Brooklyn Nine-Nine. He died Monday. He was 61 years old.
I fucking hate politics.
Speaking of the deadliness of these diseases, Contessa, thank you very much, Contessa Brewer. As we head to break, let's get a quick power check with Solar Edge up 15% today on a boost, most likely from the Fed moving forward in a lower rate environment. On the negative side, Arthur J. Gallagher down 7%, the insurance broker having its worst drop since April of 2022. Power Lunch will be right back.
Alright, good thing I didn't short Roblox. But that's where the risk to reward would have been here, if not here. So oh, it's RCAT. That's what it was. RCAT. RCAT. Alright, so we got a pop here. CCCC. CCCC still had crazy amount of volume today. Still had a crazy amount of volume. Does anybody know where the Delta, Gamma, like where are Greeks on Thinkorswim?
Welcome back to Power Lunch. 2023 has been a tough year for commercial real estate office in particular.
Risk profile. There is no delta for this? That makes no sense. Hold on. I should be able to get it. I should be able to add stuff right here, shouldn't I? In chat? Damn it.
Yeah, I mean, look, I'm optimistic in the long run, but I think right now what's happened is, and interest rates aren't affecting this, it's how people work. People changed how they work. They're working remotely. If you look at the day in New York City,
welcome back to Power Lunch. 2023 has been a tough year for commercial real estate office in particular, as high interest rates and tightening credit hit sectors. Office seeing the biggest pain with Castle data showing half of workers are still being remote. And my next guest expects this trend to continue next year, causing lenders to sell properties at steep discounts. Joining us for more in an exclusive interview is Don Peebles, billionaire real estate developer, CEO and chair of the Peebles Corp. Don, it's great to have you here, not least because your tone goes a bit against the tone of markets ever since the Fed meeting yesterday.
yeah, I mean, look, I'm optimistic in the long run, but I think right now what's happened is, and interest rates aren't affecting this, it's how people work. People have changed how they work. They're working remotely. If you look at the best day in New York City, is a 60% occupancy rate in office space, and that's on a Tuesday. That's the best yet. But overall, on an average, it's hovering around 50%.
I find Wednesday, personally, is the hardest to navigate out there on the roads. Are things so bad that you're a buyer yet?
Not as bad yet. What's happened right now is that equity and mezz debt has been wiped out. And now the properties are on their way back to the lenders. And the lenders, the senior lenders, are going to be in pretty decent shape because they never levered up. They did loans at a 60%, 65% loan to value. And so therefore, I think they'll be okay. And so they'll rush to sell these assets out. I think what's going to happen now And we're seeing this more and more. Clarion just walked from a property in San Francisco the other day, gave it back to a lender. So you're going to see much more of that. And the lenders are going to begin to sell those assets. And that's going to happen in 2024. And throughout 2024, that'll be the commercial real estate story as more and more assets are given back to the lenders.
Don, how's your stuff?
Well, look, we are a development firm. So normally we develop and we sell, rarely hold. And so we're doing well. We see opportunities. We're now buying in the buying zone. I mean, we are an opportunistic company, and so we look for opportunities when the market's not functioning well. And so we're actually raising capital now for a new investment vehicle, which will be to buy commercial office buildings in the hardest hit cities that also are undersupplied in housing. And if you look at New York City, you look at San Francisco, you look at Los Angeles, they are all severely underserved in terms of housing. And so there's some conversion opportunities that we see as well. And I think also there's going to be a change in how people go to work, and it'll be more of a dispersed workforce. And so you'll have dispersed, office and employment centers that will be where people want to live.
So you stayed away from this stuff in the crazy low cap years. That makes you smarter than most people out there on the street, because people were going crazy for this stuff, bidding down these cap rates to places where if there was a 1% interest rate, they didn't work, let alone 5%. So here's my question. What discount is enough for you? I remember when my mother was shopping in Mexico and the guy said $100 for the ring. She said $1. What are you saying?
I'm saying, look, I think first of all, I don't think I'm smarter. I was probably greedier. I just couldn't see how we could make a lot of money buying at 3%, 4% cap rates in a zero rate environment. So I think when we see office buildings drop 40%, 50% what they sold for, what their values were, say in 2019, 2018.
I'm going to put on a trade here, guys.
That's where we're looking.
I'm looking at
and we're looking for, but some buildings are permanently destroyed.
I'm going to miss this trade.
And so we'll look at some of those. But our focus is going to be at those 50% discount areas.
Pull back and rejection.
Land's going to go down significantly as well because there's
already
going to be so many alternative uses, and so we're beginning to buy land as well.
But is this conversion story a bit of a, I don't know what you call it, a Bubba Meister, so to speak? Everybody's talking about conversion. I got to think it's hugely capital intensive, hugely debt intensive, and the payoff may or may not be there.
Yeah, it's almost like fool's gold.
Right.
There's some buildings, and I would say if I were to, we're trying to figure this out in our company now, but I think we feel that about 20% of the commercial office inventory as a whole has potential to make a good conversion. And then a little less than that in terms of a very efficient and cost-effective conversion. And so it'll be a solution for some of these buildings, but many of these buildings will need to be demolished and rebuilt.
Right.
And so I don't think that is a panacea to solve the commercial real estate crisis that we're going to see next year.
I'm just trying to make sense. The white books behind you, you're always on the forefront of trends, Don. Now I've got to think about this one. They're like ghost books there. So let me just say, Steve mentioned this a while ago, but the Fed's latest Beige Book survey was somewhat downbeat about how a lot of the regional economies are doing lately. And you are also in a lot of different cities, and ones you've been quite positive about that are outside traditional New York, Washington, D.C. Do you see any slowdown or change in that taking place? I mean, how would you describe some of these markets, everything from Charlotte to some of the other places we've talked about? Florida, obviously, you've been very bearish. Raleigh, Richmond,
get that 195. But here's the thing with 195.
Yeah, good question, by the way. First of all, I'm not a trendsetter with the wallpaper.
Now 195
I give that to my wife.
Oh, it's wallpaper.
Well, not $2, but
it's not even books. It's wallpaper, but 3D wallpaper. So she thinks ahead and has some great trends.
Let's get her
in
on
terms of
sometime.
She's great.
Yeah, she's a very talented designer. And of course a wonderful wife.
Turkey, okay.
But on the trend side, I think that all cities are not the same. New York City is going to have difficult years ahead. It is an employment center for the financial services industry and other major industries. Those industries are being dispersed now. So what we're going to see now is cities like Miami. I mean, we want to build several office buildings in Miami because Miami's severely underserved when it comes to office space. In fact, one of the things that will slow Miami's growth down is the lack of office space to place employees who want to move to Miami when companies want to move here. You look at West Palm Beach. I think Steve Ross is doing a great job making West Palm Beach America's hottest small town. Jeff Green's doing a massive mixed-use development there as well. So there's going to be a lot of new development in West Palm for commercial office space and apartments, which will attract companies and workers. Goldman Sachs is already moving 300 to 400 employees there as well in one of their latest buildings. You're going to see Charlotte, North Carolina continue to have wind in its sails because affordability of living, it's becoming an emerging life science environment, and you got it as it's the second largest banking center. So I think they're going to do well. Raleigh-Durham will do well. I mean, Texas,
anybody get that
Dallas,
short? Anybody
Fort Worth,
take it? You're probably at least
Austin's still going to be very strong, and Houston's going to continue to pick up some steam. The places where people want to live and where they're business friendly, that's where you're going to see the growth. I mean, there are too many options now for companies and too many options for developers to go to places where they make it incredibly difficult. I mean, Los Angeles, California is an absurdly difficult place to do business and to build buildings. That is why
we haven't gotten much volatility though,
and one of the highest run-ups.
I don't know if it's quad witching, triple witching. I'm not sure.
Don, I got to ask you a personal question because my life gets difficult when there's systemic risk, and I need to ask you what my year is going to be like next year. We don't have a lot of time, but I have to ask you: is there going to be a meltdown, or is this systemic risk in the system from these buildings incapable of refinancing and walking away, and the pressure on the banking system? Or do you think the market finds its way through it?
Oh, shit.
I think the market finds its way through it. I think that those that are interest rate driven, the problems that they are having right now, like apartment buildings that are fundamentally sound, private credit will step in and help solve that problem. The market's going to be very efficient. Private credit is going to be a big deal.
So the delta on these apples for next week, 195s.
Not as much driven by interest rates as fundamentals. COVID changed the fundamentals of these cities. I mean, there's no reason to be in New York City, pay absurd amounts of property
14.
taxes, have to pay your employees absurd amounts of money and they can barely make a living when there are alternatives.
Minus
so New
14.
York is going to have to reinvent
for every
itself,
day,
which it can and will and has done in the past.
$14.
I don't see the risk as being a systemic risk. I think the market will work its way through this, and the
if
banks,
I'm not mistaken. I think.
Bigger than expected guidance for 2024. We'll get the key details ahead in Tech Check when Power Lunch returns.
How can I freaking edit this? Does anyone know how to edit the options chain here to like... That's so weird. I was wondering about Costco. That's hilarious. Looks like Oxy's pulling back as well, guys. Looks like that's pulling back. They said there's something with come on. All right.
As an independent financial advisor, I stand by these promises.
As a fiduciary, I promise to be the financial steward that you and your family need.
I promise to put your long-term financial
Shit.
above any short-term transaction.
Everyone has a big picture. My job is to help you invest in yours.
Charles Schwab is proud to support the independent financial advisors who are passionately dedicated to help
helping people achieve their financial goals. Visit findyourindependentadvisor.com.
Weekdays on CNBC, the power players are here.
All right, let's see here.
Deep dives. What's moving now and what's next for your money? Sarah Eisen, Carl Quintanilla. Money Movers.
I really wish I knew how to change this. You know what?
NVIDIA is the clear leader in chips for AI. AMD making its case as well. Today we're learning about Intel's hopes in the space. Christina Parsilevos, talking to Intel CEO at Gelsinger. Christina.
Thanks, Steve. Well, it's about being first to market with AI PCs.
If you ain't first, you're last.
Right behind me. Intel promises to sell about 100 million units by 2025.
No.
I caught up with CEO Pat Gelsinger for a one-on-one this morning, and he's adamant that the AI PC chip will revitalize the PC market, especially as companies start to refresh their cycles next year. So for those who don't know, an AI PC runs AI applications like, let's say, for example, Microsoft Copilot locally on the laptop without
CNBC.
cloud, so it helps with the battery.
NVIDIA is the clear leader in chips
I don't
for
know
AI.
why that was so
AMD
loud. I'm
making its
sorry.
case as well. Today we're learning about Intel's hopes in the
I
space.
didn't know it was
Christina
this loud, guys.
Parsilevos,
My
talking to Intel
my
CEO
AirPods must
at
have been
Gelsinger. Christina.
like
Thanks,
dying or
Steve.
something.
Well, it's
because
about being first to market
I had
with
no
AI
idea it was
PCs.
that loud. So if it
And
was
those are the
too
ones
loud,
that you're
I'm
seeing
sorry.
right behind me. And Intel promises to sell about 100 million units by 2025. I caught up with CEO Pat Gelsinger for a one-on-one this morning, and he's adamant that the AI PC
Abby,
chip
come
would
here.
revitalize the PC market, especially as companies start to refresh their cycles next year. So for those who don't know, an AI PC runs AI applications like, let's say, for example, Microsoft Copilot locally on the laptop without necessarily the use of the cloud, so it helps with the battery life,
Okay,
etc.
here we go.
But Gelsinger did admit to me
I have
it
time
will
and sales up.
take a couple of years to drive that shift. So, does the market really care
No.
about AI PCs right now? Well, let's take a look at Intel's stock. We did see it initially jump when the embargo was lifted around 10 a.m. Eastern this morning, revealing Intel was already shipping an AI PC chip, secondly launching a next generation CPU, central processing unit, a product they hope will help them stop losing market share to AMD. And then lastly, a tease, let's say, to their hotly anticipated Gaudi 3 chip you're seeing on your screen right now, which is an AI chip,
No,
a
I
custom
want
AI
Apple.
chip, I should say, used for training large language models, which
I was gonna
competes
say, I
with
thought that it
AMD and
changed on
NVIDIA.
me.
But on stage, Gelsinger only showed the AI chip. Didn't
Looks
actually
like
have any
Apple's
financial updates or any
trying to
further
turn this into
news on
resistance
it, so
again.
investors took that as a
It's pretty
maybe
weak.
lack
I'm
of
telling you,
news
I
around that AI
kind
chip
of like
sold
that
the
put.
stock
I
off,
just need to
which
know
is
what the
only
hell
up
the delta
1.5%.
is on
Earlier today
here.
was up 5%.
I'm
So
just
the
trying to
takeaway,
find
though,
it, so I don't have to
from,
look
my
for it
conversation
anymore.
with Gelsinger is that this is a volume game. Get their product, whether it be the PC AI chip or the new central processing unit, out to market as quickly as possible so they can capitalize on their ubiquitous branding and get there before the competition.
Christina,
Okay.
thanks very much, Christina. Complicated story, well told. She explained
Unbelievable,
all of the
man.
phrases
Indeed.
in there.
Exactly.
That
I don't want this. I just want to know
Meantime,
what the
shares of Adobe are
delta.
sinking after issuing
Just want to know where my
disappointing
delta
guidance.
gamma and
Let's get
stuff
Deirdre
is.
Bosa
So.
on more on what this tells us
Without
about tech in
looking on-
2024 for today's Tech Check. Deirdre.
Hey,
Just wanna know where
Kelly.
it's at.
So
Thinkorswim.
not everything is risk on. That's what it tells us. And there also may be some signs of stress building in certain areas of tech. Adobe and Oracle, two late reporters in the earnings season. They're important because they have more information for their outlooks than earlier on in the earnings season. And in both cases, they disappointed. Let me run through Adobe first. All the stuff that investors could worry about was wrapped up in this one report. Disappointing outlook, slower than expected AI ramp, regulatory scrutiny. Its Figma acquisition announced more than a year ago that is still making its way through the DOJ. And now there is a separate investigation from the FTC. And this is really part of a broader story that we've been telling over the last few months. That of a more aggressive, more nimble group of regulators that are only ramping up scrutiny of tech. Then there's Oracle, shares down more than 10% this week. Its earnings pointed to slowing sequential
going out
growth
to
in its
January
cloud business, and
19th.
that raises some questions about a software comeback that some analysts and VCs have really started to talk about. It
So
was
this
also
is
a
for
reality
getting
check coming
filled,
after a beat
not-
and raises from other smaller names and a reminder
fucking
that the
delta
cloud
on the
story
other
it
stuff.
is not in the clear yet. Remember back to Google, that was a few months ago now, which missed estimates on its cloud business and Amazon, which provided some hope of a bottoming of AWS growth, but it couldn't explicitly say that it was the bottom. So if cloud growth is weak, guys, that could signal weaker enterprise spending and economic uncertainty. That said, these moves, they are contained. They're not really impacting the broader software and cloud universe yet, at least. The story for now, of course, for tech is that rates and lower yields, that's helping the rotation into high growth speculative names. We talked about that yesterday. Mega caps are taking a bit of a breather. So I'm just saying, guys, that Adobe and Oracle, they could be something to keep an eye on, not to spoil the party, but
You know
just
what?
to say that we're
I
not
guess
all
I
in the
can. I
clear,
guess
perhaps.
this is all the boxes it's going to give me.
No, we're not. Deirdre, thank you. Deirdre Bosa, we appreciate it.
not gonna
And
give me
again, Adobe was
anymore?
an interesting contrast with all the positivity
What
yesterday.
happened here?
Still ahead, Goldilocks
What
meets the
happened here?
Federal Reserve in 3-stock lunch. We'll trade a name to like if it starts cutting rates, one if it leaves rates the same, and a name that's just right no matter how 2024 plays out. Power Lunch is back in 2.
Shape your plan to meet your unique goals, needs, and lifestyle, so you can enjoy the retirement you
Oh, customize. Me found it. Me found it.
Yours for calling 1-800-650-0528. If you're thinking of retiring, or you're retired and you want to enjoy it more, Fisher has answers. And our fees are structured so we do better when you do better. Call now for your free Fisher Ready, Set, Retire Kit. 1-800-650-0528. Get a retirement plan that's as individual as you are. Your portfolio is $500,000.
Come on. All right, so we have bid at last. No. Bid ask last. Change. We'll do the volume. Volume. OI. Open interest. Delta. Nah, I could just do it theta. Delta gamma theta. Delta gamma theta. Theta. Oh yeah. Load defaults. Okay, let's do it. Oh yeah. Oh yeah. Let's go. Hold on. Hold up. Hold up. So, volume, open interest. This is how it should be, baby. This is how it should be. Alright? Really, it shouldn't be like this. It should just be like, you know, it should be a little different than that, honestly. Damn, we got a lot going on here. Alright, yeah, I'm going to have to keep this wide. I'm going to have to keep this page. This is going to mess me up now. Fudge. Damn, so I... No, it's good. I can see the other side. Alright. Look at all those calls for next week, guys. At 197.50.
Welcome back. It's time for 3-stock lunch.
No.
Today's edition is Fed themed,
hold
and
up.
one
Yeah, this
stock
side's
is the one you
gotta
want to
get
own if they
changed.
start cutting next year. One
Bid
is if they
ask.
leave rates here for a while. Hey, it could happen. And one to own no matter what the Fed does. Here with our
Last.
trades is Quentin Tatro, founder and president of Jewel Financial. Oh, no Santa. I see a stocking there, though. But let's get
okay,
to it, Quentin,
Turkey?
starting with Cleveland Cliffs. The
I
flat
don't
road
like
steel
this.
producer. It's up about
It's just
4%
like,
today,
why would they
actually.
do that?
About
It should be the
20%
same
on
as
the year.
puts.
This is the one you want
Here.
to own if they do start cutting early
I don't look
next
at the
year.
very
Is that right?
last thing as the last price.
That's right, Kelly.
The very
You gotta
last
come into
thing
the
isn't
economic
the last in
classroom
price.
for this.
Like,
If they're cutting, that means they're increasing the money supply, devaluing the dollar. You want to look to the materials. That's why those areas
we'll
are just
do last.
gangbusters today. Cleveland Cliffs is our name here. We have forward estimates at $1.64 for next year, which is 12 times forward earnings, that growth would be 40%. So it's super cheap. They did $650 million in free cash flow, have a decent balance sheet. Stocks going higher from here.
All right, the next one up, Quinn, is CrowdStrike, which is up nearly 140% this year. You say this is one you should own if the Fed leaves rates here for a while. You got to make a good case to make me buy a stock that's up 140%. So go ahead.
Wait, undo.
Steve, I think it's going higher, but no, you're right. This is hard because it's hard to find an area of the market that's not correlated to interest rates or inflation. So we're going to go into the cybersecurity area, and our favorite here is CrowdStrike. It's not only
You guys
up
see what I'm trying to
140 on
do,
the
right?
year, it's up 170 off the lows. I don't think you chase it, but I
on.
think the game plan is we're going to see a pullback in the things that have been super hot as we see rotation into the names like Cleveland Cliffs. This is a company, yes, it's obviously turning profitable, selling at a very high multiple, but we do not believe the forward growth is factored in. This got a strong balance sheet, $3 billion in cash. Give it a pullback, you're right, to about the 230, 235 range, and then this is a stock you can add if or regardless, in my opinion, what the Fed does, but especially if they just stay put.
Well, speaking of, being able to ignore them entirely, you think AMD is the stock to own, kind of to be able to just ignore them, you shrug your shoulders, go about your business. It's already more than doubled this year. You think it keeps going?
I do, and I think today, again, is a little bit more of that rotation that we're seeing, knee-jerk reaction, trying to get into some names that have been beaten up. But this is a name that we feel is not pricing in, or fundamentals not pricing in yet, the new AI chip that you guys were just talking about. 40 times forward, it's rich, but those earnings estimates are projected to be growing at about 40%. And if you do factor in the AI chip growth, this stock all of a sudden becomes pretty cheap. No debt, $6 billion in cash, still 20% off highs, and we think it's going there early in the year.
Wow. Out of the gate, off to the races. Quint, thanks so much. We appreciate it. Quint Tatro.
Thanks.
It's probably true that, it's going to have spyware and software and adware and all that other security stuff, or whatever the Fed does with interest rates. More Power Lunch coming back after a quick break here.
All right, there we go. That's crazy. The net change is way over here, and it's over. Like, it doesn't make any sense with what Thinkorswim's doing here. Maybe it's me, right? Maybe it's me, but I don't know. I don't know. Because it should automatically be bid ask. Like, the call side is just jacked. Well, if you... It's not. The bid ask is fine. It's actually not bad. Theta. So, like, now I'm reading theta, gamma, delta, and, like, my open interest is way out here. Like after the bid and ask should be your, like, open interest, or, like, the last change, right? Bid ask, last, and then, the last price it was filled at, right? The last, so I gotta look all the way over here now. And then the change and what they were filled at, like how much is changed, and then your open interest and volume, which should be going out that way to the left. Like, this is going to the right with the net change, volume, open interest. It should do it like that over here. Bid, ask, last, net change, delta, theta, or delta, gamma, theta. So, I don't know. Just my 2 cents. I have to figure it out. I'll have to just work with it. Because if it's like that, it's easier to look at with your eyes, and it doesn't take you long to really, know what you want to know. Change volume, the change volume, last, delta, gamma, theta.
Okay, a new study from the Pew Research Center found a third of U.S. teenagers say they almost constantly use at least one of the top 5 social media sites, including YouTube,
Welcome back. A minute 45 left in the show. Several more headlines to get to, and we're going to squeeze it in. Starting with the drama at Disney, Trian announcing it's nominating its own CEO Nelson Peltz and former Disney CFO Jay Rizzullo to Disney's board. The latest salvo in its proxy fight against the company. Trian had sought up to 3 or 4 board seats. In a statement, Disney
We
defended
should get
its
some
current
volume
board, saying
tomorrow
it's experienced, diverse, and highly qualified. The company went on to say its governance
we'll have
and
to wait
nominating
and see
committee
for that.
will review the nominations and provide their own recommendations.
Had a pretty big day yesterday with.
Okay, a new
the
study
markets
from the
moved.
Pew Research Center found a third of U.S. teenagers say
Pretty
they
big.
almost
All right, so I'm gonna
constantly
cover
use at least one of the top 5 social media sites,
Baba.
including YouTube, TikTok, and
If
Instagram.
Apple does get a nice
I think you
pop,
could probably
it was
go
pretty weak today.
up
It's
the
red.
age scale on that.
So if we
Yeah,
do get a
something like
pop,
Twitter and
I
Facebook and
will
people are
look to
doing that
try
too.
and.
I think this whole decade is going to be about
Short
pushback among kids'
Apple.
usage of social media. Maybe it's
I
just because
will.
I'm entering that life.
Are you
phase
pushing
now.
back?
Whether that's up at
What's
VWAP.
They're still too young, but we're already stopping with the don't stop touching mommy's phone. I can't even check my email.
We had a
after
rule
hours.
in our neighborhood: no cell phones for the kids till they were 11.
Yeah, I think at this point, if you make it to 8, it's like people pat you on the back.
Shows how old I am.
This year's corporate holiday parties are more likely to be in a break room than a ballroom. Did someone here pick this because of our party? As companies battle inflation rates and the state of events, they're responding by taking a more low-key approach to
CLT
holiday and
is
other
going
celebrations
higher.
at the office,
Trying
and some
to.
people have party fatigue.
55% say they'll skip their company holiday party. So what's the difference?
Did you go to the one that we...
Was there a party?
Yeah, that's right.
I never get invited to these things.
It's here. It's now. It's happening.
All right.
Steve, thanks for joining us.
See you tomorrow,
today.
too.
It's been fun. Thanks for
Unless I
watching
messed
Carla
up.
Gervais. We'll see you and you tomorrow. Closing bell starts right now.
All right, guys, thanks so much. Welcome to Closing Bell. I'm Scott Wapner, live from Post 9 here at the New York Stock Exchange. This make-or-break hour begins
Trying to
with the
find
Dow's
some
record high
stocks, guys.
and whether the S&P will be next to make history following the Fed's pivot. We'll ask our experts over this final stretch how far stocks can run now. In the meantime, your scorecard with 60 minutes to go in regulation looks like this. Stocks picking up right where they left off following Chair Powell's presser. Energy and financials among today's best sectors. Investors taking a look outside of mega cap tech for opportunities today. Take a look at the Russell 2000. It is surging yet again, and that's even after yesterday's big jump. Rates, of course, they're a big story today. The 10-year dipping below 4% on the idea that a flurry of rate cuts are coming next year. And all of that takes us to our talk of the tape. Whether it is time to do your own pivot out of large cap growth stocks and into areas of the market that have dramatically lagged. Let's ask Anastasia Amoroso, Chief Investment Strategist for iCapital, with me here.
Good
at
old
Post 9.
Anastasia.
Nice to see you again.
Good to see you.
Did the goalposts move yesterday for this market? What do you think?
Yes, I think yesterday was an absolute game changer. And what we heard from Fed Chair Powell was that it's not about the economy, it's not about financial conditions, it's not about the jobs market, it's about inflation. And inflation have been coming down pretty far and fast. And if we're at a point where inflation is 2.7% by March, the consensus is expecting, and interest rates are still at 5.5%, that's a big gap that the Fed can do something about, meaning cutting rates. And Scott, what we've been doing for the last 2 years has been thinking, rates are high, who's going to get hurt by this, and what companies are disadvantaged, but we're going to have to do the opposite of that and say who's actually going to be in a good position now that rates may be coming down.
Okay, so this game changer from the Fed that you obviously cite, what about game changer for investors? Now put your words into action, right?
Yeah.
What do we need to do now as a result of this game-changing move?
Right. So this year has been about keeping it simple. You go big tech, you go maybe some private credit.
Yeah, go big
some
or go
cash.
home, right?
Exactly, and it was pretty big. But I think what you do in 2024, you broaden that out and you look at pockets that have underperformed. So there's a few things on my radar in particular. One of the top performing sectors, at least when I left to go on the show, was real estate. If you look at REITs and home builders that Joe and I actually talked about last week, they're the top performing sectors because they've been most disadvantaged. They now have a relief rally. You look at bonds, actually of all sorts of bonds, and what we know is yields fall leading into the first rate cut, and also rates fall after that as well. So if yields continue to fall, bonds can actually rally. And then, Scott, the other thing you and I talked about as well is unprofitable tech. And by the way, when I say unprofitable tech, I don't just mean tech. It could be biotech. It could be all sorts of young, unprofitable companies that have been left behind, and they're rallying hard now.
Okay, so there's this idea of whether, which, by the way, mega caps are mostly down today. NVIDIA is a modest winner, but everything else, whether it's Apple, Microsoft, Alphabet, Meta, Amazon, are all down. Whether mega caps are going to be an ATM and some of that cash is going to go into these areas you're talking about.
Yeah.
Whether cash itself from money markets is going to just come in by itself into those other areas. I'm wondering what you think about that, because Goldman's Tony Pasquarello, who's pretty influential, and he runs their hedge fund client strategy over there, suggests that money doesn't necessarily have to come out of the mega caps to go into these other areas. It can, in fact, come out of money markets as yields come down. What do you think?
I think great note from Tony today, and I think he's spot on, because mega tech cap does not have to fall apart, because first of all, if you look at valuations adjusted for growth in earnings, they're actually not that stretched when you look at that forward PE to growth multiple. And if you have a solid economic environment and the Fed is pivoting, that is still a fine environment for big tech stocks. So I think money comes out of money markets, which pay 5.5% roughly today, but chances are they're not going to be able to pay that, let's say 6 months down the road. So I think investors are starting to think about that. They're also looking back at this year. If you've parked a lot of your net worth in cash, you're probably regretting some of that right now. And so what are you going to go and do? You're going to go and see where the markets has underperformed, and you're going to go into the areas of weakness that we saw in 2023 using that money market cash.
I mean, people would agree with you, but not everybody agrees where the money's going to go. Like Jeffrey Gundlach was on with us yesterday right after Powell. He's not on board with that. Listen to what he said.
Here's the thing. There's an old trick in the book for anybody who's here.
Money market bloat
you
is going to go into
can
the stock market is wrong. I think it's unlikely
get your
for
treasuries,
investors
grab
to
your
go from
percentage,
risk-free 6-month T-bills to the magnificent
and margin
at massive
without
PEs and
necessarily
all-time highs on
having
Dow
to
Jones
pay
Industrials. I think they're
anything
much more
back
likely
because you're returning
to
the
go
capital at the end of the
from
day.
their mountain of
So you
cash
have
in
capital tied
T-bills
up collecting
into bonds.
interest, okay?
All right, that's
and then you're using the capital from your brokerage, the margin, to play individual stocks, and then you return it at the end of the day.
Something like 29%
So
of the market cap
you're
right
collecting
now,
the
which is really
5,
good
but you're also doing
stretch.
the longs
Investors have a unique
or the shorts,
opportunity,
whatever
which
you
is
want to
they
do.
have optionality to
So
look at a
you
number
also
of different
had
things. They
an
don't have to
opportunity
only go into stocks,
to
and
be
they
able
don't
to
have
have
go into tech. You can
treasury
actually
bills
look
or
across,
whatever
and
it
the
is,
opportunities that are
money
so
market
much broader
funds,
now,
like you're
across
able to
sectors
collect
and
that
also
yield,
across,
but
asset
you're
classes.
also able
Now,
to get
Jeff's point, I
exposure
think bonds are
to
obviously
the
worth a
markets
look, whether
by
it's
not
municipal
necessarily
bonds,
owning, but
whether
just
it's investment grade
owning,
corporates, whether it's high yield.
you know,
And I
intraday,
think you may be able to earn
things like
an
that. I mean,
equity-like
you could
return
just
by taking some of
hold
that duration
it, but
risk
you
and
would
some of that
obviously
credit
pay a
risk.
fee.
So that's very compelling for investors.
Just saying,
but do
you
you
know,
put
it's like
all of that eggs in that one bond
I
basket?
don't know.
No, probably not. I think you do go shopping for areas of underperformance. And look, we're exiting this year on a pretty high optimism note, and I think that is going to carry over into January. And I think people are going to be kind of looking how to allocate their portfolios, and it's stocks, it's bonds, it's real estate debt, it's private credit. I mean, it's private equity. By the way, valuations have reset a lot in private equity and venture capital as well. So that's a unique opportunity set like we haven't had in 2 years.
All right, let's bring in CNBC contributor Joe Terranova, now of Virtus Investment Partners, into the conversation. Good to have you back.
Thank you.
Do you agree with Anastasia that this was a game changer yesterday?
Oh, this was a clear pivot. This is something that only happens every several years. And what it clearly did was it accelerated and intensified this massive mean reversion trade that's been in place for the better part of December. And I think that mean reversion trade remains in place as you move through January into February. But I'm a little suspicious that that mean reversion trade is not going to find itself running up into some resistance in the first quarter.
Let me ask you that. You think there's too much optimism about what happened yesterday? It's not like, and Powell said it himself, like I'm not going to declare victory
Look
today,
at these moves on
and
large
there's
caps.
still a
You
lot of
gotta be
unknown.
fucking kidding
We
me,
still don't really know
That's
what
insane,
the ultimate lag
guys.
effects are going to be.
To not be involved
Maybe
in
they're
that.
more dramatic than
And
the
Microsoft
symbols
took
want
off,
to
you know,
expect.
off the bell, as you
Maybe
can see
the
here,
economy
and
slows
I didn't
further.
know. I just
You think
wasn't
there's
watching.
a little too much optimism with a VIX that is still at 12 and a half.
There's Nvidia.
So I know
Does
when your
Nvidia
birthday
get
is,
it?
but I would never say it on air.
Semis are
But if
strong.
I said to you, Scott, in 2024, when your birthday comes around, guess what I got you today? When your birthday comes around, you're probably a little bit disappointed. And I think the Federal Reserve, to that extent, basically told markets what the present they may give them in 2024 is today.
Are you insinuating like we're pulling forward too much?
Oh, without question, we are. We're pulling forward a lot of good news, aren't we? we're pulling full
Well, you tell me.
tremendous amount of good news.
You tell me. I mean, there are those who think that we're not necessarily, because Anastasia, there's still a big bet on a soft landing. And if you can achieve a soft landing and you actually can get really close to the Fed's 2% target on inflation next year, then maybe you're not pulling anything forward.
Well, I think near term, I mean, every indicator that you look at of positioning, we are at overbought
That's a nice
levels,
pattern
and
there,
we're at those
guys.
stretch levels, but can we
It's a
still
nice
sort of
break of
continue
that base,
given this
pull
euphoria
back,
that's now
test
in the market?
it.
Probably. But I think Joe's right. In the
But
first
again, it
quarter,
could just
something is
run
going to
right up to
happen that's going to
VWAP.
knock us off balance a
It
little
looks
bit.
good, but
the
it might be
reason
too
why I still
easy.
go back to the
Might be
game
a old
changer
trap from
comment
Berkshire
is because
Hathaway,
if we're in the
saying,
environment
let's
where
trap
the
'em
Fed
all,
is not
let's let
hiking
'em get
rates but
short, and
cutting
we'll just
rates,
come in and
that
buy it.
allows for multiple
Buy
expansion.
the
That
dip.
allows potentially for upward
See?
earnings revisions.
Looked
so
real
that
good at
really
first,
just resets
didn't
the
it?
whole investment landscape. So from my
Motherfucking trap.
perspective, I mean, I hate chasing this market at this point. You know, it's very uncomfortable to buy unprofitable tech after it had something like a 19% month. You know, but at the same time, if we do get
I don't
want
want to trade just to trade. I want to make some fucking money. I don't know if I should
buy
sell some
for
spreads,
that
if there's
game changer of
something I'm not
2024
seeing
rate
that's
The
moving.
game changer, Joe, really boils down to whether the "Don't Fight the Fed" moniker is back in a positive way, because it does work both ways. We learned our lesson about trying to fight that in 2022.
Correct.
And in some respects, in the early part of 23, ex mega cap, are we back to a "Don't Fight the Fed," i.e., a lot is going to go up? I mean, bonds can go up, stocks can go up, many different parts of the equity market can go up. Maybe just like, I don't know, the dollar goes down. Maybe that gives a bid to commodities. I don't know. You tell me.
Well, I love commodities here. In particular, I like gold, and I certainly like silver. Silver's this week is actually finally seeing some significant positive performance. But gold in an environment where we're seeing yields fall and the economy beginning to decelerate, gold is actually in the commodity space the one area that I believe you want to own. I don't know. When I think about all this, I wouldn't say fight the Fed, because you really have to think about not just the Fed, but global central banks in totality. And the Bank of England, the ECB, they're certainly not giving markets what the Federal Reserve gave the market yesterday in such a dovish tone. I'm positive on 2024, but I'm not overly excited about the early part of 2024, because you mentioned before soft landing. I don't know. To me, the soft landing, we kind of priced that in right now, and the expectation's pretty high, isn't it? I mean, we're setting ourselves up only to disappoint. We really have a high bar that we have to achieve in the coming months.
There's no doubt about that. Let me just break away for 1 minute. We do have a market flash. Shares of Shift4 Payments are spiking. On a report, the company could be an acquisition target for Global Payments. Shares of Global Payments dropping on that. We're going to bring you the details ahead as we have them. We just wanted to let you know what's happening. Actually, we're going to go to Christina Partsinevel. Are we going to do that now? No, I'm sorry. All right, we'll do that in a second. Back to what you guys were saying. Yes, well, now, you know, given all this good feeling,
that news is
of course
old,
there's a
man.
lot of
They're
risk.
late as hell on
You
that.
don't want anything now that's negative is a risk.
Yeah, and I think that's one of the reasons why you don't walk away from the mega caps at this point. Now, look, I run an equally weighted strategy, okay? I'm up 5% this week. I'm ecstatic about it. It's great. We're in the right places. 38% of the fund has made 52-week highs. 25% of the fund made a 52-week high today alone. So I'm going to maintain that strategy. But it's not a light switch. Why are we continuing to talk about the mega caps like you either own them or you don't own them? It's the degree to which you own them. And I think there's going to be a moment where you're going to be glad that they are in your portfolio in the first half of 2024, if in fact we see economic disappointment and if in fact we see earnings disappointment.
Let's also remember how offsides people were coming into this year in mega cap. I'm looking at you, but I'm not looking at you, because you represent a lot of people who were.
Yes.
And then played catch up a bit and now are very happy.
Yes.
Where you're positioned. The interesting thing is going to be if we have this assumption now that, now money's going to come out and it's going to go in these other areas, and that's going to leave money on a table in an area that is still driven by AI. They still have the best balance sheets, Anastasia, piles of cash.
Right.
They don't need to hit the debt markets. They're buying back stock. I'm thinking of Apple buys back more than anybody else, et cetera.
So how do you sell that, right? Even if we go in an economic environment where other things catch up, how do you walk away with an earnings growth rate that is, in some cases double the S&P? How do you walk away, from, as you mentioned, companies, they don't have to rely on leverage. They have plenty of cash on the balance sheets. And, as we're getting some M&A news, I think maybe that's another story of 2024 as well. Maybe it's some of those big tech companies that are deploying cash, and that, by the way, is yet another way to help some of those unprofitable tech positions. But I want to go back to just kind of one stat. I know we're talking about pre-trading a lot of this first rate cut. Clearly, that's what the markets are doing. But historically, if you look at the last 6 rate hiking cycles, during the time period when the Fed is on hold, stocks typically rise by 8%. And if you look at the 6 months leading up to the first rate cut, stocks rise by 9%. So I think that's pretty powerful history, for me to justify an equity market that's worth staying in.
So, Joe, I'm looking at energy, which is up 3% today. It is the best performing sector by a lot. You have described that sector as, this is like the moment of truth this month.
Yes.
If you don't get something going soon, this trade is going nowhere.
Yes.
So now you get the Fed doing what it did, the dollar dropping, energy's ripping. Is this the moment? Is this finally it?
So as someone who is overweight energy, I would guide the viewers to step extremely cautiously into the energy trade. Not only has oil declined significantly in the last several weeks, natural gas is down 14%. 14% in the month of December alone. Energy right now is an oversupplied sector. It needs to work off the oversupplied conditions. I'm not sure if the market is as long as it was coming into December, but the market was overweight energy coming into December. And for those who can't do anything about it just yet, like myself, okay, you're sitting with that overweight positioning and the fundamentals are actually against you.
Just to remind people, because I don't want to assume everybody knows, the reason why you say I can't do anything is because you run the ETF. You have specific periods where you rebalance.
Correct.
Right?
We have a quarterly rebalance. The next one would be the last business day of January.
Okay, I just wanted to make sure everybody's clear on that. Energy. What about it?
I mean, earlier in the year, I would have thought that this is a sector worth owning for geopolitical risk hedge, for inflation risk. But I think we're in a pretty different state now, and especially with inflation decelerating, it's hard to make that case. Look, demand is as good as it gets, and supply is abundant. So I don't think it's a top call into 2024. I think it's market weight at best because, as Joe mentioned, we need to work down some of that oversupply.
I want to put you on the spot, both of you, real quick before I go. Most surprising sector of 2024, given what just happened with this alleged pivot, if it truly is going to be that, and you're going to have the rate cuts that the market expects. Joe, you first. The most surprising sector of next year that not enough people are talking about is what? I know I'm putting you on the spot, but there's enough of there are not that many.
I would
you can look at the list. Materials?
In an odd way, I think it's communication services, because I actually think the performance is going to be there, and I don't think people expect the performance to be there. I don't see the mega caps. I don't see technology. I don't see communication services falling apart. I don't see the catch down. I see the catch up in the market, but that doesn't mean you move away from those sectors. Communication services can come right back next year and have a really strong year.
Okay, Anastasia, same question. You've had a little more time to think about it than Joe did.
I guess I'm not on the spot anymore. Thanks for that minute. But I think commercial real estate. A lot of people have given up on commercial real estate. They worry about the wall of maturities that everybody's talked about. But if you look at the commercial real estate, that IYR ETF, it has rallied very strongly off the bottom, but it's certainly not back to its prior highs. So I think rotation back into real estate where most people don't want to go, I think that's the most surprising trade for 2024.
Guys,
what I'm trying to see here is if
thank you, Anastasia Amoroso.
this thing is going to decide
send it over now
if
to
it
Christina
is
Partsinevelos
wanting
for a
to
look at
curl
Intel
up,
on the back of its AI
or if we
event
are going
today.
to be able to
Christina?
get a
Well, the race
pullback
is on to be the
and
first
try
to
to
market
take
with
advantage of a
AI
pullback.
PCs. But the big question is, does the market really care about AI PCs right now? You saw Intel stock initially jump about 5% when the embargo was lifted around 10 a.m. Eastern, revealing Intel was
This
already
reward
shipping an
right here
AI
is
PC.
pretty good.
Secondly, launching a
Wouldn't
next
mind it.
generation central
I'd like it a
processing
lot
unit, which is
better
a product
up
they
here.
hope will help them
But it's
stop
tried it
losing
twice.
market share to AMD. And then lastly, they
Volume isn't
teased their
there,
hotly
334,
anticipated custom AI chip used for
375-ish.
training large language models. That would be the Gaudi 3 you're seeing on your screen now. It competes with AMD and NVIDIA.
Let's see how
on
let's see
stage,
what
Gelsinger only
happens here.
showed that chip. He didn't really have any financial
look at
updates, no
some of
news
my
about
Greeks.
next year, what's going to happen.
Kinda
And
get
so
a
investors took
plan
that
and
as
see
a
if I can't
lack
get
of
some
news
time
and
on
sold
this.
off the
I
stock,
don't
which is
wanna
why
short the market,
it's
but
only
the
up
big
a little bit
seven's
over
pulling
1%
back.
when it actually hit
I mean, that's
over
a fact.
5% earlier today. I did catch up with Intel CEO Pat Gelsinger, who said the AI PC chip would help revitalize the PC market, especially as companies are going to be refreshing their PCs starting next year. But even Gelsinger admitted to me it will, quote, take a couple of years to drive that shift. Scott?
Getting to the bottom of it. Christina, we
Always.
appreciate that. That's right. We'll talk to you in a little bit, Christina Partsenevelos. We're going to talk more, by the way, about Intel's event with top chip analyst Stacy Rascon. That's coming up a little bit later on in the show, so you don't want to miss that. We're just getting started right here. Up next, navigating the Fed pivot. Sycamore Tree Capital Partners' Mark Okada is back, laying out his 2024 forecast for the Fed, where he sees yields heading from here. That is after the break. We're live from the New York Stock Exchange. You're watching Closing Bell on CNBC.
Nope. Ain't miss nothing at all, buddy. Not miss anything at all. Thinking about whether, I'm kind of just like trying to find something. Like I was thinking next week meta puts or something, but I feel like this thing's just going to rally up here and I'm going to be able to get a shot at it at a cheaper price up here, like 335 or so. Even though I feel like this is the area, I still think it's going to just, 335. It'll probably head up there. It's holding VWAP now, so it's just trying to figure something out. I don't know. Even if I get time and like catch like, a small gap down or something tomorrow, and trying to figure something out. I know. I've been watching. I've been in the chats and looking, and it doesn't seem like anything's going on. I know. It's just one of those days, it feels like. I was thinking about Apple here. Let's see, because this would be a nice area where it's like I'll know pretty quick if the trade's wrong, but I want to try to get up here at VWAP. That's where I want my entry. And I think they wanted way too much for 195 next week puts. I think that they're too much. Well, I mean, if I get $2 in the money, and they're $2 a piece, let's see here. What are they? Next week's. Oh shit, that's next week. No 195. Never mind. It's not bad. So that's only 75 cents. So if I get to 194.25, break even. 194.25. 194.25 would be break even.
All right, welcome back to Closing Bell. Treasury yields under pressure today with the 10-year hitting its lowest level since the summer. But our next guest says that rates will be higher across the curve in 2024. Joining us now is Mark Okada of Sycamore Tree Capital Partners. Welcome back. It's nice to see you.
Hey, Scott. Good to see you, too.
Let me first just get your reaction to what happened yesterday, because, look, it's been a surprising year. I think you've probably been as surprised as anybody that, you know, the economy is where it is and the stock market's done what it's done. And here we are just coming off an incredible move in yields.
Yeah, I feel you, buddy. I'm just trying to play the momentum because I think the Big Seven is...
The business of managing money this year has been hard.
I think they're taking
it's been humbling. You know,
so I'm going to watch it, and I've got bearish divergence. If I get a little bit of time,
market, we're still up, mid-teens, which is nice, but it's not 20, it's not 40. So it's humbling, and wow, yesterday was amazing, amazing.
Was it truly the pivot that some are suggesting it was? I just had a conversation with a strategist who described it as a game changer.
You know, I kind of have a different view on yesterday as far as, you know, what Powell did. I for one, given what we're seeing in the economy and the slowdown, it's not necessarily the recession call that would cause rates to drop enormously. I kind of think he's talking his book a little bit. I mean, we've got a lot of bonds that need to get issued next year across the curve, 24% more than we have now. So bond issuance is going to be up big. And given the massive moves down hard in rates, I mean, that's great for the Fed. They can issue those bonds at better prices. But I got to believe that he's talking his book a little bit as I look through and think through what happened yesterday.
Well, I mean, you could forgive him if he, is feeling pretty confident about himself and what they've done, right? Even starting as late as he would admit and has admitted, I think, himself, they've done a pretty darn good job getting us to where we are now, don't you think?
Oh, absolutely. I mean, it's a little bit like, you've won the in-season tournament, now you're partying in Vegas, but it's still a long season. Core's still not close to where they need to be. There's going to be some work to go from here. And given the strength of the consumer and given the massive reduction or easing of financial conditions that happened because of what he said yesterday, I think it makes his job a little bit harder to get to where he needs to be for inflation and the target. So again, our contrarian view is that we think rates actually stay a bit higher, and we're fading a little bit of the pivot party.
See, I don't think he cares really the way that people suggest that he might about, rates have come down a lot over the last month, so that's eased financial conditions. The stock market's rallied a lot. That's eased financial conditions. I don't think he cares about that as much as we might think. And maybe he told us a little bit about that yesterday where, he suggested that the inflation was not caused by, sort of historical standards, not from over-raging demand or anything like that. It was caused from a lot of supply chain disruption. He only cares about inflation. If the economy's normalizing, which is the word that he used, then they'll be able to cut rates for the right reasons, and they're thinking about cutting rates already.
Well, that's 100% the message that he said yesterday, and whether markets follow that route for the next year is really going to be the question. I, for one, think that the mixture of how we got here with massive inflation was both. I think we had a pretty stimulated demand side based on fiscal stimulus that didn't need to happen, and then we had a supply shock that was historic in a lot of ways. And to his point yesterday about the supply side, a lot of that has been taken care of. I mean, you really don't see that in the numbers as far as the supply of goods and services. Labor has pretty strongly rebounded, and we're onshoring a lot of manufacturing. I mean, if you're going to build a battery plant or a chip plant, those are long-lived assets, and that supply is going to be around for a long time. So I guess from that standpoint, it makes sense that he can be a little less worried about a big jump in inflation from here. But on the other side, on this stimulus side, I think he's underplaying the potential fiscal stimulus that we're going to see in 24. Remember, it's an election year, and Biden's approval ratings are horrible. And I think that what they do on that stimulus side could affect inflation and make its job harder. So again, it's going to be an interesting year to see if this pivot that's priced in everywhere we look across risk assets happens. Now, that being said, am I feeling a little more bullish about taking some risk? Sure. I mean, do we see this economy tanking anytime soon in the credit markets? Spreads are certainly not telling you that's the case. Liquidity is not telling you that's the case. So I think it is time to be a little bit more aggressive with risk. But again, we're not talking about buying triple C's or anything like that. I mean, we still want to be in the higher quality part of the markets.
I was going to ask you before I let you go, what is the most attractive thing right now that you see that maybe wasn't as attractive but 2 days ago?
That's a tough question. I think the digestion of what happened yesterday is going to take some time. But one of the things that I keep thinking about is there's a lot of cash that's in money markets, $6 trillion at 5 1/4, 5 3/8, and where does that go? I mean, it's a setup, right? It's how relative is that 5 3/8 versus the other pricing, and after yesterday, across the credit curve, we've had a compression of rates. And so it doesn't look great
Nice job, man.
from a
Yeah, I'm
value
getting ready to use
proposition.
the bathroom. I was
And
just
maybe a
kinda-
lot of that cash just sits
So,
there for
yeah,
a
it's
while
gonna go
until
green, but
we get
I
some
still
sort
feel
of
like at this-
widening in credit
maybe
spreads.
a
We
test
get some
VWAP
sort of
and it'll turn. I don't know
right
what
about
the
the
fuck
rate
to
curve.
do, man.
And then
But
at
that's
that
awesome,
point, I
bro.
think it
That's what's up,
does
man.
kind of move out into higher quality
STTK. I
credit.
should have thought about it
I think,
myself.
and maybe over the near part, the shorter term parts of the curve, which are still at 9-10%. I mean, I think that's still cheap.
Yeah, I'll be right back. I'll use the bathroom and I'll be right back.
And if your outlook for equities from here is 3 or 4% with a 15 vol, why do you do that? I mean, that doesn't make any sense unless you're an uber bull, and none of them are. So I think somewhere in the credit spectrum is where that money eventually ends up. The question is really kind of how much risk that the market wants to take now. High yields at 400 off. Loans are at 500 off. That's probably still cheap in here as far as a rotation from that cash, and I think that will start to happen in Gunlock's case where he's talking on a hard landing. I don't think it goes there and is happy there per se as far as a lot of risk.
Yeah, but it's a $6 trillion question because that's how much money is sitting in money markets. Mark, I appreciate it so very much. We'll talk to you soon. You be well and have a good and happy new year.
Thank you.
All right, that's Mark Okada joining us there, as you can see. Up next, we're looking ahead. Art Cashin, the legend, breaking out his own crystal ball, revealing how he thinks some of the best names in business will use AI and the boom there to their benefit. Those comments after this break. Closing bell, right back. Welcome back. The legend Art Cashin weighing in on the year that was and what he thinks lies ahead for 2024. Bob Pisani here with those details. It's become an annual thing between you and Arthur.
I can't tell you how happy I am to see him. It's one of my favorite days of the year.
I know.
It's my annual holiday get-together with Art. Art was surprisingly bullish on the year ahead, noting that this year's presidential elections with the incumbent in office are often up years because of the spending that's involved. He was also surprisingly bullish on the effects of AI on the economy next year.
I think AI will ultimately prove to be as strong as the invention of the wheel. Everybody concentrates on the chips, but people like Walmart and Amazon, they will use artificial intelligence to find a way of marketing and marketing more directly to their customers. They will anticipate the needs in a more correct manner, and therefore the economy as a whole can grow dramatically if we get past all these other liquidity problems and we let artificial intelligence begin to run full out. We're moving to a different world, Bob. We're moving to a very different world.
This from a man who still uses a flip phone, and he writes his letters in longhand every day and dictates them to his secretary. Now, Art did have some worries about next year, especially about the effects of commercial real estate on bank balance sheets. He talked a lot about that. He talked about the high cost of financing the Treasury debt, and he talked about how this massive December rally could drag in more investors from the sidelines in January and lead to a bubble that could cause a first quarter pullback. It just made the whole year to see Art again. I have been doing this for almost 20 years. By the way, he's going to be here the last day of the year, December 29th. He'll lead everybody singing Wait Till the Sun Shines, Nelly, a 100-year tradition down here, and he doesn't come down on the floor very often.
You get the feeling from talking to him and some of the sound that we didn't have a chance to see that he's surprised that the market had the kind of year it did relative to a tightening cycle, the likes of which, it's historic, and he's seen.
Yeah, it's one of those
he's
days,
seen many
bro,
of these
that
cycles before. I gotta believe he's surprised to some
You had to
degree
be
where
on
we
one
are.
of these names, like large cap names, to the downside and just hang on, or
we didn't do
you just had to
for
be.
various reasons. But I know
Just
how
don't
it
see
felt
anything
throughout most of
happening
the year,
after
that
the
the probability of avoiding
afternoon.
the recession was extremely small.
Maybe
And
opportunity
he
opens
studies
up
market history.
tomorrow.
I learned market
I
history
hope.
by hanging
he's
out with
a
him.
walking stock
And
almanac.
the probability last year, he said, of avoiding a recession is very, very small. And so he was in that cautious camp, and he felt that they had threaded an amazing needle.
All right, that's awesome. We love him. You send him our best, would
will.
you? I know
I
you
will.
will. That's
Talk
Bob
to him
Pisani, of course, with the legend Art Cashin. Up next, Intel holding its AI event today. Star chip analyst Stacy Rascon breaks down his first reaction to all of those announcements, how he thinks it could impact the stock as well. Right after this break. Closing bell back after this.
Who did they say? I should hold on. Nah, that's gonna be too long to remind on my TV. Yeah, it's what I thought he said. I wanted to make sure it wasn't a different company that had like an event day or something. I didn't know they had it. This thing is curling up, man. It's curling up, trying to. This sucks. This really sucks.
Wealth isn't a guarantee, it's a goal. It's easy when markets are going up. But what about when they're not? That's why you need this. Call for Fisher's Retirement Survival Kit, featuring your guide to surviving market volatility. Our stock market.
What time is it? Oh shit, market's getting ready to close. Oh well, one of those days. Alright, I guess I'm gonna get up out of here and see where we close at. I'll throw the indexes up. Looks like they're getting ready to curl over. This is a nice retest on the market. That's a nice retest on the SPY.
See if your dream retirement is on track. If your retirement portfolio is $500,000 or more,
I want to see where the dollar is. Why does it keep moving on me?
This holiday season, Faulkner Automotive is helping to bring hope to the over 80,000 Pennsylvanians diagnosed with cancer each year. For every new vehicle purchased in December, Faulkner will donate $50 to Bringing Hope Home, providing emotional and financial support to local families with cancer.
Yeah, man, you have a great night. I will see you tomorrow. Hopefully we can have a better day tomorrow. Hopefully we get some opportunity. Something should arise. I just got to make sure I'm just going to take it. Tomorrow I'm just going to take some of the things that I like instinctively in my mind. If my mind's like, hey, just throw it on. Even if you get $1 or $2 out of it, you know, keep your expectations low and see what happens. So, yeah, man, I'll be on tomorrow pretty early. I will, going to try and have everything pretty much ready. See what news we wake up to. We have Costco earnings. So there should be a few things, right? Oracle had reported. Adobe, Costco is going to report tonight. So there should be some stuff out there. We'll see. That's right. I forgot about airlines.
Shares of Intel giving up some of its earlier gains after the company announced new AI chips in the works to compete with the likes of NVIDIA and AMD. Let's bring in Bernstein's Stacey Rascon now to discuss. So the stock was up, and it's given a lot back. I'm not sure if you saw our own Christina Partsenevelos, characterize this as kind of a non-event event, and there was like a meh. And even you in your notes, the first words I have from you on my page, Like, okay, expand on that.
Yeah, look, so I think in the wake of AMD's event a week or so ago, people had a little high hopes with it because Intel really was positioning it as an AI event. This was a marketing event to launch their new chips for PCs and servers, is primarily what it was, CPUs. They launched I think they call it Intel Core Ultra, but it's their new Meteor-like parts for ultra-thin notebooks. And they launched their Generation 5 Xeon chips, which is codenamed Emerald Rapids. We knew this was coming. They already said they were launching these parts on December 14th. So there wasn't a lot new beyond that. And then in terms of like the real thing in AI that people care about on the accelerator front, they talked a little bit about Gaudi 2, but I mean, they didn't give us anything new. It's already there. And he sort of said, look, we have Gaudi 3 now. It's out of the fab. We've got a chip that I can hold up in my hand, but it doesn't tell you anything. And we know that part's coming next year anyway. So nobody's really going to get excited about PC chips and server chips, not in this environment. And that's why the stock gave up the gains. It was, what was the word I used? It was fine. Like, there's nothing wrong with it, but it was not as spectacular.
But here's the problem. Here's the problem. Given what NVIDIA has done, and now what AMD itself is doing, and fine aren't good enough, right?
Well, I mean, it depends on what the story is. NVIDIA clearly is in the driver's seat here. If we're going to shift to like real data center, like AI and accelerators and everything else, NVIDIA is clearly in the driver's seat. AMD, at least they've got a roadmap with some products on it, and they were actually able to show them working. Right? Intel's got something called Gaudi. This is a product. They bought a startup a few years ago called Habana Labs. That's where it came from. They've talked about having a $2 billion pipeline, quote unquote, for this. I don't exactly know what that means. They won't say how long is that pipeline for, how much of that pipeline do they expect to actually turn into actual orders. Like we don't know. And I'll be honest, outside of maybe a few industry folks, like the general person on the street, like they don't know what the heck a Gaudi is anyways.
Right. But what about this? Because what about this? Christina emailed me just a second ago pointing out that AMD popped over 15% the day after emphasized its AI announcement, even though there was really no major news there either. Maybe this is just one of those days where tech is underperforming the broader market, so we're reading too much into how a stock is performing in the moments after an event was held.
Well, two things. Number one, I was a little surprised at the degree to which AMD itself popped, like in the day or two after that announcement as well. It was a bit of a delayed reaction, and the magnitude I found surprising. I mean, today, semis are actually outperforming a bit, right? So semis are decent. Intel's up a little bit. It's underperforming the space, and I mean, I guess we'll see what it does over the next, like, you know, a few days and weeks. But again, I just don't think there was anything here that was perceived as surprising or remarkable relative maybe to what we've seen, at least like with AMD on the hope trade or clearly with NVIDIA, just given where their numbers are going. There wasn't anything. This was a CPU event. This was a PC and server CPU event. That's what this was. But that's all it was supposed to be. They never said anything else about it. If you look at their own press releases laying this out, it was to launch these two products. That's what they did.
All right. All right. Well, we appreciate you being with us.
Yeah, you bet. Anytime.
I get you. We'll talk to you soon. Stacey Rascon.
All right.
All right. Up next, we're tracking the biggest movers as we head into the close. The aforementioned Christina Partsinevelos is standing by with that. By the way, thanks for the email during the conversation.
Thank you for reading it, Scott, and the shout out. Let's talk about Moderna and Merck's vaccine for skin cancer showing positive results, and premium travel, a driving force behind two possible airlines. I'll explain next.
Let's do it. Just need volume, man. There's no volume on this damn thing. It's going higher, but the volume's going lower. Like, do we need something different than that? We need something different than that to start happening. It is a nice trade, you know. Maybe it does something after hours. STK, can you do something for me? Come on, do something for us. Back that up. Something. Come on. I don't know. Anything. Maybe if we talk to it. Say, talk to me nice. I promise, listen, if you go up, I will give you half of the profits. I'll split the money with you. Just go run. Just go for a little jog. Go for a little run. This is going to be... This will be nice for tomorrow and after hours. You're going to have that daily candle. It's going to be like a full candle. on the daily chart.
BC.
Yeah, a little bit, but
All right,
I think if people see this on the daily,
well, let's talk about Moderna shares rallying today after positive
going
results from its
to,
new mRNA vaccine that reduces the chance of relapse or
closing.
death
It's
by
not-
skin cancer,
it's
and
not-
they're reducing
it's
it by
not falling
roughly
out of
half.
bed,
So
and
those
that's the
results
important part.
occurring when the experimental cancer drug
You know what I
is
mean?
used with Merck's immunotherapy drug Keytruda, I should say, and so that's why the
$4
stock
to
is
$7.
up 9.5% right
I mean,
now.
it is up a little
and a
bit.
few airlines on the
It's
rise
up,
today after an analyst
you
called
know,
Goldman
damn near
Sachs naming
100%,
United and Delta as its
but
top airline picks for
I don't think
2024.
it's that bad.
Goldman saying that Delta and United's exposure to the quote less
What
recovered
I'm saying is,
Pacific
look at
market
that
gives
daily
them
chart. If you
opportunities
see
for
any,
growth,
if there's
as well,
anybody
a
in this
stronger
thing
premium
that is short,
market. And you can see shares
and they
up
have
over
a
1%,
daily
United up higher
candle
on this
that
too.
closes at the high,
Christina,
and
thanks
you
so much.
don't
Christina
have that
Partsinevelos.
big
Up
ass
next,
wick
countdown to Costco,
where
the
it sells
big box
off,
retailer reporting numbers in OT.
you're going
We'll
to
give you a
8.
rundown of all
It's
the
probably
key
where it's
themes
going
and
to go.
metrics
You could take
that
this
every
thing from
investor needs to know
730
ahead of that. We'll take you
wherever.
inside
Like
the
let's just say
market zone
down
next.
here 650 in this area. It's going to $8. This thing's going to $8. And if you get past $8, say hello to 20. So I might want to get in this thing with you and just buy some for a few days, because it's holding strong right now. I'm gonna love the way that this daily candle closes too. So that's where I'd be. That's where I would be looking to take profits. $8, and then after $8 you don't have anything. You have a little right here at $7.03, but that got bought up, right? $7.98 to $9.35, and after that you have nothing. Look at that, straight down. That's going to be a nice close. I mean, that's just my opinion. I think this is a beautiful close. After hours might get a little froggy. As long as they don't do no offering or something stupid.
The revolutionary weight loss medications everyone is talking about. Get started at ro.co/shop.
I think I'm ready for this. Heck yeah. With E-Trade, you're ready for anything. Marriage, kids, college. Kids moving back in after college. Finally, we can eat. You know you make me wanna. Then we looked around and said, wait a minute, this isn't even our stroller. You live with your parents, or you own a house in the
All right, guys, that's about it. I'll be I'm gonna stay for a little bit just to see what this thing does after hours. I want to see if it can close up here. Look at it holding. 3 minute. It starts to hold here. You're gonna get a couple people like, hey, it's holding. You got some wicks up here. It's a tough area at 7:30, 7:33, but. I don't know. I'll be here for. I'm gonna give this thing a couple minutes and see what she does or doesn't do. It's a double top, bearish divergence. I'm not giving up. Look at those wicks. Unless they do an offering, unless something happens, that daily chart, you can't ignore that daily chart. That's a daily candle closing at the highs.
We're now in the closing bell market zone. CNBC senior markets commentator Mike Santoli here to break down the crucial moments of this trading day. Julia Borston today on possible shakeup at Disney. And Pippa
Well,
Stevens
it failed
here
on
for
its
Costco
first attempt.
Earnings preview. Michael, you first up. This is a
Right,
pretty good
one,
follow-through. I think
two.
you have
That's
to
okay.
say,
It's okay
after
to
a pretty
fail.
strong
Let it
close
pull
yesterday.
back.
Yeah, it is.
If it pulls back, if it goes up and let it pull back, let's grab some liquidity. When it pulls back, you're going to get traders to just buy in, right? They'll set their stops, and if it goes to run, they'll have profit targets. You know, when you're doing something major like that, usually stocks, unless they have news, don't break a major level or moving average the very first time. Usually it's when it has news that catalyst is just too much for the technical analysis.
Julia Borston looking at Disney shares today.
Again, I'm not saying you're wrong. You know what I mean? I'm not saying that like this thing won't fail because we know they could just do an offering after hours, right? And then this thing just is going to go to shit.
After the latest
That's
in
their
the proxy
job.
battle with
At the end of
Trian's
the
Nelson
day.
Peltz this morning. Trian announcing two board nominees.
It's
himself,
just saying it is
Nelson
closing.
Peltz and former Disney
It's closing
executive
at the
duo
highs of
who
the
was
day.
CFO of the company
So that's
between
it's a pretty
2010
good
and 2015.
sign.
Before
Look
that,
at
he
these
ran
wicks.
Disney's Parks division. Trian saying, quote,
You
the
have
root
bearish
cause of Disney's
divergence
underperformance,
too,
in our
like
view,
you
is
say.
a board
It's
that is too
RSI
closely
is
connected
pulling
to a
back,
long-tenured
so it is
CEO and
kinda
too
weak.
disconnected
But
from shareholders' interests.
see.
Disney
Let's see what
responding,
happens.
saying it
The
will review the
RSI ain't
proposed
bad. It's at
nominees
47,
and make a
but-
recommendation to the board, saying it has, quote, an experienced, diverse, and highly qualified board that is focused on the long-term
Let's see
performance
look at time and sell.
of the
Let's see if we
company.
get a bunch
so
of buying
now we're
coming
waiting
in
for
here.
Disney to
I don't
file
think
its
there's enough
slate of
people that know
director
about it
nominees
yet.
and to
No,
set a
you're not
date
getting anything.
for
This thing
shareholder
should be
meeting
screaming.
that's coming up this
Like this
spring.
whole screen
Scott?
should be
All right,
green
Julie,
right
thank
now
you for
in that area if it
Julie
was going to
Borston to
hold.
Pippa Stevens now looking at Costco down a little bit before its earnings
Let me bring
report
up level
in OT.
two.
Yeah, Scott. Well, it's all about their company's earnings call for Costco. So they're one of the few that still release monthly sales reports. And so we already know that their adjusted same-store sales were up 3.9% in the quarter, excluding gas prices. And so the conference call is front and center, specifically around trends Costco sees in the sales environment next year as slowing inflation becomes more of a headwind for revenues. Also, how the retailer views the promotional environment, especially if consumers cut
here.
spending. But perhaps most top of
That's
mind
what
is
they're
the
gonna do right at
membership
the end
fee,
of
which
the- right
Costco
at the end of the
hasn't
bell.
raised
Whoop.
since
Flush
2017.
it.
When asked
Because there
about
wasn't a
raising the
bunch
fee
of-
during the
you
Q4
should have
call,
seen
management
more
said
buying
it was
to
a
come in
question
to hold
of
that.
when, not if, but wouldn't give details. Shares of Costco hitting an all-time high yesterday,
Yeah, it hasn't-
outperforming this
I'll
year.
I'll
Scott,
consider
with
it a flush when it's
39%
below
gain. Back to you.
6.
All right,
If it
good stuff.
closes
Pippa,
below
thank you. We'll be in OT
679,
with those numbers
680.
when they hit. Michael,
I'll
back
consider
to
it
you.
a flush.
About 2.5 minutes before
Because
the
this thing
close.
still hangs out right
So,
here.
273.
You could see this thing start to curl up after
I was
hours.
looking at, actually, I was looking at energy.
Look at
Yeah.
look at all the buyers.
2.73%.
Look
That's
at
what I
look at the
meant to say.
time of
Forgive me.
sales. It's a Christmas tree. It's green as
think
hell.
bond yields went down
This
that
thing's
low just
holding,
yet,
bro. I'm
but go ahead.
telling you.
I wrote down
It just
273
came down
and I
and hit
said
a
it, and
bunch
I was
of
like,
orders
wait a minute,
down
you're
here.
not talking about bond yields. I was like,
I'm
no.
telling you,
Look back, I was
bro.
like, energy
This thing
guy.
might get froggy
Getting
after
that
hours.
Nice boost. Is it lasting? That's going to be fun to watch.
Yes, and I think that you can ask the question about a series of moves, whether it be the laggard sectors like real estate, whether it be, banks up another 4% or something today, small caps up 2.5%. It's obviously winning back chunks of underperformance in a, kind of a twitchy, jumpy market. So you don't want to extrapolate what's happening from here. So it's spreading the wealth away from the huge traditional growth type winners in the index.
gonna keep
It
my
does
eye on
make
this
sense
thing.
from this
Hopefully the
point
bell
on.
isn't
They're
loud
kind of free of macro influences for at
Doesn't
least
blow my
about another
eardrums
week
out.
until
I
you get
noticed that
PCE,
yesterday
and everyone
when
now
the bell
thinks they
rings
know
on
what
here that
PCE
it's super
inflation is
loud,
going
so I
to
tried
look
to
like,
turn it
and maybe it
down.
doesn't matter because the Fed's already tipped its hand. So all that being said, it is really about
Looks like the
year-end
buyers
flows and
run out
rotations
as soon as
and
it goes up
trying
to that
grab the
area.
things
It's like
that
they're-
haven't participated. But as I said before, you just have to be cognizant of the idea that
they're
sometimes
running
this
out.
creates a little bit of instability in the market.
was some massive buying
You've
there.
run a long way, and it would make sense perhaps at some point to take a little more of a step back and assess what's been done over the last month or so.
Yeah, Powell kind of front ran
I don't
PCE
know.
a little bit
I don't
yesterday.
believe so.
To your point,
I think
I'm looking
you
at
do
mega caps,
have
for
some,
example,
but you
where
have
Apple has just gone barely positive.
buyers
so
that are
there's
sitting here
still that dip
underneath
buying
of this level
mentality in those tried and
because
true mega cap
you got a
names.
nice support
Most are
level
doing
right
all right.
here.
I mean,
That's
Microsoft's
a nice
down
support level.
2.25%, but maybe
You're
that's a
wicked
little
in it. They got orders there because what that is, $666, $636. They're going to give this thing 30 cents.
loved, overbelieved
like
stock.
a
in the
break of
Magnificent
VWAP
Seven
would be
and
their
pretty much
probably their
universally
stop
held.
loss,
So all that stuff
if
is
not
just
like
source of
at
fun. I think there's
VWAP.
a way out for the,
So they're
for
going
the
to give it
rest of the
30
market to
cents
do
because they
fine
think that
and
they
not
can get,
necessarily at the pure expense of the big index names. It's all about where the incremental dollar goes. That's the
60.
ideal
I'm just
scenario.
trying to figure out the
Maybe a lot to
psychology
ask
of who
for,
would
but
be
so
long
far,
or
Lester,
not.
we're getting a lot of ideal stuff happening in this market.
Oh yeah, I'm sure there is.
You remember we had this conversation, right?
I was surprised that this.
We're green across the board into OT with Morgan and John.
Yeah, I just can't ignore this daily close. It closed up at highs.
The rally
It closed up
holds.
at highs.
That's the scorecard on Wall Street.
You know what I
But
mean?
winners stay
So
late.
it's
Welcome
not
to
like
Overtime.
there's
I'm
just
John
this
Ford with
huge
Morgan
ass wick
Coming
and it
up on
closed
today's
down
show,
here at $5
Funstress Tom Lee,
or
who has been
$5.50,
riding the
$6
bull
and
train
then a
all year,
long
breaks
ass
down
wick.
the push to new
It's got a little
highs,
wick,
and where
but we'll
he
see
sees
what happens.
markets heading
Maybe give it
next.
2 days. It'll probably, like you say, it'll pull back. Damn, it's above the 50. 100 and 200.
And we will get a good read on the consumer.
I'm just
and the
saying,
housing
man,
space
this thing
when
would be
Costco
really
and
cool. Do you know what the
Lennar
float
results
is on this?
Hour. But first, stocks finishing the day higher again as the Fed-fueled rally
If you know
rolls
what the
on. The Dow
float is,
at a
if it's
fresh
got a
high
decent
today.
float,
Small
I mean,
caps getting another
I could see
big
just like
boost
touching
today.
$8,
And check out the 10-year yield. It's now firmly
right?
below
Just running up
4%.
into
It's been a
there and
huge
then
move
flushing.
lower. Mike Santoli
But it
joins
feels
us now
like they
break
want
it
to try
all
to
down.
get up there
Mike,
because
where
they
to look first?
closed it
I tell you, Morgan,
right at that
sometimes the
support
day
level
after
right
a Fed
there.
meeting, even one
Right?
that creates a
They
strong market
closed it
response, you
right-
sometimes have a little bit of a
right
rethink,
under it, so,
and maybe we overdid
it's
it,
not
and maybe
cool.
we misinterpreted something, and not really today. Today was just more of an extension of the reflex move yesterday in response
I
to
wouldn't-
essentially
I
very
wouldn't
dovish
swing
message,
trade it
one that
either.
confirmed a lot of what the Fed has been saying.
36,
But the
that's a bit
reaction of the bond
high.
market today, almost too dramatic, you might
doesn't
say. You know,
sound
crashing
too
10-year yields
appealing.
below 4%, 2-year
36
really falling
million.
apart, the dollar heading lower in a really sharp way. So all that stuff says the market
Let's see what
was at
happens
least
with
to
it.
some degree a little offsides
If it
versus
pulls
the
back and
level
holds
of perceived
$5
dovishness,
like in the
and
next
it's
2
benefiting
days,
the average
it's hard to
stock
say because
versus
you have the
mega
weekend.
caps that people have
You're
been wanting to
probably
see that
right. It's going to
dynamic happen
just
all year. I
go.
think,
It's
again,
probably not going to do
it's all to the
anything.
good. It all makes sense. It's all rooted in a revised macro.
The reason I just got
fundamental
excited
policy
about
outlook.
it
I
is
just think
because of
sometimes, you know,
the
when
daily
you're at
chart.
the North Pole, every
Like
direction
you
is
can't
south,
not get
when
excited
everything's been
about
going
this
right
because if
and
it
the
does
market has
break,
rewarded it,
and
anything deviation
you know,
from
if
what's
you
already
get
been
above
happening,
this $8,
can be a
$9,
little bit of a setback.
this
Mike,
$8,
far be
$9,
it
you
from
have
me to
nothing
call
stopping
any
you from going to
particular
20.
group of
And
stocks
people would be all
trash,
over it.
But I can't help but note.
Yeah, I
some
know
of
it
the
was
biggest
$2 a
stocks,
couple
you know,
days
your Apple,
ago.
Microsoft,
I know, I
your
seen
Alphabet,
that.
et cetera,
I know.
were flat to
$1.30,
down
I know.
today, and Carvana was up 12%. You know, Vroom was up.
I mean, because it's not like
12%.
people are going to
Peloton
buy
was
it and
up
hold it
almost
for 100%. They're just
sure.
going to
So
try and
essentially,
buy
what
every
was going on for
breakout,
most
take
of this
profits.
year is a
Breakout, take
tremendous
profits.
quality
You know,
premium
and there are
built
going to
up
be
in
some
the
that are
most
going to swing
reliable
trade.
stocks with the
You
best
have all
balance
different
sheets
types
and the
of
best
traders.
futures, you know, by acclamation.
So,
and you know, the low quality stuff,
see if
which
this
was
thing gets
2
vol-
years
there
past
were
its
no-
peak, the
there were
speculative
no,
beneficiaries got trashed. And now the
really-
heavily shorted
really any
stocks,
small
the low
caps
quality,
today.
the unprofitable,
It was
they've
weird
been
to
up a
see.
fair
It was a
bit
weird
since
day.
October, but now you got the afterburners
All
on.
right,
So
I'm
I
going to get
think
up
a
out
lot
of
of it
here.
is
I'll
that
see you
kind of
guys in the
squeeziness, the
morning.
grab
I'll
for
see you in the
beta,
morning.
the way to
I'm
participate.
going to get
And
to
it's
bed
a
early.
feature of all
Try to.
kind of fleeting rallies, but
It's not about when I
also
get to bed. It's
usually
about when I
happens
go to
it's
sleep.
also,
If my
you
cat
know,
doesn't
kind of
wake
a
me
bull
up,
market
or
kicking into a new
last
gear.
night
So
somebody
I
drove
would
by
not
with
say
this
they're gonna be
loud
leading
ass
the way
car,
for
just
long,
screaming.
but it's not weird
That thing
to
was
see
just
them come to
screaming down
life
the road. I'm like, really,
Mike
bro?
Santoli,
It's
we'll hear
fucking
from you again in
1:30.
just a bit. Let's
Like,
bring
come
in our
on.
first guest, and I've been looking forward
And it didn't
to
sound
this.
good either.
Joining us now
Trust
on
me,
set
it didn't
is
sound good.
Tom Lee from Fund
It wasn't like it
Tom,
was
I had to be a little tough on you about a year
something
ago
nice,
because your
you know.
year-end target
I could just
for
tell it was
2022 was way
it was
off
bad.
of where we were, and I was
I
guest
wanted to say
anchoring
it was like
Closing
I wanted
Bell
to say it was like a Honda or something. But I think it was just like
at the
like
time.
a,
And now,
I don't know.
here
I don't
we
know
are
what
again.
it was. I know I could tell that there's just no exhaust on this thing.
And your year-end target is what?
I'll see you tomorrow, bro. Be easy.
That's crazy,
See y'all
Tom.
tomorrow.
That's crazy. How do we get there from